Good morning, ladies and gentlemen. A very warm welcome to all of you on this lovely morning of Friday. The weather in New Delhi, despite it being June, is phenomenal. There is a lot of coolness around, and the best part is that Dalal Street is warming up. Dalal Street is warming up not only in the broader markets, which we already see in good strong traction on the long side, but Nifty and Bank Nifty are also showing signs of strength over the last 2-3 working sessions. As we have known, on Monday, Tuesday and Wednesday, the Nifty opened gap down, and that gap down was purchased into around 23,200 levels. It essentially means that there is good demand for quality equity at 23,200 zone. Now we closed above 23,400 yesterday, and for today there are many sectors and many stocks that are showing strength. Let's look at indices first. There are pending breakouts on the Nifty small cap 250 index as also the micro cap 250 index. They will slowly come to you on your screens, and that, ladies and gentlemen, is a good sign that the rally is broadening. Now let's look at sectors. Apart from the bullish crossover that's happening on indices, which is Nifty small cap 250 and Nifty micro cap 250, amongst the sectors that are showing strong trends, there is consumer durables. That's because of impending heat in the month of June. Therefore, you will see strength in Blue Star, in Voltas. There is strength coming back into India defense. Mid and small cap healthcare are doing extremely well. Consumption in the internet space is again showing signs of bullish crossovers. Within broader sectors, the bigger ones, energy, metals and telecom are in top shape, including electrical vehicles, manufacturing and the auto space. These are the broader, bigger sectors that are showing strength, and the smaller ones, of course, are consumer durables, India defense, MS health and all. Now let's come to individual stocks. Within the Nifty, you will keep an eye out on Coal India and Tata Motors passenger vehicles. These are two stocks that are in strength. Within F&O, let's look at Apollo Hospitals, fresh record high. Let's look at KEI Industries from the electrical transmission distribution space. That's doing really well. From the F&O space, Marico from the FMCG sector is in top shape, and of course, how can I forget liquor company Radico? It's Friday. Amazing charts, very close to a breakout as far as Radico is concerned, and the old favorite Cummins India. So that's the space that we are looking at as far as prices are concerned, and we'll also welcome our dear guest, Mr. Himanshu Gupta has joined in. He's the head of research and retail broking at Jainam Stockbroking. Namaste Himanshu ji, a very warm welcome. How are you observing the Nifty and Bank Nifty after support emerging very strongly at 23,200 as far as Nifty is concerned?
Very good morning to you, Shelji. Thank you very much for the warm welcome. Clearly, as you rightly mentioned, sir, that over last couple of days and weeks, I must say that it has been broader markets that have saved the day for us. While the indices were struggling to make higher highs, it was clearly the small cap, the micro caps of the market that was actually giving the strong breakouts and where the alpha generation was being seen. But thankfully, 23,200 has been saved, and I would like to say so, even in anticipation that the kind of heavy lifting that has been done by the IT sector over past couple of days, when the markets were on the brink of a breakdown, I would like to believe that 23,200 would be saved. And on the higher side, I would be closely watching levels of 23,550, 23,600, as it turns out to be the immediate important level of resistance above which it will be the first confirmation that there is a possibility of a higher highs and a higher lows on the broader index, that is Nifty 50. So with that view, I would be approaching the markets today with a buy on dip strategy. Yesterday we managed to close up around 23,400, 430 zone. I think a dip or even if we start around the yesterday's closing level, it will be a good entry point. On the higher side, 23,550, 23,600 can be a level where some profit booking can be seen. On the lower side, I think a stop loss below 23,280 would be placed for the intraday.
Okay, fair point. Himanshuji, Jainam has a very strong research team. As you very rightly say, the broader markets have been very, very kind to us at a time when both the Nifty and the Bank Nifty were struggling. What are the couple of stocks that the research team has come out with for your ultra HNI clients?
Sure, sir. So clearly, Shalji, we are very, very bullish on pharma as a space. We have been seeing this sector actually leading from the front and turning out to be aggressive rather than a defensive one. So we are recommending a couple of buy recommendations on the not only in the large cap but entire pharma space. To start with, we have a buy on Aurobindo Pharma, which is trading around 1460 odd levels. So I think long positions around in this stock around these levels can be initiated with a stop loss below 1420. And from a short to medium term perspective, I think levels of around 1600 can be seen in Aurobindo Pharma. Secondly, Biocon, after a very long period of consolidation and an underperformance in the markets, we have seen this stock standing tall amidst all the turmoil that we witnessed in the Nifty and even the large cap space. Now, after a very long period of underperformance, this stock is again looking like to give a meaningful breakout from a long period of consolidation. So Biocon around 415, 416 looks a very good buy. Keep a stop loss below 405 on a closing basis. And I think on the short term, 430 to 450 targets can be seen in the Biocon. But nevertheless, we cannot forget to mention one stock, which is a very high beta counter, Vocard Pharma, that has given a 13-year-old breakout recently after the FDA approval for the antibiotic drugs from the US. I think this stock has given a very strong breakout of 1815, 1900 odd levels. So Vocard Pharma is another pick, Shalji, to buy not only from a short-term perspective, but from a medium to long-term perspective, around current levels of 2000, 2050. Targets of 2300 followed by 2500 and a stop loss below 1850 can be placed in Vocard Pharma.
Perfect. Himanshuji, I would agree with you wholeheartedly on Vocard. You very rightly point out that this breakout is a 13-year-old breakout, and this is the Zenith opportunity. Vocard's antibiotic to kill resistant superbugs has been approved by the government of India. Domestic market is very, very conservatively estimated at 150 to 200 crore rupees. And the global market actually is huge. The numbers are mind-boggling. I would rather not say it myself. But a lot of research reports are putting the global market at in the multiples of billions of dollars. How much of that Vocard will be able to capture remains to be seen. But very, very strong show as far as the charts are concerned. And we need to keep an eye out on that one.
Audio nahi aa raha hai mujhe.
We will also get Himanshuji back on the screen. Apparently, there is an audio issue. Meanwhile, let's look at two spaces which are doing intensely well. I'll request the PCR to kindly show us the long-term chart of the Nifty Defense Index. There is strength across the board, and we'd like to focus on lots of good counters that are now showing signs of uptick. For the last 3 days, the defense index has moved from a low of 8,800 all the way up to 9171. Let's get Himanshu back into the conversation. And Himanshuji, we are discussing the defense space. Which are the stocks do you think find mention in terms of strength?
Surely, Shaji. So I would like to agree with you here that over last period of days, it has been the defense as a space which has shown a very strong comeback, and a lot of stocks from this space are actually witnessing strong breakouts on the long-term charts also. So there are a couple of ideas which actually revolve around this defense theme, and yesterday we saw strong breakouts on the drone making companies. Zentech was one stock which actually, after a long period of consolidation, gave a very strong breakout yesterday, and the chart pattern is suggesting the kind of cup and handle formation breakout we have seen in Zentech I think targets of close to 2,200, 2,300 are looking very much achievable over next couple of weeks and months. So I think a long trade in Zentech can be initiated around the current levels, around 1,800 odd levels, with a stop loss below 1,750. And as I mentioned, the stock is actually looking very good. It has been consolidating for a while. And yesterday, a cup and handle formation has actually triggered the next leg of upside here, and targets of 2,200, 2,300 can be seen on this stock. Another stock, Idea Forge, again the similar play in the similar place. However, the circuit limit is only 5%, so I think would be some liquidity issues. But from a longer term perspective, that stock also looks very good. Now, coming back to another space within the sector, I think data patterns is one stock which is looking very good and is still on the verge of a breakout. The stock has been actually consolidating over the last few weeks, but has been limiting very close to its 52-week highs. The stock yesterday closed around 4,200. I think a breakout here looks imminent. Stock can be longs can be initiated around current levels, keeping a stop loss below 4,100. And from a short to medium term perspective, targets of 4,500 followed by 5,200 can be seen here. But Shalji, one stock that has been actually stealing the show here has been Apollo Microsystems, which has been actually a phenomenal outperformer here, and the charts are still looking very strong. The stock is actually run up quite sharply from the lower levels, but the chart pattern is suggesting the kind of volume activity here is being shown. I think this stock has got further length. Stock can be bought around current levels of 419, 415. Keep a stop loss below 400, and short to medium term targets of 450 and 475 can be achieved on Apollo Microsystems as well.
Okay, okay, perfect. Himanshuji, I must compliment you on your stock picking, especially data patterns, strength. Normally we don't discuss this stock, but I'm really delighted to know that the systems at JNM are really good, and they pick out where movements are happening. So, ladies and gentlemen, keep an eye out on data patterns, as also Idea Forge and Zen Technologies. One stock I'd like to take your view on, Himanshuji, is Midhani, better known as Mishra Dhatu. Yesterday, we had a very strong rally that came into the stock, and the price that you see has taken it beyond July 2025 levels. How are you watching Mishra Dhatu Nigam Limited?
Absolutely, Shalji. One stock that is on the verge of a next up move up cycle can be Midhani or Mishra Dhatu, as you rightly mentioned. As a matter of fact, the stock has given a very recent breakout from a downward sloping trend line over last couple of days only. And the kind of volumes that have been started to witness on the charts are suggesting, in fact, that there is much more to come. On a longer term chart, there is an inverted head and shoulder pattern that has broken out on the stock. The stock is trading around 440, 443 odd levels. I think it's a perfect entry point for a short to medium term perspective. Longs can be initiated here. Positional stop losses below 415, 410 levels can be placed. On the upside, immediate resistance is placed around 465, 470 odd levels. But I think the kind of base this stock has formed, I think eventually that will also be taken out, and the stock will be eventually moving towards its all-time high above 540, 550 odd levels in its due course. But a very strong chart formation, a strong base has been formed. Stock has not only broken out from a downward sloping trend line, but is also trading above all its crucial moving averages also.
Okay, perfect. Himanshuji, what a wonderful discussion we are having. I'll also request you to take a look at an all-time high that's hit in the markets, which is Kirloskar Engineering. This is, of course, from the electrical manufacturing space, which is in top shape. I'll request a view on Kirloskar Engineering as well.
Surely, Shalji, the kind of chart is a technical analyst's delight. Yeah, I should say chartists look for all the stocks of these kinds. And I think this has been a space which has actually stolen the show over the last couple of weeks. Stocks related to energy, power, electrical equipment, the stocks have been doing phenomenally well. Despite the fact the stock has given us very strong run up, strong strength is also still witnessed in the stock. So I think any pullback in this stock is a buying opportunity. The stock actually yesterday closed around 1949, 1950 odd levels. I think from a positional perspective, there is no harm even entering at current levels. And of course, any pullbacks, any retracements towards support zones of closer to 1800, 1850 is an opportunity to add to the positions from a positional perspective. The trend, the setup still looks very much positive. I think short to medium term, 2200, 2500 kind of targets looks achievable for Kirloskar engine.
Okay, I'll just take this opportunity to highlight the kind of returns Kirloskar Engineering has given to long-term shareholders. We know it as KOEL in the world of markets, and the returns over the last 10-year period in terms of CAGR are phenomenal. They are driven primarily by very, very strong revenue and sales growth. 28,000 crores is the market capitalization, and each year in the last 10 years, the average CAGR return is 22%. Last 5 years, the CAGR return is 53% each year. Last 3 years, 68%. I'll also take this opportunity to highlight the kind of rally that is driven by very, very strong earnings. Let's look at the fourth quarter numbers. 21% raise in sales, 2,116 crore rupees. This is both year on year as well as sequential rise. And hold your breath for the net profit, 43% higher at 155 crores. So these are multi-baggers that are doing the rounds in the market. Old favorite Himanshuji of everybody, Coal India, what is it telling you?
Shelly, sorry, there was a voice disruption. I couldn't hear you.
Coal India, sir.
Oh, sure. Yeah. So, Shalji, there was something about this chart over last couple of weeks, but it was the OFS that was coming, and that was the reason that stock was not able to take off. But since this episode is over and what an overwhelming response the market got in this thing, I think now with that done and dusted, I think the stock is ready to take off. The stock is already forming a very long base rounding bottom formation. I think levels of 450, 460 offer a very strong support going ahead. For the medium term to short term perspective, I think 500, 520 levels looks very much achievable. So very good start, chart formation, very good stock. I think buy on dips is recommended here. Targets of 500, 520 looks achievable in a short period of time.
Okay. Apart from the stocks that we have discussed, Himanshuji, what is your favorite at this point of time in the world of FNO, as also in the world of Nifty?
So Shalji, as in the starting of the show, I discussed two stocks from the pharma space. Aurobindo Pharma is one stock which is actually giving a very good opportunity. The stock has actually corrected from higher levels. Stock is trading near its 50-day moving average, and I think stock is ready to take off. 1460, 65 is the closing. These levels offer a good entry point at this point of time. Keep a stop loss below 1420. Targets of 1550 and 1580 looks achievable over the next couple of days in Aurobindo Pharma. Shalji, the markets are buzzing with the trades related to data centers, AI. So whatever play we have in India, my next pick is on the cash segment stock with that is NetWeb Technologies. The stock has formed a very, very long base cup and handle formation, and the textbook breakout is happening here. That stock is from a cash segment. 4930 is the level which we saw as a close for NetWeb Technologies yesterday. I think this stock is just gearing up for the next leg of upside. Longs can be initiated in the stock around current levels. An accumulation is recommended till 44,850. Keep a stop loss below 4,700. Targets of 5,200 and 5,500 looks achievable on NetWeb Technologies in a short period of time.
Okay, fair point. Again, a great pick. Himanshuji, a view on Sterlite Technologies and HFCL. Circuit after circuit after circuit. Everybody in the market is very keen to find out. Of course, we don't advise entry at this point of time because it's just too overheated. But let's see what Himanshu's view is.
Shelji, I think, see, if there are two point of views here, I think it's very, very difficult to sit on such a long gains for a retail trader like us. And usually we get out of the rally very soon. So one piece of advice for somebody who is already sitting, having that kind of patience to keep continuing trailing and do not be in a hurry to jump off on a trade which is a life-changing trade in itself. So for that, I think keeping a stop loss below its 20-day moving average can be the best strategy, which is currently placed around 5,500 levels, which is even more than 20% from the current levels. So that's one thing. For fresh trade, I think clearly, Shalji, it's a missed bus now. It's a missed opportunity. One should definitely wait for some cooling off, try to find out some fresh trades, and look for better trades which offer a better risk reward than Sterlite Tech. Coming on to HFCL, I think, Shalji, this stock is still offering a good entry opportunity because even looking at the long-term chart, the stock has actually recently taken out the current high, the highs that the stock made in 2024, which was placed around 170 odd levels. Yesterday's close around 197 is still not far away from that previous supply, which is likely to turn into the next support. So I think any pullback, any retracement toward 170, 175 zone offers a good opportunity to look for fresh longs, keeping a stop loss below 150 on a closing basis. And on the higher side, I think targets on the long-term chart still indicate south of 250, 280 odd levels.
This is turning out to be a great discussion, Himanshuji. What a wonderful thought process you have. How about Cummins India? This is a multi-bagger again, very strong earnings. Trajectory is extremely strong. Again, showing signs of a swing trade.
Absolutely, Shalji, can't agree more. The stock gave a very strong 10% kind of move on the earnings day. Ever since the stock has retraced, and that retracement is very well qualified in all means towards the crucial support levels that the chartesians and the derivative analysts look for. The stock, after making a high of 6,100, gave a pullback toward 5,600, and again gathering some strength to make the higher highs the process. I think one should be looking to enter into this trade on the long side. Levels of 5,700, 5,750 offer a very good entry point for a long positions. Short-term targets remain 6,600, 100. Keep a stop loss below 5,650. One of few stocks which is in F&O segment which are outperforming Nifty by a handful of margin. So very good stock, Shalji, I must say, good stock to go along into.
Okay. Himanshuji, we've discussed the long side of the trade for the last 20 minutes. What looks weak to you? Where is strength dissipating? Where do you think is weakness creeping in further?
Shalji, although by very nature I am not a big fan of short trades, and especially when we have already seen a very long down cycle of 1.5, 2 years of underperformance in Nifty, I am keenly anticipating at least a catch-up trade in Nifty, and short trades might not offer that kind of risk reward. But if you put a gun to my head and ask few short trades, I think few short trades would be the last bull years, last time 2024 bull runs underperformance, which have actually started to deliver a strong underperformance. And to start with, the first stock comes to my mind is Keynes Technology. The stock is actually starting to underperform very strongly now. So any pullback in the stock towards 3,400, 3,500 to me looks like a shorting opportunity. Where I think on the downside, even 2,800, 2,700 kind of levels. A similar stock, Dixon Tech, again hero of the last bull run, struggling to get a strength. So here again, sell on rise kind of trades we are witnessing here. So these are two stocks which to me looks like losing the steam going ahead.
You mentioned, okay, Dixon and Keynes, both from the EMS space. Fair point. And people have made supernormal money. You can easily watch from mutual fund data that many funds have booked profit and exited this space. Time draws to a close, Himanshuji. Before I bid you goodbye, a view that you might have on the small cap index, the Nifty small cap 100 index.
Sure, Shalji. In fact, as we started our discussion, that it's the basically the micro cap and the small cap index which have actually done the heavy lifting for the markets and kind of offered the kind of alpha not only to the mutual funds, to the PMS and to the HNI's portfolio. It's the small cap and the micro caps of the markets that have actually saved. My sense is that the kind of outperformance this both these indices, Nifty small cap and the micro caps, have been offering, this is this has a long way to go. And once we get a confirmation on the Nifty, get a closing above 24,000. I think even more strength will be seen on these spaces. So this is a space which one should be eyeing after a healthy correction from 2024 when the markets were looking kind of frothy. I think this is a high time to increase the allocation to the small caps and the micro caps to generate that extra alpha.
Okay. Final view, Himanshu ji, will Diwali be better than June?
Shelly, sorry, I again missed.
Okay. I'm saying a final view, will Diwali be better than the month of June? Could you hear me?
No, sir, my apologies.
Okay, koi nahi. I'll try and get the PCR to check the connections. PCR, can you please check? Just a moment. I was just trying to ask from Himanshu ji if Diwali would be better than our month of June. Let's see if we can get him back. But 3 minutes left for trade and 3 minutes left for pre-open to come up. We are looking at a good day. A 50-60 point uptick on the Nifty via the GIFT Nifty is what are cues that are coming in. Oil has come down. There is profit booking across Asia, which is good for us. And of course, there are bullish crossovers in the broader markets across the board. The Nifty small cap 250 index is showing strength. You have the Nifty micro cap 250 in strength. Himanshu ji, I was asking, will Diwali be better than June for Nifty?
Definitely, Shalji, if I heard you correctly, you were asking this month better than the May month for Nifty. Is that so?
No. I am asking, will Diwali be better than the month of June?
Absolutely,
will the markets
Shalji.
rise by Diwali?
Absolutely, Shalji, absolutely. There is so much pent up demand, so much pessimism already into the markets. We are grossly underperforming all the major markets in the world. And I think all it takes is maybe a small kind of announcements from the governments. The earnings are very strong. The mid cap, small caps earnings have been very good. I think definitely, if even if the large caps do not give the kind of returns that we expect, it will be the small caps and the mid caps which are likely to make this Diwali wonderful for every investor.
Perfect. On that note, we'll bid you goodbye, Himanshu ji. What a pleasure it has been over the last 25 minutes to discuss the markets. Truly an excellent pick on stocks and an excellent command on charts as well as technicals. Thank you for your time. So, ladies and gentlemen, let's wait for the pre-open to come up. As I was saying, today's structure is really good. You have a gap up on the GIFT Nifty. We've strengthened 23,200 on the option side as far as the Nifty is concerned. Monday, Tuesday, Wednesday, there was a gap down and each gap down was purchased into. So, there's demand there. Now, broader markets are showing signs of further strength. More breakouts are happening on larger indices, 200, 250 on the micro cap and the mid cap, small cap index as well. We have the market now clicking. Nifty is opening 19 points higher. Let's look at the most active counters. Tejas Networks. Strength continues, 2% higher. This was the third most active traded counter on the markets yesterday, 614. Let's look at what's pulling the Nifty up. ICICI Bank and Reliance, this is good. SBI is in the green. Infosys is in the green. So out of the top 6 heaviest weighted counters, which is ICICI Bank, Reliance, Infosys, SBI, these 4 are in the green. What is weak is HDFC Bank 0.5% higher, lower. Nothing to be worried about. MCX and BSE, these are high beta counters, you need to keep track of them. Let's look at top gainers. AIA Engineering, I've been marking this stock for a while. Torrent Power, 3.5% higher. Sempro, 4% higher. Let's look at FNO. Max Financial Services is 3.5% higher. Oro Pharma is something that we just had a view coming in from Himanshu. Strength here 3% higher, 1509. Coforge HAL also in the green. This is how it is as far as markets are concerned. Very early to look at advanced decline, nothing to be worried about. Let's look at most active counters in FNO, anything worthwhile. Oops, Wipro futures have slipped. I'm sure this will correct for the better. TCS 1.29% higher. So ladies and gentlemen, it's going to be a good day. The reason why I say this is that within heavyweights, Reliance, ICICI, Infosys are in the green. IT was weak yesterday. It's showing signs of coming back. That's really, really good news for the markets, and that's good news for the broader structure as well. Banks are firing up. IT is firing up. That should bring in good cheer. Let's look at strength as far as weakness is concerned. Okay, nothing to be worried about. Bank of Baroda 2% lower, 265. I don't think so this will happen, but let's get back to NSE 500 and let's look at weaknesses. Policy Bazaar, okay, 1535, nothing to be worried about. RHI Magnesia Limited, 5% lower, nothing to be worried about. Soba Developers, this is in the green, 2.8% higher, 1377. So that's the state of play, ladies and gentlemen. What we'll do is we'll take a quick break and be back with you shortly. It's the market that we are looking forward to, and of course RBI's credit policy. Thank you.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
Sri Ravi Shankar is with us, with the Indian diaspora, also in Russia. Huge opportunities, sir. Message of peace going around with the world and the war going on, sir. What's your ultimate motive to come here?
Message of peace, and then the Russia and India are
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can file. Well said! Well said! Well said! SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good morning, dear viewers. You're watching the Business Today show with me, Sakshi Batra. This is where I get you all the opening action on Dalal Street. First up, let's take a look at what's hot in the corporate and the financial world. Countdown to big economy numbers. GDP growth for FY26 and January to March to be announced this evening. Analysts also expect the economy to have grown 7.5% last year. RBI to announce the interest rate decisions in just an hour from now. Donald Trump blows hot and cold on India 2 days after threatening additional tariffs. The US president now says the two countries will strike a trade deal soon because he likes Prime Minister Modi a lot, and he also claims US is making a lot of money with India. Indigo tightens its belt as Iran war hits its finances, stops flights on 6 international routes from next month. Hong Kong, Shanghai are off its route map, and so are Langkawi, Krabi, Ho Chi Minh and Siem Reap. Big sign of gold losing its luster with investors. Gold ETF logged their first ever net outflow in 12 months in the month of May. Data from the World Gold Council shows outflows of $61 million. The rise in import duties could be a key reason. Wall Street ends mixed with Dow hitting fresh record highs. The Nasdaq slipping on tech weakness. Oil drops 3% now to trade at $95 a barrel after reports indicate Trump is reluctant to restart the Iran conflict as ceasefire holds, and Asia stocks slide ahead of the US jobs data. Straight away, looking at the big breaking in terms of the currency, the rupee opens 8 paisa higher. The rupee is trading at 95.71 against the dollar, as against 95.79 per dollar in the last evening's trade as well. So what you could see is that there is some strength that the rupee is looking at gaining yet another day for the second day in a row. 95.71 now per dollar as against 95.79 per dollar as it shut shop with yesterday. But let's look at how the markets are shaping up in the session today. We're already looking at the markets now settled. 23,478 is what we could be opening with, about 62 points higher as far as the current pre-open trade is settling in the session. We also have a lot of indications that we will be looking at. The financial names will be in focus. Banks' financial names ahead of the RBI's decision on the rate front is something that we will be watching out for. But also let's shift focus even as the 3-day trade talk between India and the US have ended yesterday. It's the United States president that has indicated that a bilateral trade agreement could be soon signed. Speaking to the media on Thursday, Donald Trump has said while India has taken advantage of the US for years, charging tremendous tariffs, a trade deal would be signed soon because Prime Minister Modi was his good friend. Also, the comments come a day after US has threatened India and 59 other countries with additional tariffs. Let's listen in.
India for years took advantage of this country. They charged us tremendous tariffs and they paid nothing. They wouldn't let Harley, as an example in the past, they wouldn't let Harley Davidson sell its motor. They would charge 200% tariff. So Harley Davidson was precluded. They ended up going to India and building their own plants, which is unfortunate that that happened, but that happens. That was before me. But they charged tremendous amounts of tariffs to our company, and we didn't charge them anything. You know, they sold motorbikes here too. You know, we charged them nothing. And now it's the exact reverse. and we're making a lot of money with India. But we'll get to a deal, because I like your Prime Minister a lot. He's a good friend of mine. Get along great, and we're going to make a deal. We have a very good relationship.
So there, President of the United States reiterating that he likes Prime Minister Modi quite a lot and he's hopeful of a trade deal being signed soon. We'll come back to the trade talks, but another breaking news on your screens, and with this is the precious metals in focus now. They're under pressure. You can see MCX gold tumbling about 1100 rupees and have slipped to 1.58 lakh rupees per 10 grams today. We've also seen MCX silver crashing by 4,000 rupees in the intraday session today, now to trade at 2.61 lakh rupees a kilo as well. Both gold and silver prices have opened under pressure at this point in time. We'll see how things really progress from here on gold and silver front as well. But let's now welcome our market experts. So we have Shail Bhatnagar, our in-house expert, and Gaurav Sharma, Associate Vice President, Head of Research, Globe Capital, also joining in on the program. Good morning to both of you, and thank you so much for taking the time out. Straight away coming to you first, Shail. The markets have settled. What is on your radar today?
Sakshi, and a warm welcome to Gaurav as well. The rupee is strong. The Nifty is opening 62 points higher. Sakshi, the rally is broadening. You have very strong breakouts coming into the micro cap 250 index, the small cap 250 index, and there is strength across the board. If you look at the defense pack, if you look at how money is moving into mid and small healthcare, and of course the consumption theme. So rally is showing strength. There is improvement in the breadth of Nifty and Bank Nifty. Yeah. Possibly you will have a strong close as far as Nifty is concerned today. I'm hoping we'll close above 23,500, Sakshi.
All right. We also have Karishma Sudani joining in, my colleague, who's going to be talking about what exactly can we expect as far as India and the US are concerned in terms of how they move forward a step closer to an interim deal after 3 days of talks in New Delhi. Both the sides have called discussions constructive with only a few issues now left to be resolved. Karishma, what is the kind of progress that we are seeing? How soon can we expect this trade deal to happen? It's been hanging over for quite a bit of time now.
Sakshi, while the government is really optimistic on this and they've in fact released an official statement, I will still say that we will not jump the gun in celebrating it this early because don't forget this was not a negotiation round. This was just another bilateral conversation that they had. The last negotiation round that we had with them was about, say, 8 to 9 months in the history before the whole tariff situation was played. So it's a long time since the negotiations have happened. Secondly is yet another new statement coming in from the US President Donald Trump. I'd say it's been a balanced statement, though it started with a very lopsided note where he mentioned of the fact that India has been unfair to the US in charging a lot of tariff when it comes to trade, and this is the time where now the US wants to make money off India. But he also concludes it saying that Prime Minister Modi is a great friend and they're going to have a good collaboration, a good trade deal pertaining to this. So, well, let's wait and watch if things will work out. A lot of issues, especially from USTR, that need to be solved. Let's hope they've been discussed well in this meeting.
Right, let's straight away go across to Gaurav, our guest of the day. Gaurav, we're finally seeing some signs getting, as far as closer to the US-India trade deal is concerned. But has that already been priced in for some matter in terms of the markets, or will we see a sharp rebound right when the trade deal is sealed?
Actually, very good morning to you, very good morning, Shailji, and to all the viewers of India Today Television. So, see, there have been a lot of talks around the India-US trade deal, a lot of comments coming in from both the parts. I firmly believe, and I'm of the opinion that till it is finally inked and we have the black and white paper with us, whatever we listen and talk about is pure speculation. So let us wait for that final figures to actually come in, and then I think it will be more prudent to take a call upon. Frankly, if a personal opinion is being taken, I am not expecting it to be a very, sweet and sound as far as Indian part is concerned. The
Right.
US is negotiating very hard, and our economic position is not in a position to put forward strongly our position. So
Okay,
I'll still
Gaurav,
keep the
we'll
fingers
shift
crossed.
focus to the markets. They've opened in the green. We did see the sign of 23,500 on the Nifty as well. Right now, about 60 points higher at 23,469. We're also looking at the Nifty Bank opening higher, the broader markets opening up. But look at the IT stocks. They have spurted higher. You can see about a 0.9% uptick coming in on the IT stocks, now 1% higher after some positive move that has come in after some days of declining that we've seen on the IT space. Let's also look at what's happening on the other sectors. Autos have moved up as well, about 0.5% higher. You're also looking at the pharma space that's higher in the session today. I think all the sectors are showing us some strength right in the morning trade, and that's what Shell was also pointing out, that the trend is broadening as far as the market move is concerned. Barring metals, I think that's where some softness is emerging at this point in time. Shell, what are you watching out for right at the open of the trade?
Well, Sakshi, I think we'll let metals rest a bit. They are the ones that have held the market together over the last 6 months or so, actually more than 1 year. So a little bit of profit booking on that is not a problem. Well, it started well on the market. Advanced decline is 3:1, 1,600 shares in the green versus 500 in the red. You and I track 19 indices, 18 are in the green, and the rally is led by the realty and the next 50. You're right, the markets are broadening. I'll just point out the record highs in the market. Apar Industries from the electrical T&D space, Acme Solar 351, CP Plus from the hardware part of the world, CG Power, Loris Labs, and Sempro. Sempro is the earlier ITD cementation. So these are the stocks that have hit record highs in the market. And in terms of top gainers, well, let's celebrate the rally that we are seeing in NLC India, 1.8% higher. The Adani Group, Adani Enterprises, and Adani Energy Solutions, and Adani Power. Sakshi.
All right, Gaurav, coming to you, what are you watching out for in this recovery in the markets that we are seeing? And do you see this recovery extending, or will there be further impediments there?
Actually, it will. These are very important times, especially today and Monday, because U.S. trade deal announcement is due. The rate announcement will also be coming up today, so it'll be a volatile trade. What surprises me, especially today, is auto index trading higher, reasonably higher, 0.7% by the open. It is a clear-cut rate-sensitive sector. This gives us a sense and strengthens our viewpoint that a status quo is quite likely, which I am personally, as a house, expecting. IT is clearly taking the baton higher, and that is something we have observed. Whenever the US-India trade talks get closer to a conclusion, IT starts performing. And why not so? They drive most of their revenue from the US and the Western world.
Absolutely. Let's also discuss the financials and what do you expect from the upcoming RBI policy today. Gaurav, what will the markets be watching out for? At 10 a.m. is when we expect the governor to make the statements there.
Actually, the things are not really optimistic. But as of now, in this particular monetary policy, we are not expecting any rate hike here. It would be a pause. The stance would be probably revised. And in the forthcoming policies, if inflation gets out of the RBI's comfort zone, then probably we would be expecting a rate hike. And I think a rate hike would come in the maybe next or the next to next policies, because inflation figures are clearly suggesting that it will be difficult. They are primarily driven by a steep rise in fuel, power, and staple prices. El Nino effect, lesser monsoon will also inflate our fruits and vegetable prices. Staple prices will further rise going ahead. Therefore, it will be difficult for the government to contain inflation. Fuel prices are nowhere settling down anytime soon. So therefore, all these things are clear indication that a rate hike is just around the corner, may not today, but it will certainly come tomorrow.
Okay, let's also focus on Rajesh Exports yet again. Remember, viewers, we had shared with you yesterday about what SEBI's allegations were on Rajesh Exports, how SEBI's interim order has talked about 99% of misrepresentation of the revenues over the last 5 fiscal years that Rajesh Exports has done. Even though the company came out with a statement and has dismissed those allegations by SEBI, declaring that the revenues are correct, yet again we are seeing a 5% decline, and a lower circuit for the second day in a row on Rajesh Exports today. So keep an eye. The developments continue. The company says that they have not done anything wrong, and there is a miscommunication or a communication gap between the SEBI and the company, which they will clear up. But the SEBI interim order of 109 pages definitely points out to a big mismatch in terms of the declaration of the revenues there. So we'll keep an eye out on Rajesh Exports through the course of the session and the coming days as well. But let's shift focus to the global aspect as well. Once again, as global geopolitical equations continue to evolve, Russian President Vladimir Putin has strongly backed India's independent foreign policy and has criticized US efforts to pressure New Delhi into scaling back its ties with Moscow. Putin has said attempts by the US to influence Prime Minister Narendra Modi and India's cooperation with Russia have yielded no results, while expressing confidence that bilateral trade between the two countries could touch $100 billion in the coming years. Let's listen in.
Is developing its relations with all the countries. It's a great country, 1.5 billion people, a large economy, the largest democracy. As many people say, of course, it is only natural that it develops its economy in accordance with its interests, with those countries that it deems necessary. Another thing is that the US are trying to put pressure on India in some matters, for example, when it comes to cooperation with Russia on some tracks, but everyone has understood that putting pressure on Narendra Modi, that has the largest population in the world, is detrimental for international relations.
Gaurav, coming to you, how would you read those statements, in a bid to appeal to the US? Are there concerns that our decades-old friends might just face some kind of a tiff with the country? Is that a risk that we are taking at this point?
I think these are some things that have been long-standing here. US have been emphasizing towards India taking on defense deals, but India is constantly refraining and giving up out contracts to countries like Russia, which have been a continued defense partner, and France. So somewhere or the other, President Trump have been trying to get hold on this front as well, because this is actually the largest industry of the world.
Absolutely. Shell, coming to you, what more is coming on your radar as we move forward? The markets are still holding on to 23,450 odd levels. Any key sectors or stocks that come onto the radar?
Sakshi, pharma. Look at Laurus Labs, look at Biocon. That's a space that we've been tracking. Laurus Labs, of course, fresh record high. Biocon, a good swing trade in the making. You have strength across the board on Lupin. And two market favorites are back on the long side, actually three. MCX, BSE, and Angel One. So that's the state of play as far as markets are concerned. It's looking good. All indices are in the green. Friday should end on a strong note. And in terms of volume buzzers, you have First Cry, 4.3% higher, Go Digit, 9% higher. You have Shipping Corporation, 5.3% higher, and you have HFCL, a bit of a profit booking. So it's all good for the moment. Mid caps, small caps rallying, and the broader advanced decline ratio improving. Sakshi.
Absolutely. All right, Gaurav, to you then. Any key stocks or sectors coming fresh on your radar? How are you looking at the big pharma move that everybody's been tracking closely? Are you confident that there is enough and more opportunity to build money there?
Absolutely, Sakshi. Pharma is again one space that is directly US impacted. dollar benefits them. So a declining rupee is a positive for this particular segment as well. We are having a very clear stock-specific approach on pharma. Stocks like Aurobindo Pharma, Torrent Pharma, Divis Lab are among the preferred of the pack. Apart from this, yes, certain names from the auto pack also encourages us, citing the continued jubilation and the pace of monthly sales figures that's fee, and it will eventually be culminated into quarterly numbers. So stocks like Mahindra and Mahindra continue to remain our preferred stock. Hero Motoco from the two-wheeler space also excites us. So apart from this, Olectra Green Tech and JBM Auto, a clear-cut beneficiary of the green policy which government of India is emphasizing.
Right.
Government of Delhi have already announced their green policy. That gives us a clear picture that what is there in the mind of the government, and it is clearly favoring the companies and the businesses indulged in renewable energy. So energy remains a clear pack. Previously, in the 5-10 years, it was infra that was actually ruling the roost. I think going forward, it will be clean and renewable energy which will be on the focus. So any kind of business, whether it is companies indulged in manufacturing simple panels or dissemination, charging points, may it be auto ancillary space related to battery manufacturing or anything related to this, will be a clear beneficiary going ahead. So from a long-term perspective, I think this is a must to have in a portfolio.
All right, fantastic. Thank you so much, Gaurav, for being with us on the show, and thank you so much, Shell, for highlighting all those big buzzers. We'll keep an eye out on them through the course of the trading session today. It's time to wrap up the Business Today show right here. We'll take a break, and India Today will continue its coverage on the general news. But stay tuned at 3 p.m. as well, as I will be back for the closing edition of Business Today to get you all the closing action on Dalal Street. Thank you so much for watching.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Good morning, ladies and gentlemen. It's turning out to be a fairly decent start on Dalal Street this Friday. The Nifty is in the green, 36 points higher. Across the board, you have strength coming in. Let's first look at the pullers and draggers. You have ICICI Bank contributing 13 points to Nifty's uptick. M&M from the auto space contributing 7. Bajaj Finance, Infosys, Tech Mahindra and L&T are the other winners on the Nifty. What's pulling it down is Reliance amongst the heavyweights. The others are fairly okayish. Wipro has had a breakdown, 4.4% lower. That's what the charts are telling us. Let's look at stocks on the volume side. Okay, Adani Enterprises, 2 percentage points higher, 3,036. I think it's coming into the 3,000 rupee range after a very, very long time. Let's look at the long-term chart of Adani Enterprises, and you will see, yes. So this price was last seen in October of 2024. A huge rally that we are witnessing for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. On 30th of March, which was the end of the financial year, Adani Enterprises was at 1860. That's the bottom that you see. And today, in a span of 9 weeks, it's at 3030. Very sharp rally coming onto this one. Let's look at the other winners that are moving in strength. Amongst the top gainers are railway company RITES, 6% higher. You have Schneider Electric reversing a previous downfall, 3.6% higher. Shipping Corporation of India, 3.4% higher. Cohance from the pharma space, 2.9% higher. And of course, you have Emcure Pharma, you have Latent View Technologies, and of course, strength coming into Phoenix Limited, which is a real estate play. Oberoi Realty, again a real estate play, 1647, a percent higher. Phoenix is 2.15% higher. And a small but well-known company, Samman Capital. There is a very, very strong breakout that's happened on Samman. Let's take a chart here, and very, very strong breakout. Third week of gains, what you see is 180. You've seen this last in November of 2025. Ladies and gentlemen, it gives me immense pleasure to welcome Mr. Manish Sonthalia, Director and Chief Investment Officer at MK Investment Managers. Manish ji is a very, very long-term viewer of the market, has been on Dalal Street for the last 3.5 decades, and has worked immensely well to create long-term wealth for his clients. Namaste Manish ji, equal pleasure and a very warm welcome.
Good morning, Shelly.
कैसे हैं आप?
बढ़िया बढ़िया, all good. How are you?
All well. Market भी बढ़िया है या नहीं?
Yeah, मतलब the whole point is कि बहुत ज़्यादा downside नहीं दिखता है. You know, we are not yet over with the Middle East, final signing at the dotted line in terms of, ceasefire and settlement. But we are somewhere very close to the bottom. लगता नहीं है कि, it will just break down because all the negative news that India could have had is already there. And if we have any sliver of a positive news, we shall see a very strong pullback. And today, in spite of all the worries that we have, Indian markets are being resilient. So in that backdrop, I think there is very little downside and a lot of upside, that is possible from here.
Manishi, how have you and your research team analyzed the Q4 earnings that just went by? What were the green shoots that you saw, and what do you think are troubling points still?
So, as against expectations, the numbers for the fourth quarter has been slightly better than estimates, is what I can make out. If you look at the Nifty 50, that was the biggest disappointment at around 4 to 5% sort of an earnings growth on a YOY basis. Nifty 100, which is the Nifty 50 next, did the heavy lifting in the large caps, and the earnings growth for Nifty 100 was around 12%. And as far as the mid-cap segment is concerned, that saw the biggest growth in earnings, which was north of around 50%. We computed that at around 51%. And the small cap space actually saw an earnings growth of around 14%. So this is how the earnings have shaped up across the market caps in the fourth quarter. Of course, in the backdrop of the Middle Eastern war having started on 1st of March, 28th of February, 1st of March, the full-blown impact of the negativities around the Middle East strike would be seen in the first quarter. But suffice it to say that the fourth quarter numbers have been pretty decent. And if we take a base case scenario that let's say the Middle Eastern crisis will get over quite soon, then obviously this one-off impact that we are likely to see in the first quarter could be taken as a one-off, and markets would still be posting around 13 to 14% earnings growth for Nifty 50. But if this gets prolonged, and there's a small probability of that even happening till it is signed, you could see bigger impact on Nifty earnings for FY27. So all fingers crossed. Today, the base case scenario is 13 to 14% earnings growth for FY27, even in the backdrop of the Middle Eastern crisis, with the assumption that this crisis is going to end very soon.
Okay. Let's take that assumption forward, and this crisis is going to ease out. Already you have similar remarks coming out from the White House, and oil is also slipping down. Manishji, what will this mean for the Nifty? If Q1 is showing signs of weakness, do you think the market should react adversely when those numbers come in July?
No, because
We are about 1
no,
month away.
See, the assumption is that if it is signed before 30th of June and results start to come from, let's say, 14th of July or 12th of July, then this aberration in Q1 numbers will be taken as a one-off, because the rest of the 3 quarters will be continuity in the, the earnings projection, because oil is likely to come down from where we are, north of 100, and that is going to have a repercussion on the macros per se. So I think by 30th of June, it is very, very important that this Middle Eastern crisis should come down. And in that backdrop, if we work with the number of continuity and the numbers for EPS and Nifty 50 comes to around 1250, and I think 20 times multiples on the Nifty 50 is sustainable with the 13%, 14% sort of a growth. So I think 25,000 is a fair scenario to look at from the continuity of earnings point of view. So I think range bound markets 22,000 to 25,000 till we have final signing on the dotted line comes.
Fair point. This is a very sensible and practical way of looking at things based totally on data. Now, Manishji, tell us, based on this Q4, how has MK changed its, maybe its model portfolio or its views that it offers to its ultra HNI clients? What have been the major changes on the positive side, and what have you given away in the sense of stocks being added or removed?
So we are on the buy side. We are a part of MK Investment Managers, part of alternate investment funds. We manage public money on a discretionary basis. I think the key highlight of the fourth quarter actionables in our portfolio is that there has been a very strong case against IT services, because IT services in the backdrop of the AI disruption, the allocations have come down. So we have also truncated our allocations in IT services from being overweight previously to being underweight currently. At best an equal weight in some portfolios, but broadly an underweight position. That is one change that we have made. And I think financials, we had an overweight. Pharma, we are trying to become slightly overweight. We are maintaining a quite positive stance. And given the fact that pharma had been a drag over the last 2-3 quarters, this sort of a positioning is going to help us in the future. This is what we think. And broadly, other sectors have by and large remained unchanged. We have added a few new age companies in our portfolio, but otherwise things are status quo. We are looking at a few names in the energy sector and a few names in the defense space, particularly the drone space.
Yes. Manishji, as an overall number within MK Investment Managers, what is the number of stocks that you hold, and what is the bias in terms of market capitalization? Are you tilted towards mids and smalls, or are you focusing on large?
No, so number of stocks is basically limited to 30 stocks. We really don't want to buy more than 30 stocks in the portfolio. So, some portfolios even have further concentration than this. We would have 15, 16 stocks also in some portfolios, but we maintain concentrated portfolios, and the mandates of the fund is basically we have very limited number of funds. We have a large cap biased fund, we have a multi-cap, we have a small and mid cap, and we have a thematic. So these are the 4 major products we have, which is straddling the entire market, but the mandates are different for each fund. So it's not that there is one single fund catering to all the requirements. Each specific fund has its own mandate. So we are positioned across market.
Okay, so let me just try and understand it again. You have an exposure to 30 stocks. You have reduced your weightage to IT. You have brought it up in pharma. That's correct?
Yes.
Okay, perfect. Now, defense also, you mentioned, especially the drone makers, they like, you've shown attachment to that?
We waiting for some announcements to come through. We have some stocks on the radar, but not yet pulled the trigger. But let's see when this whole developments around the 20,000 crore order come through for the drone manufacturers. If that comes through, we have few names in mind. We could have a look at that.
Mm-hmm. A view that you might have on the rupee, is the worst over?
It's undervalued for sure, even considering the fact that we are looking at oil at around 104 on the Brent. Considering all of that, I think the fair value of the rupee should be between 90 and 92 and not where we are. So yes, the rupee is undervalued. And should this Middle Eastern crisis come through, then this 2% current account deficit is par the course as far as normalization is concerned. It's not an alarming situation, this 2% CAD, but this should not get prolonged. And beyond 2% CAD is a problem for us. We'll have repercussions on the balance of payments. Gross FDI numbers for fiscal 26 has been quite good. It's the net FDI numbers that are a negative because we have a lot of PE funds and FI exits that have taken a toll on the net FDI number, but gross FDI numbers at $95 billion is pretty decent. So yes, I think everything hinges on when we see an end to this whole crisis.
Within the group of 30 stocks which you have as an overall representative theme, how many are pharma shares?
We have a decent number of pharma shares. It depends on each portfolio, but we have straddled across export generics, the larger ones, export generics having exposure to specialties. We are heavily positioned towards CDMO space, quite a few names, prominent ones. That is where we are, and a few domestic pharma companies as well.
Okay, fair point. When we look at the broader trajectory of the market, Manishji, because you work at a blue chip brokerage, a lot of clients would also have overseas exposure. How are you looking at, the rallies that are happening in Seoul, in Tokyo, in Taipei? They're draining away money from us. Are we at an inflection point as far as those markets are concerned? Too much of rallies there and abject underperformance at our end. What does your gut say?
So basically, this whole AI thing, the three major companies coming out with an IPO, $1 trillion each, OpenAI, Anthropic, and SpaceX. 12th of June will be, I think, around the SpaceX $1 trillion IPO. A lot of the artificial intelligence success or failure will depend on the success or failure of each of these IPOs. And in that backdrop, as long as the AI theme continues, you have the requirement for chips, you have the requirement for memories and DRAMs and all of that. And obviously, the South Korean economy is a play on the memory space. The chip space already seeing some sort of exertion in the United States. We saw very sharp falls in the chips space. Some allude to the fact that, the data, the AI narrative may be slowing down, but all of that is basically business in continuity. Success or failure of each of these large $1 trillion IPOs will mean a problem or a success. As far as our understanding about the global markets are concerned, we think that it's best to position yourself in the eastern part of Asian markets, so the South Korean markets or the Chinese markets are better placed than the US markets, where the concentration risk in the Magnificent Seven or the top 10 stocks, particularly catering to the AI space, is fully valued or maybe bordering on the froth zone. So in that backdrop, we should likely be cautious on the US space, but otherwise, Southeast Asia looks okay.
Mm-hmm. Okay. Indian macro was something to be really, really proud of till about, January. Now we are seeing signs of cracks, foreign reserves are depleting very sharply. Rupee, as you mentioned, has depreciated. CAD is rising. All sorts of problems are coming in. Till what point of time do you think this macro will deteriorate?
So I think the crux is basically the solution to the Middle Eastern crisis. Our vulnerabilities stand around energy. This Strait of Hormuz blockade has actually exposed energy security of India very, very badly. This Strait of Hormuz as a choke point could be leveraged to India's disadvantage even in the future. So I think that is the whole focus, that India should try and become more self-sufficient in energy, whether renewables, whether development or oil exploration blocks in and around the Andaman, and wind and battery energy storage, all of that. We need to get our energy security right. And our vulnerabilities basically stem from that front. And we should accelerate our AI play very, very sharply. We have behind the curve in our AI play. The second layer of AI usage is where India is banking on. The first layer of AI is basically owned by the US giants, the large language models, etc. That is their proprietary. But when it becomes open source, we will, like in any other technology revolution, we wrap around that new technology and make use cases. That is also likely to be the case. So this is the transition period. We should basically try to bridge this loophole in terms of higher energy and lower exports of IT. This is basically the conundrum which is playing on India macros, on the balance of payment, the fiscal deficit, the current account deficit, etc.
Okay, perfect. Apart from IT, Manishi, anything you feel is not up to your mark in terms of either earnings growth or maybe valuations?
Valuations have corrected. The same profits which were valued at, let's say, 40, 50p 1 year back, particularly in the broader markets, have got corrected to half of those numbers as we speak today. So it's not that the earnings are disappointed, it's basically the valuations have corrected. And now we are trading at almost 5-year average valuation. So in that backdrop, I think some of the sectors which are clearly headwinded are basically the likes of those surrounding your travel and tourism, because we have a crisis at hand. Costs are going up, particularly international travel, etc., have become very, very prohibitively expensive on account of the rise in fuel costs as well as currency depreciation. So tourism, hotels, travel, airlines, these are somewhat more headwinded sectors apart from IT.
Okay, fair point. Manishi, the Prime Minister stepped up and said that, pause gold purchases for a year. Obviously, we see an actual fall in imports, and jewelry shops seemed to have, borne the brunt. Are the best days of silver and gold behind us?
No, I don't think so. I think in the AI environment, a lot of these base metals will be used as consumables. So, the silver, germanium, this whole AI play will require a lot of these rare earths and the precious metals also. And I think one's portfolio, you should have an exposure of 5 to 10% in bullion. And yes, there is a need for lower imports of gold for the time being. And once this situation normalizes, we should be back to normal. And India broadly imports around 700 to 850 odd tons. Costs have become very prohibitively expensive. So your grammage in any case are coming down. That is for sure. And in the backdrop of increased duty now, the consumption will be lower. But as an asset allocation, I think there should be a place of gold and silver in one's portfolio. Maybe 5 to 10% is normal, and we should look to increase the exposure once the situation normalizes.
Okay, Manish bhai, we'll pause it here. Thank you for coming. It's such a pleasure to listen to your wonderful thoughts, and let's hope that the worst is behind us and that Q1 will absorb all that negativity, and that we'll have fantastic quarters ahead. Have a nice day and all the luck to you.
Thank you. Thank you, Shalin.
That, ladies and gentlemen, was Mr. Manish Sonthalia, Chief Investment Officer and Director at MK Investment Managers. Thank you for watching. Stay glued. Lots of good things happening on BGTV.
Presented by National Stock Exchange.
Look, This investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
So Chetan Bhutani, our Associate Editor Business Today, and we are here at St. Petersburg, Chetan. And this is your first time at St. Petersburg Forum, is it?
Yes, I am for the first time reporting at St. Petersburg International Economic Forum. I've been told it's called the Russian Davos, and well, likely so, because seeing the key themes, it's really huge, it's very large, and a whole lot of investor community and, of course, influencers are coming over. It's quite a time to probably cover this event as of now.
Absolutely, because, the war is on, and we've been looking at and talking about how Russia is a sanctioned country. But when you go in, and Chetan and I will be showing you in the course of the next few days what Russia is really showcasing. It's not just Russian oil and gas, which is what basically Russia is known for amid all the war and conflicts. Chetan, we've been talking about Russia and the need for energy security, but this is beyond that.
Of course, I've been attending sessions and looking at people and talking to them. There are 3 to 4 key agendas that people are really following up, and investor community especially looking at Moscow for these particular sessions. First is de-dollarization, wherein you get to know how the alternative payment mechanisms really work out, Geeta. And secondly, it's very interesting to understand how the BRICS and the global south is naturally emerging as a preferred partner for investments, because people really want to move beyond the West, because people are trying to eye US investments and other countries as well. But yes, global south and BRICS is what people are really looking at for healthier investments, for ease of doing business, and a whole lot of other things that investor community really look out for. Because as per Deputy Finance Minister of the Russian Federation, he was just mentioning that investor community really looks out for a country that's really risk-free. Where investors are protected, the economy really flourishes. We've been seeing it in South Korea as well. So these are 3 to 4 key agenda and points that are really influencing the conversations at SPIEF. So yes, but what about the global south? What are you hearing at the ground and from the government official side?
The most important question, Chetan, that you asked is the global south. We are looking at a new global economic order, and again, we'll be talking about this. We've been talking about this for a very long time. But before I talk about the global order, because you will see us with a lot of exclusive coverage from St. Petersburg. India Today is the only Indian channel here. So a lot of exclusive coverage, but it's not just that. It's also the fact that look at the participation. We have heads of state from Central Asia, from Africa, from West Asia. We have leaders coming from all these, from Far East, East, Southeast Asia, South Asia. You have participation from all these quarters. Just goes to show that global south, something that India and the Indian Premier has been talking about time and again, is a force to reckon with. The bullying of the past, where we are told what to do, how to do business, how to trade with the world, how can you rise in the global economic pecking order, that certainly has changed, and that you're seeing over here with the kind of conversations that are happening. Look at data, look at technology, look at AI, look at the robotics that we just saw. Again, which we'll be showing you.
And by the way, sorry to intervene you here. I've been looking around, and AI and AI sovereignty is what everybody is talking about here, because eventually people and the world is eventually moving on to artificial intelligence in various sectors, including defense, and that's what Russia is also focusing and portraying here big time, because significant investments are being done across the world. But who actually utilizes AI to the best of capacity is what to be looked out for. What do you think about that?
Absolutely. The wars, Chetan, because we cover wars also very, very closely, I do. AI has become so central to how wars are being fought, narratives being set. Look at the Iran-US war. Iran has won the social media narrative hands down. There is no question about showing and expressing resilience through technology, and Iran is a clear example when it comes to that. Russia certainly has during the Russia-Ukraine war, Ukraine actually used social media and technology to the fullest. And for Russia, that certainly is a learning. Modern warfare has changed from what we are seeing over here, Chetan. There's a massive display of how fantastic Russia is in artillery, armament, weapons development, research and building. But the warfare has changed to drone technology. And Ukraine, unlike any other country, has showed how important it is. And we've seen the kind of investment that Russia is making when it comes to drone technology, the kind of investment that Iran has made in this drone technology. So a lot of things that are eye-opener in terms of how the world is shifting and changing and moving to things that are forward-looking, future-looking, and a lot of the conversation over here in terms of themes, in terms of conversations. In fact, our Vice Chairman, Kalipur, is also going to be on a session that has to do with AI, because India Today as a group has used AI to the fullest in India, but also tackle the challenges of AI, Chetan, which is huge.
And lastly, before, if you would like to end the conversation, you have been a foreign affairs correspondent for a very long time, for decades now. I just want to know from your experience, that this could probably be a viral moment, viewers, that from the perspective of foreign affairs reporting, how do you see this development now, when actually on the eve of St. Petersburg Forum, we see a drone attack happening, sending a message by Ukraine to the world? How do you make sense of it?
It just means that the world has become unpredictable, Chetan. We are living in an unpredictable world in terms of wars, in terms of technology being used and misused, and in terms of leaders being unpredictable too. Today, America is engaging Russia. Yesterday they weren't. Tomorrow they might not. But today, America and Trump is engaging Putin. So some things that you have to watch out, some things that you have to look at, that could change the dynamics of war, that could change the dynamics of predictability and predictability for a long time to come.
Okay, well, that predictability, artificial intelligence, defense is what really is shaping the forum completely. Well, with Geeta Mohan at St. Petersburg, with Yogendra Singh, cameraman, this is Chetan Bhutani for India Today.
Sure, there's excitement, but there's also concerns as far as mileage is concerned. You know, a lot of maybe rumors, or maybe some of them are considered to be facts, that ethanol reduces the mileage, it can cause corrosion, etc. What is your take as far as the industry is concerned? You are producing ethanol that is going to the OMCs, that's going to the pumps as well. 400 pilots have been launched in the country, and 5,000 more pumps are expected, where you will see more flex fuel as well, 85 and 100% blended. What's your view and take on that? From a consumer point of view, what should they look at?
Right. Interesting. So let me answer this question in two parts. Number one, ethanol by nature is oxygenate, so it helps in burning the rest of the carbon fast. So at 20% blend, and there are studies done by the experts.
everyone, welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the D Street. The stock markets are holding up about 30 odd points higher at 23,444. But remember, all eyes are on the RBI Governor Sanjay Malhotra as we are awaiting the decision on the 3-day monetary policy meeting that has been underway. And finally, we are going to be seeing whether there will be a rate hike or will it be a status quo coming in this time around as well. Remember, this monetary policy committee meeting has come on the back of course, inflationary pressures that have built on because of the geopolitical crisis, the Iran-US war. The falling rupee has been a major concern as well. And we have seen the Indian rupee almost underperforming Asia, falling by over 7% to a record low of 96.96 in the month of May. And that's when we have seen the RBI also intervene as well. So a lot of commentary will also be important to be seen apart from the rate decision to find out what the state of the economy is currently, what are the kind of inflationary pressures that the RBI is already penciling into going forward from here, what is the kind of impact on growth that we are going to be seeing. All of that coming up for you. Let's straight away shift focus to RBI Governor.
And cautious business sentiment. Let me at the very outset emphasize that the Indian economy entered this episode of global turbulence with much better fundamentals than in previous similar episodes. We remain confident to withstand these shocks with minimum pain. Nevertheless, it is important to not only confront and address these challenges, but also at the same time take this as an opportunity to further enhance our resilience. Global economic outlook remains clouded.
Well, the RBI governor is clearly talking about how the global economic
by the continuing geopolitical impasse in West Asia, as sharply escalating energy prices and global supply chain disruptions continue to hinder economic activity. Faced with difficult trade-offs, monetary policy has turned more cautious. Major advanced economies central banks are likely to pivot towards monetary policy tightening. While equity markets remain buoyant, driven by AI-fueled and safe haven demand are imparting volatility to forex markets with a depreciating trend in many EME.
There are some technical glitches in that feed that we are showing you, but viewers, clearly RBI governor has started off by talking about how the monetary policy across the globe turns cautious amid the West Asia conflict that has shrouded the overall global economic outlook at this point in time. We are still awaiting the decision on the repo rate. It's kept unchanged at 5.25%, viewers. That's breaking in for you at this point in time. The RBI has kept the repo rate unchanged at 5.25%. That's what we are given to understand. This is what exactly the markets were penciling in. But let me go across to our guest. We have Sudeep Bandyopadhyay joining in on the program with us, market expert. Warm welcome to you, sir. Thank you so much for taking the time out. Unchanged as far as the repo rate is concerned at 5.25%. Is that what even you were penciling in this time around? And do you think it's a decision that goes well at the time when we have been seeing inflationary concerns that have been rising, the rupee that has been falling as well, and what do you think remains ahead for the RBI to keep on their radar?
This is very much on the expected lines. I think the entire market was of the view that interest rate rise at this juncture may not be appropriate, and RBI will not go ahead with the interest rate increase at this stage. However, we will have to very carefully understand the rest of the announcements by RBI, particularly considering the fact that Indian currency has been depreciating sharply. And what are the steps being contemplated by RBI to stem the rot there? And are they going to announce something as far as the bonds are concerned in tandem with the government coming out with some exemption on the tax rates, etc.? I think all eyes will be on that, and all eyes will be also on what is the stance RBI is taking on growth and on inflation going forward.
Absolutely. For now, on the rate front, it is neutral stance at this point in time. What Mr. Malhotra has talked about is, Governor Malhotra has talked about is that disruptions to key trade routes and supply chains have increased the market volatility, and therefore there is cautious sentiment. He's also talked about how he remains confident to withstand these shocks with minimum pain on the economy. You also did say that it is important not only to confront and to address these challenges, but to also take this as an opportunity to further enhance our resilience. At this point in time, unchanged rate at 5.25%, maintaining the neutral stance is what we are given to understand. Nifty Bank is up by 0.4%. We're seeing the PSU banks up by 1.4% in the session today. Financial services up by 0.8%. The other rate sensitives, autos are also now higher, about 0.3% odd in the session right now. And we also have some of the other rate sensitives also moving in tandem. Your own sense on the banking and the financial space, so especially you alluded to the fact that the government is already pruding the steps to bring back foreign capital into the Indian markets or Indian government securities by reducing some taxation for the foreign investors at large, and you do also expect that there should be further steps that should be taken by the RBI at this point in time. But given the kind of banking reaction that we are seeing at this point, those will be the first ones to benefit in case more foreign money trickles into India.
Oh, absolutely right. I think the entire banking sector will be extremely happy if some steps on those directions are taken. There is also a talk about allowing banks and other corporates to borrow abroad, and a part of the hedging cost in some form or manner will be picked up by RBI. Probably the normal hedging cost, which used to be the normal, will have to be borne by the borrowing entity, whereas the incremental hedging cost, which has come into play because of steep fall in rupee in the recent past, that part will be picked up by RBI. Some such arrangement may be made, which will cheer the market, particularly the banks and financial institutions. We'll have to wait and watch. Now, I must also mention here that some of these things may not be articulated expressly in the policy, but hints or indications may be given towards that. These can come separately through a circular or a communication directly to the banks by RBI. So we'll have to keep that cushion, keep that in mind while understanding the policies.
Absolutely. There will also be an important aspect that we will be watching out for as to what the RBI governor talks about, the inflation outlook going forward because of the supply shocks that we've been seeing because of the war. What is the impact on the GDP outlook that the governor also talks about as well. Will there be a change in either of those will be important to be seen. We're still awaiting that statement coming in from the RBI governor. We will definitely come out with it. Let's quickly listen, for a moment to what the governor is saying.
Resilient and business expectations are still positive. On the demand side, private consumption aided by discretionary spending has remained resilient so far. Fixed investment has also maintained its momentum despite cost pressures. Merchandise exports recorded strong growth in April this year. This is notwithstanding elevated freight and insurance costs. Services exports are also holding up well, reflecting sustained demand despite concerns about AI. Overall, the economic situation has broadly exhibited resilience and withstood the conflict spillovers, although the impact of cost pressures is becoming visible. Going ahead, the rise in prices of energy and other inputs, coupled with supply disruptions, is likely to weigh on economic activity. While import diversification in affected commodities is likely to improve supply, it would still come at a higher cost. The full impact, however, will depend on the duration of the conflict, the time taken for normalization of supply chains, and the burden sharing approach among the various stakeholders. The pass-through of higher energy prices to retail products is also becoming evident. Additionally, the projected deficiency in the southwest monsoon will have implications for agriculture production and rural demand. However, the programs and initiatives for crop diversification, water harvesting and conservation, climate resilient practices and short duration crops, among others, are expected to mitigate the impact. Sustained momentum in services, continuing impact of GST rationalization, and broadly stable employment conditions should continue to support urban consumption, even though rising inflation could be a drag on the purchasing power of households. Government capex is expected to remain robust, while the elevated capacity utilization and sustained credit flows from bank as well as non-bank sources are supportive of corporate investment. Cost escalation and heightened uncertainty could, however, dampen investors' sentiment. Weak global demand and high logistic costs are also headwinds for merchandise exports. Services exports, on the other hand, are expected to sustain their momentum as demand for Indian services remain healthy. Several measures undertaken by the government, including support to MSME and export sectors, efforts to ramp up domestic gas and crude production, encouraging use of domestically produced alternatives to imported inputs, and diversification of critical imports should help cope up with the external shock. Taking all these factors into consideration, real GDP growth for this year is now projected at 6.6%. We had earlier projected 6.9%, of course, with huge uncertainty and downside risks, with Q1 now projected at 6.6%, Q2 at 6.3%, Q3 at 6.5%, and Q4 at 6.8%. Prolonged global supply chain disruptions, volatility in global financial markets, and weather-related shocks continue to pose downside risks to the domestic growth outlook. I will now talk about our inflation assessment and outlook. Although firming up marginally from 3.2% in February, headline CPI inflation was below the target during both March and April this year. In fact, 3.4 and 3.5% respectively. While food inflation edged up, fuel inflation remained muted as retail prices of petrol and diesel were unchanged in March and April. Core inflation remained stable at 3.7% during March and April. Excluding precious metals, core inflation was much lower at about 2.1 to 2.2% during this same period. International crude oil prices, the Indian basket, have averaged around 110 US dollars per barrel during the last 2 months. And indications are that the average oil prices for this year would be substantially higher than what were assumed during the last policy. You may recall that in the last policy we had assumed crude oil prices to average for this year at $85 per barrel. Higher energy prices and an increase in several input prices also led to a sharp spike in WPI inflation in April. It was more than 8%. Turning to the inflation outlook, the partial pass-through of high global crude oil prices to domestic pump prices of petrol and diesel started in May. Prices of several inputs such as commercial LPG, industrial raw materials, chemicals, base metals, rubber, and plastic products, among others, have increased. These could exert upward pressure on CPI inflation in the coming months as firms pass on these higher input costs. Considering all these factors, CPI inflation for this year now is projected to be at 5.1%, about 50 basis points more than earlier projected, with Q1 at 4.2%, Q2 at 5.1%, Q3 at 5.9%, and Q4 at 5.4%. Core inflation is projected at 4.7% for this year. These forecasts, I may mention, are subject to upside risks due to heightened uncertainty because of a variety of reasons: global supply chain disruptions, global commodity price shocks, uncertainty about the spatial and temporal distribution of the southwest monsoon, and risks from El Nino conditions getting developed. However, I may mention that adequate stock of food grains and satisfactory reservoir levels provide a lot of comfort to us. I now move to liquidity and the financial market conditions. System liquidity, as measured by the net position under the LAF, stood at an average daily surplus of 2.63.
All right, some big statements coming in from the RBI governor. First, FY27 GDP forecast has been lowered from 6.9% earlier to 6.6% now, and financial year 2027 CPI inflation forecast has hiked to 5.1% from 4.6% earlier. Sudeep, coming to you, how would you really look at this both two-pronged led impact we are seeing? A pressure on the growth and a pressure on inflation. Inflation forecast has been hiked and growth forecast has been lowered. Are we moving towards a stagflationary scenario, and what would that mean for the markets and the economy?
Well, Sakshi, this is absolutely on expected lines. We know what's happening around us, and definitely growth will take a beating. And the RBI's estimate of bringing it down from 6.9 to 6.6 is very realistic under the current circumstances. And of course, the inflation is going up and will keep going up. And again, inflation forecast getting increased to 5.1% is also again realistic. But I won't, rush to, put a stagflation label to it yet. These are unusual circumstances with what's happening in West Asia. God willing, if the conflict ends, things will start slowly to get back to normal, and things can improve significantly. We have in our economy multiple levers for growth. And yes, monsoon is expected to be lower than normal. That also is a dampener for the growth as well as inflation. But I think we still have many levers which can pull out the economy from a stagflation-like scenario. Government capex is continuing. Private capex is picking up. So I think there can be a situation out of this kind of a jam going forward once the war ends in West Asia.
Absolutely. So that's what it currently means, viewers. So one, we have a status quo policy. The repo rate has remained unchanged with a unanimous vote of all the members of the MPC. Stance remains neutral. FY27 CPI inflation forecast increased to 5.1%. FY27 GDP forecast has been lowered to 6.6%. Now, there's also another big breaking news coming in, viewers, and this is with regards to the interest on government securities exemption from tax for FIIs. Remember, we've been talking about it since last couple of days for all of you. And what we are given to understand is that the government has released the income tax amendment ordinance now that gives effect to this reform starting 1st of April 2026. So it's starting this financial year that the FIIs investing in government securities will see an exemption from the LTCG. Those are some details that we are still awaiting right now, but this was something that we were talking about for the last couple of sessions with all of you, that there is an expectation some taxation relief from the government will be coming in for the foreign investors. Finally, there is a tax amendment that has happened that will give effect to this reform starting 1st of April. Sudeep, your comments.
Yeah, absolutely. Bang on target. I think the market was expecting this. There are two things which are expected. I'm not sure, Sakshi, whether both have come. One is withholding tax on bonds should be removed, and other is LTCG on bonds should be removed. I'm not sure whether both have come. If both have come, I think it's fantastic. And this is on the expected lines. But I must also tell you, Sakshi, that this doesn't mean there'll be a flood of money, gushing into India. It will be a slow process, but it definitely is an sentiment improver and will help Indian corporates to raise money abroad, Indian banks, RBI to access money abroad. Because we were playing this game with a handicap. Very clearly with a big handicap. Nobody keeps 20% withholding tax. Nobody keeps a long-term capital gains tax on bonds. And which is what we had imposed on these instruments, which was not really ensuring a level playing field with other countries. Now things should go back to normal. And, the investors should judge Indian bonds and Indian debt instruments at par with other global markets. Based on the fundamentals, based on the rates offered and everything else, taxation will not be a hindrance going forward.
Absolutely. So the paper that we have right now does not specify the details, but it definitely says that this ordinance now may be called Income Tax Amendment Ordinance of 2026. It shall be deemed to have to come into force on the first day of April 2026. And in the Income Tax Act of 2025, the table that will see some amendments are for 13D and 13E. 13D talks about any interest on government security and any capital gains arising from the sale, exchange or transfer of such government security for foreign institutional investors. Such exemption shall be subject to furnishing of information such as form and manner as may be prescribed. The second amendment happens in 13E. This is on any interest on government security and any capital gains arising from the sale, exchange and transfer of such government security. Bank for international settlements are the ones who will be clearly seen as benefiting from this amendment. Such exemption shall be subject to, of course, furnishing of information. But we will definitely find out what the exact Income Tax Act 2025 had to mean with 13D and 13E and what is the amendment, and share that with you eventually onto the shows as well. But let's go back to, at least this this definitely helps us understand that FIIs right now are definitely exempt with respect to the kind of taxation that is concerned on the government securities. So some announcements towards that will now flow in. So that's definitely interest on government securities are exempt from tax for FIIs. That's definitely coming in there. But let's shift focus to what's happening in the governor's statements as well. We are given to understand, of course, those important aspects that have come through. Let me also read out some more updates that have come in. Governor has also flagged dropping FDI flows. He's also said that the net FDI has witnessed outflows of almost $14 billion in FY27, primarily driven by equity segment. This is what he's talked about. At this point in time, more statements will follow through at this point in time as well. But definitely on the liquidity measures also, we are looking for some statements that will be coming in. Let's actually go back to the governor and see what he's talking about as far as the foreign investments, FDI inflows are concerned.
Without SEBI registration are being increased. Further, the same facility is being extended to all individual persons resident outside India at par with that available to NRIs and OCIs. Third, a facility of concessional forex swap will be provided for about 4 months till 30th September 2026 to incentivize ECB's external commercial borrowings by public sector undertakings. Fourth, A similar facility for bearing the full hedging cost shall be provided again till 30th September to the authorized dealer banks for raising 3 to 5 year FCNRB deposits. Fifth, it is proposed to restore the time for realization of export proceeds to 9 months. This was earlier increased to 15 months. I may mention that while these measures are expected to strengthen our balance of payments, we will continue to make the right policy adjustments as may be required to further promote exports and attract and incentivize capital inflows. As I have often reiterated, a word on our exchange rate policy. It continues to remain unchanged. We do not target any specific level or band. Instead, we allow the exchange rate to be determined by market forces. Our experience, however, suggests that it may sometimes witness movements, often caused by speculative pressures, especially in the wake of heightened uncertainty, some of which we witnessed recently, which are not in sync with the fundamentals and are disruptive of economic activity. While our objective is not to resist market-driven adjustments, we shall curb excessive volatility and prevent disorderly market movements. While our foreign exchange reserves provide us with sufficient buffer against external shocks, we have a very broad range of regulation.
All right, we've also seen that the RBI governor has also announced some steps to attract the foreign capital as well, even though he talks about how foreign exchange reserves are adequate at this point in time. We have heard from the governor that FDI flows are seen encouraging in April. He's talked about how higher gross and net FDI FY26 definitely highlight foreign investors' interest in the Indian markets. Also, he's talked about forex reserves continue to be at $682 billion as on May 29. Forex reserves, he says, are adequate and they have import cover of 11 months at this point. To add all new issuances is what he's talking about, some gilts he's talking about. Then he's talking about some removing of concentration limits on FPI debt investment in general route. That seems important at this point. And he's also talking about NRI and OCI investment limits without SEBI registrations are also being raised. I think these are two very important ones that we need to focus on. The removal of concentration limits on FPI debt investment in general route and NRI OCI investment limits without SEBI registrations also being raised. Sudeep, would you be able to give some understanding on these 2 points? Seems like in addition what you were expecting, the RBI has also come out with some additional steps to attract foreign money.
Oh, absolutely right, Sakshi. I think one of the biggest challenges of investing or bringing money to India were the operational and procedural hassles. And everybody was clamoring for some kind of making these things easier and making it convenient for the investors to bring in money to India. I think both these steps which you just mentioned have been announced are in that direction, right steps in that direction, I would say. There were too many limits, too many sub-limits, and too many calculations which one need to do before making investment or bringing money into India, whether in equities or in bonds. Now, if these are simplified for multiple categories and all that, I think things will be much easier and flow of money will be much smoother. So I will have to definitely wait for the fine print and understand the nitty-gritties. But by and large, these are steps in the right direction.
All right, steps in the right direction. The markets have also pulled up a little bit. You can see 23,470 onto the Nifty, 56 points higher. The speech is over right now, but we've highlighted as much the key notes, and of course we'll continue to decode the RBI policy even with the economists going forward from here. But thank you so much, Sudeep, for getting us all those initial insights into the RBI commentary and of course giving us a sense on what the markets will really look at from these statements as well. Always a pleasure to host you with us to seek such wonderful insights. Thank you so much. We'll wrap it up on that note as far as what's hot is concerned, viewers, but stay tuned as up next, right after the break, we will have economists joining in to decode the RBI policy.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
Hello and welcome. You're watching Business Today television viewers. I'm Sakshi Batra and this is our special edition where we decode the RBI policy decisions that have been announced by Governor Sanjay Malhotra just moments ago. We have some key highlights that we will be putting out for you. One, the repo rate remains unchanged at 5.25%. We also have seen that it is a unanimous decision that has been taken by all the members of MPC. The stance has been kept as neutral as well. What we have seen as important highlights is that the financial year 2027 CPI inflation estimates have been raised to 5.1% from 4.6% earlier. What we've also seen is that financial year 2027 GDP forecast has been lowered to 6.6% from 6.9% earlier. Apart from this, there are several other announcements with regards to attracting foreign money is concerned as well. The RBI has liberalized the norms for FPI investments in government securities as well. And of course, they talk about how they will continue to ensure appropriate liquidity in the banking system to meet productive requirement of the economy as well. The RBI has raised the limit for investments for non-resident Indians and for overseas citizens of India in the equity instruments. And that's something that we are going to be decoding now with our economist specialist. We have Rumki Mazumdar joining in to decode for us all the key announcements made by the RBI Governor. Warm welcome to you, Rumki. Good to have you with us. Well, first up, your reaction to the big announcement that has been made. First on the rate, and then we will come on to the several other announcements as well. Did you expect a repo rate unchanged at this point in time? Do you think this any hike at this stage could have been counterproductive to what we are trying to achieve?
Thank you so much, Sakshi. Nice speaking to you today. And yes, we also expected the rate pause to happen because so far the geopolitical uncertainties have not started impacting the inflation so far. It would have. So it will be too early to take a move. But at the same time, if you look at the credit growth, that has been pretty growing strong. Last year, we have been dealing with the situation of credit growth not growing, improving. Now, the credit to the industry sector is at 15%, and in general, it is around 16%, which is pretty good. And at a time when currency is depreciating, when the external borrowing costs are going up, at this time, lower policy rates really help in boosting growth. I think what the RBI is trying to do is keep its armor ready for a fight that it has to fight. It has to be fought sometime in the later time. So it's a good move for the RBI, and we expect that it would happen.
Okay, but what would your expectation be going forward from here? The next policy, or will there be a rate hike, or will it further be seen only on how things evolve on the global economy front?
Right. So there are a couple of risks. The inflation, especially the CPI, would likely show the increase starting from, say, July onwards. So most likely, if that happens, the next MPC meeting that happens in the month of August, they might decide to even keep it stable then, because the inflation might go up even further after the El Nino effect starts impacting the agri output. That is where the food prices will also may start increasing. So I think there is a very strong possibility that RBI might go for a pause even longer. But then if suppose CPI goes up above 6%, which is highly unlikely by July, then in that case, then the RBI might act. But till then, I think RBI will likely pause another round of MPC meeting and then start raising rates from October onwards.
Absolutely. Rumki, I think some of the economists of the section would have probably penciled in a rate hike thinking that this is the need of the hour to protect the fall in the rupee. But the kind of statements that we have seen on increasing the foreign capital towards India, is that a better way of how to deal with the falling rupee and the pressure on the rupee rather than going for a hike right now? Is that the reason why the hike has not been done? Could you help us understand on the rupee fact with the steps that have been taken on the FDI and increasing the global capital to India, first by the government and now by the RBI? Should we be expecting that?
The thing is, see, it's an impossible trinity that we are dealing with here. One is the monetary policy rate, the other is the capital flows, and the third one is the currency, which we are depreciating. So not all three that the RBI can actually improve on. If it starts increasing the policy rates, then it improves to some extent capital flows, but it then has an impact on growth. And of course, if it starts defending the currency, then it will have an impact on how the interest rates should move, right? So clearly the RBI will have to balance all three. Right now, I think currency, it is trying to defend as much as possible in through its reserves or maybe there is other arguments that let the market decide where the currency should be, but the pressure would be on because we not only have an increasing current account deficit but capital account deficit as well, and usually we get of FDI of around 2% a year, but last 2 years our FDIs have been pretty low. In fact, this year FDI, the FY26 FDI and FPI together had a negative number. So clearly that puts a lot of pressure on the capital account, and that's why it's reflecting on the currency. The question is how quickly we can reverse the cycle. Unfortunately, there is no control that India has over the capital flows. And also, if oil prices remain high, then in that case, you will likely see the current account deficit also remaining high. So in that case, I think the RBI will probably like to ensure that at least the interest rates remain low to the point where it can help growth as much as possible, because domestic demand is where we will probably have which is our biggest strength, and this is where we would like to play the most. So I think that's all is weighing in, and that's what the RBI is considering to ensure that it kind of maximizes with the situation in this best potential way.
Absolutely. We've seen a reaction, a relief on the rupee as well, viewers. We've seen a 28 paisa improvement in the rupee. Now the rupee trades at 95.51 against the dollar. This is right after one. We've seen the government passing that ordinance as far as income tax is concerned that will give some relief on the foreign investments on the taxation front. And now the RBI has also talked about how they're raising the limit for investments for NRIs, for the OCI citizens of India as well, and in equity instruments. And apart from that, they've liberalized the norms for FPI investment in government securities. So it's a two-pronged approach. The government as well as the RBI truly working together to get foreign capital back, and that is being shown on the rupee right now. How would you really look at these steps, Rumki?
It's a wise step, because I think one of the biggest concern for global investors was the taxes that was being paid. One on the capital gains and even on the bonds. Even interests are they have to pay taxes on the interest. Now, suppose when they are selling off the bonds and they have a negative return, then the refund of the taxes takes about almost a year. All these things were weighing down on investors' confidence and their ability to invest in India, right? At a time when things are so uncertain. So I think it's a very good move where the government is now actually looking at the tax angle to it, and the RBI is also working to ensure that the currency is not so volatile, because a depreciation of currency also hurts the investors who are investing in dollars, right? When the moment they take the money back, the returns are whatever returns that the India equity markets were giving, that probably just gets washed away. So that's where I think both RBI and the government are working together to ensure that investor sentiments and confidence is built up, and that is what will be very, very important to decide how capital flows will be in the future quarters.
Okay, at least for now, it seems that the government and the RBI together have prevented the fall of the rupee towards that psychologically feared mark of 100 per dollar, because from 96.96 we've seen a reversal of sorts, and the markets are already seeing a reaction on the rupee 95.95 now against the dollar, and we are now inching lower because of these steps that have been taken in. Let's now talk about growth in inflation as well. First, on the inflationary aspect, we have seen an uptick from the governor with regards to the expectation now of 5.1 vis-a-vis a 4.6% expectation of CPI-led inflation earlier. Do you think this already pencils in what you were alluding to, the El Nino impact, the lower monsoon impact, along with the supply shocks related impact that we have been already seeing? Although the governor also did point out that how they are now penciling in higher. I forgot the number, but he said that oil prices, they were penciling in $85 per barrel earlier in the previous meeting, but now it's hiked. I do not know the number. If you caught that, please give us that understanding. But looking at all of those aspects, do you think it protects large part of the upside as far as inflation risks are concerned?
I feel the inflation the risks are to the upside for sure, because we had expected oil prices to remain around 100, and it could be 100, it could be 110, and that will have a very significant impact on our current account as well as on currency, everything. So in a way, what we believe is, even suppose oil prices comes back to below 100, it will never, I don't think it will come down below 90 or 85. So even in the best case scenario, we are looking at a very prolonged high oil prices, which will have an impact on the current account, which will have an impact on the inflation, because we'll be importing a lot of inflation from there. The other challenge problem is, if the Strait of Hormuz remains closed for a longer time, and even if it's, it may not remain closed, but if the supply chain remains intermittent because of the fact that the war continues, as a result of that, we will have issues with respect to the fertilizer prices and some of the essential commodities that we import from that from there. Also, palm oil, which is very, very critical, that is also becoming short in supply, because many of the countries which we were importing from, like from the east, like Eastern Asia, they are now curbing on their exports, because they are trying to move towards renewables, and hence using these bio energy to supplement their energy needs. So we have multiple channels from where we are seeing supply channel disruptions, which will feed into our inflation. So 5.1, yes, there's a very likely chance it might even be 5.5. We're expecting it to be higher in the second half of the year. But as long as the inflation number doesn't reaches the 6% mark, I think the RBI will remain comfortable in keeping, maybe going for maximum one rate hike. But then if it goes beyond, that is when situation might go really, really difficult for RBI to decide what it can do.
Okay, and on the growth forecast as well, what do you think, is the kind of your own number that you're penciling in? The RBI has brought it down to 6.6% vis-a-vis 6.9% now. Are there further downside risks to this number as well?
So we are quite optimistic about the numbers. I know India has been through these situations a lot of times before, and India has turned out to be quite resilient. If you look at the fact that oil prices went up, and yet pretty much all the tourist destinations were going full. Clearly, it says that people have the appetite to spend, and domestic demands remain strong. So we are penciling in between 6.6 to 6.8%, and we believe that by July, many of the supply disruptions will probably will be eased. But yeah, if things continue further and we see oil prices remain above 100 beyond July, is when we will start probably bringing down the numbers. But we will still like to be optimistic and believe that the numbers could be above 6.6% as well. because of the fact that we started, when we came into the crisis, our economic fundamentals were very strong. So we will be able to hold up to some extent and be resilient. But prolonged uncertainty will definitely weigh on our outlook going forward.
Absolutely. I also wanted to talk about the liquidity as well. Before unveiling the policy decision, also we had seen the RBI had infused 17,445 crores into the banking system through VRR auction as well. And the central bank accepted the entire amount bid by banks, at a cutoff and weighted average of about 5.26% as well. Although the demand from the banks remained subdued, right ahead of this auction conducting as well, because the RBI had received bids worth about 17,445 crores as against the notified amount of 75,000 crores that reflected limited funding requirements among the lenders. How are you gauging the liquidity scenario right now, and are more steps needed on that front, or is it enough?
The thing is, the RBI has hinted at a neutral liquidity stance because of the fact that, as I said, since the credit growth is picking up, it will be too early to break that momentum. So I think they will keep the liquidity easy to ensure that the industry is able to borrow, consumers are able to borrow at a time when borrowing costs across the world is going up, at a time when external borrowing costs are going up, currency depreciation is going to hurt even further. So in that case, I think the RBI will try to keep the liquidity as easy as possible. But if the supply chain disruptions causes inflation to go up, then the only way RBI can handle is to cut down on demand. So see, the thing is, RBI policies do not improve the supply situation. It impacts the demand side of the economy. So the only way they can meet the supply disruption challenges is through cutting down demand. And right now, I think the RBI is not in a hurry to impact the demand. That it doesn't want to do. So as long as I said, it will keep an eye on how fast inflation is moving and beyond, if it's going beyond 6% or not. Till then, I think the RBI will continue with the policies that it has in place.
Okay, so over the next 6 months, if we try to gauge, what is it that you're looking forward to? What could also be posing as a risk? Could it be rate hike surprises that could come in? Is it the prolonged pause or an eventual rate cut cycle beginning to further push growth forward? So what is the scenario that investors should watch out for now?
Rate cuts are unlikely. We are not penciling in, at least this fiscal year. Okay. Pause for till at least October, unless the inflation really shoots up beyond 6% earlier than that. But yes, we are expecting a couple of rate hikes by February. So we have about 4 MPCs then meetings till then. So most likely July will be pause. October could be a raise, and December, if they don't go for a hike, then maybe the next one. So that's what we are expecting. I think by December, we will know how bad inflation situation is, because by then El Nino effect will also have its impact seen on the food prices. If they see that situation is under control, and the government is actually doing a lot to ensure that the impact of El Nino on agri output is as minimum, because they have pretty much doubled the reserves of pulses, because that is the time between July to September is the time when Kharif season starts, right? You basically sow the pulses seeds. That is the time. If they have built a good reserves, and the reserves can be there for 2 years, clearly the government is also preparing itself to ensure that the supply shocks do not have an impact on the food prices. So if they are able to manage the supply chain well and is able to contain the food prices by September and October, I think the pace at which the rate hikes happen will be fewer.
Absolutely. Towards the end, Rumki, help us understand if you had to mark out one thing that really stood out in this commentary by the RBI governor, what would that be, and what is it that you will be now watching out for as the next step?
What I would say is, I think the RBI did highlight the fact that India has remained resilient, and I totally believe that, because this is not the first time India has seen supply shocks. We have seen supply shocks of 1973. At that time, our economic situation was much worse. So was the case in 79. Our unemployment rates were much higher, growth was much lower. this time we have come into a situation like this with much stronger fundamentals. So I think we will be able to sustain the situation much better. So that is something which I would like to like that's a positive news I take from the speech today. What I would like to watch out is inflation, where it goes. Second is how long is the crisis going, because that will very quickly change our forecast for our growth outlook as well. And the third is what happens to the currency, because we we should expect the capital flows to reverse at some point of time. The sooner it happens, the better for us it is. And I think the way the government is quickly acting on it, I think if they are able to give that confidence to the foreign investors that India is looking after, will look after the investors who are investing in India, I think that itself, that convincing itself will make a huge difference.
Thank you so much, Rumki, for decoding for us the big statements coming in from the RBI policy. Of course, what was expected was, and markets had already penciled in, status quo and no change on the repo rate front. That has happened with a neutral stance coming in. But of course, there has been a hike on the GDP, on the inflation front, a lowering of the GDP forecast. We've also seen many steps to bring back capital, foreign money to the Indian markets as well. Those are some very important announcements that have been made. Of course, through the course of the session, we will decode and help you simplify, understand, what are the steps that have been announced and on what kind of taxation has relief been sent as far as the governor and the statements from the RBI is concerned. But look at the markets. They have slipped after the initial, spike that we saw after the announcements that came in. We have seen the markets dip now, and they have slipped below 23,400 odd mark, about 30 points lower in the session. Where the pressure is coming in from is metals, IT, FMCG, autos. Those have dropped in trade. We have seen some banking names, I think private banks are the ones that are also leading some kind of a dip there, even though there is a flip action. So you can see Bajaj Finance at the top of the charts among the gainers today. We also have the life insurance names up and about. Shriram Finance is higher. But on the flip side, when we look at where the pressure is emerging, is IT names, of course, names like Wipro, of course, that's also a reaction on the buyback front as well. Some metal counters like Tata Steel, Hindalco, they are down. Coal India is down in trade. HCL Tech is also down in the session as well. But we are now increasingly seeing Reliance Industries and HDFC Bank, two heavyweights, and Kotak Mahindra Bank also as among those top laggards as far as the markets are concerned. So we'll wrap it up on that note, viewers, but stay tuned on to Business Today Television as we'll continue to get you more insights from what has happened as far as the government releasing the ordinance amendment of income tax is concerned, that will help the foreign money, help attract the foreign money, because there is a big relief coming on taxation on government securities, on government bonds there. And the RBI has also at the same time announced some relief coming in as far as FPI limits on short-term investments and concentration norms under general route is concerned. They're also talking about government saying measures along with the government tax relief to support the foreign demand for GSECs. This is the reason why they have taken this step as well. And of course, for persons residing outside of India, there is the extension of the same stock market sentiment facility as well. So those are some very big measures that have been taken, and that's leading to the support onto the rupee as well. Some very big announcements have come in today, and throughout the course of the session, we'll continue to share that with you in various videos. So stay tuned with us on Business Today. We'll continue to get you those important aspects.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना, वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Sri Ravi Shankar is with us, with the Indian diaspora, also in Russia. Huge opportunities, sir. Message of peace going around with the world and the war going on, sir. What's your ultimate motive to come here?
Message of peace, and then Russia and India are very close from centuries. Actually, we should have more tourism. India and Russia should come together more culturally, tourism, language-wise, all that. There is a lot of scope. And technology also, see here so much development in technology. And Indians are very good in the technology, field of technology. So I see a lot of scope and cooperation between the two countries.
Any message to the Indian diaspora here, to your followers who are trying to settle in Russia or make business in Russia? What's your message to Russia from the Indian diaspora side?
Yeah, nurture your roots and spread your wings.
All right, just last one more question. I'll then let you. I know you're a busy schedule today, sir. With a whole lot of developments going around, sir, what are you planning to set up your workshops here and eventually expand your network?
We do have here all over Russia, in all the 11 time zones. We have centers. We have more than 500 centers all across Russia.
All right, thank you, Sri Ravi Shankar. Well, that was Sri Ravi Shankar speaking to India Today on what all developments have been happening in the Russian space, and he has more centers that he's planning to set up as well. Well, Business Today continues its coverage at the St. Petersburg International Economic Forum, and I'm today joined by E.V. Pankevich, the chairman of the Committee for Tourism Development of St. Petersburg. Thank you, Mr. Pankevich, for speaking to us. First of all, Indians are one of the biggest tourists that's coming to Russia. How many tourist influx are you seeing this year, and probably
we see
in the next 2-3 years? How many tourists are you planning to attract?
We see a lot of tourists every year from India. We like India tourists. We have all the facilities, we have all the products, so it's not only MICE tourism, but it's also medical tourism, it's cultural tourism. You can bring your events. We know that India is a wedding destination, so you can plan your wedding here in St. Petersburg, you can, and we can promote. And we work a lot with Indian DMC tour operators, and we promote St. Petersburg as also a wedding MICE destination, for example. And of course, we have a lot of cultural roots. We have a lot of Indian cuisine, and by the way, people of St. Petersburg and of Russia, they like the Indian cuisine.
Absolutely, and are there any Indian-specific measures planned to attract more tourists from the government of Russia?
Yes,
what all are you doing so that more Indian tourists are?
We participate in all the exhibitions abroad in India also. We plan next year to bring a roadshow to your country and to show St. Petersburg. And of course, we do the info tours when bloggers like you and journalists from India come, and we promote St. Petersburg and all the way.
All right. Direct connectivity remains a problem. You'll have to eventually do a little stopover. So, are there any discussion with the airlines to have direct connectivity from India?
Yes, we make these discussions, and we hope that we will have a direct flight because it will ease everything. But talking to that, we have a good transportation system with Moscow, so it's no problem. You come to Moscow and you have two cities. You watch the capital of Russia, and then you come by train or by airplane to St. Petersburg. So it's very easy.
How many infrastructure?
We believe in enjoying tours. Moscow, St. Petersburg, or Moscow, Kazan, or Kazan, St. Petersburg. So we have all the packages and we have all the options, and all the cities of Russia, not only St. Petersburg, all beautiful.
All right. What about the infrastructure? How many hotels?
But you need to come to St. Petersburg first and then travel the whole country.
Sure. What is the infrastructure plan? How many hotels are you planning to open up, and what are the numbers involved? How much investments are you putting in to ramp up the infrastructure?
Every year we open 6 to 10 hotels. We build systematically the infrastructure because it's the future of hospitality. We have all the hotels chains from 3 to 5 and extra stars, and we have all these products from minimal product to the maximum.
Where are you seeing more scope?
You can choose from the variety of products, and you can choose what you like.
Sure.
St. Petersburg can offer you a large variety of tours and hospitality products.
Sure. Business tourism, medical tourism, cultural tourism. Which all segments do you feel are getting more importance, and what are you trying to promote?
I guess because we are the cultural capital, the cultural city of Russia. So the cultural. The cultural issue is important. We have a lot of tours around the city, a lot of museums, theater programs, events, and of course we see the potential in MICE tourism, as here we participate in the International Economic Forum, and in medical tourism. Medical tours, this one which we can and we will promote to the Indians.
Lastly, any impact on the sanctions? Do you see the way India travels abroad or arrivals into Russia?
A very warm welcome to all ladies and gentlemen on Business Today Television. This is the last working session for the week. The markets are in good shape if you are not looking at the Nifty in general. The rally has broadened. More and more sectors are showing breakout. Newer and larger indices are coming into bull grips, and all seems to be well on Dalal Street as far as sentiment is concerned. There are positive threads and positive sentiment emanating from West Asia as far as the crisis between US and Iran is concerned. And let's hope that the rest of June works out to be better for the bulls. To discuss the state of play of the futures and options market, as also the long short side of the Dalal Street, we are joined by Mr. Vaibhav Shangvi, CEO at ASK Hedge Solutions. Namaste Vaibhav ji, a very warm welcome. We are meeting after a very, very long time. I trust all is well. How are you reading sentiment on Dalal Street at the moment?
Yeah, I think sentiment is clouded by, of course, few things, starting from what's happening from a geopolitical standpoint, from the Middle East standpoint, in terms of the supply chain problems. In addition to that, I think more importantly, from a capital flows perspective, at this point in time, as we see, many other regional opportunities are looking pretty attractive from a foreign investor standpoint as well. So all in all, I think market sentiments are pretty neutralish and are waiting to have some strong catalysts or triggers to kind of move the market on a secular basis.
Let's just first look at your positioning as of now. What is the long short that you have for the moment? How has it changed over the last 15 days?
So I think, Sahil, our long short kind of continues to be in the neutralish zone, not only now, but in fact for the last 2 to 3 months. And the primary reason is basically the current geopolitical uncertainty, from an overall macro standpoint. And which is why we have been a little cautious and kind of navigating this period, trying to have capital preservation or protection at the fore. So in some sense, while we like the medium to longer term story of India and few other sectors, but at this point in time, it's more of a risk management mode rather than anything else.
Are you fully invested in the sense that is there a cash positioning?
Yes, there would be, because we are a long short fund and we have that ability to be in cash or be neutral as well. We do use those kind of liberties to see to that our portfolio remains protected irrespective of the volatile market conditions.
Okay. What would be the percentage of cash versus total funds deployed?
No, I think from a cash, because you are doing a derivative positions, right, from a long short standpoint, I think cash is a little irrelevant number, in some sense. So I would rather say that we are, from an overall longer term perspective, in terms of our historical averages, we have been little lower than the longer term averages exposure, both on the gross side and as well as on the net side.
Okay. Um, when you look at derivative positions, is there a sector specific short that you have taken off?
Yes, and I think our approach has at the core being always been the fundamental equity long short approach. And when we talk about our fundamental equity long short approach, we use a combination of a top down and a bottom up approach, wherein we look at the global macros, the local macros, trying to understand which are the sectors which will do well and not do well as well. And this is how we kind of frame up our overall portfolio basket, both from a long side and the short side, to try and generate those kind of risk adjusted returns. So yes, it will be sectors, it will be stocks, depending upon how we are looking from a top down perspective or from a bottom up standpoint as well.
No, I understand the methodology. I'm just trying to check whether there are some sectors, given the very sharp bounce that we've seen in the markets, especially in mids and smalls, and many of them are represented in the derivative space. Are there some sectors that are showing signs of life on the long side?
Of course, Sahil, I think where we are looking at from overall sectors where we are positive on, and starting from the industrial space. Now, why industrial space and cap goods space? We are extremely bullish from a medium to long term perspective on the whole data center story. Now, when we talk about data center story, then all the picks and shovels, which is the companies which enable or which will help these data centers kind of get up and running, all of those companies are something which we generally like. So the whole ecosystem, including your electrical equipments, your power, your chillers, your across the board, whatever applications are used within that stack, is something which we are extremely bullish from a medium to longer term perspective. So that's a space we do like. In addition to that, I think we are at a level where the valuations on the private banks are starting to look pretty attractive. I'm not saying that we are bullish right at this second, but we are waiting for some amount of ebbing of the FPI flows to have a very constructive view on the overall private banks, as a theme. So in addition to that, that's something which we kind of like, as well from a portfolio standpoint. So those are the few spaces where we are looking to invest, from medium to long term perspective.
Okay. How about IT? The index itself corrected about 33-34% from its most recent high. Last week has seen a fairly sharp reversal. Is IT still a structural short for you?
See, I think IT is rather than structural short and avoid at this point in time, purely because on one side, the valuations have started to look a little, attractive with the free cash flow yield kind of looking good. But on the other side, I think whatever AI is doing in terms of potential revenue deflation, which we may probably see, I think there are two variables which are kind of very diverse, and at this point in time, I do think that the whole sector is under that transit, in terms of how the business model are going to shape up, 1 year down the line or 2 years down the line. So we would rather probably avoid at this point in time. Of course, if there is a massive rally, within the IT space for some reason, it would start becoming a negative opportunity for us as well.
Okay. I take it that your shorts are in place on software.
I would not specifically say that they are in place, but at this point in time, we are in avoid, I would say, the whole sector.
Okay. So you are long electrical equipment as well as the broader manufacturing space. You have a good feeling about private banks. How about pharma?
Pharma for us has always been a bottom-up sector, meaning because each and every company, to be very honest, are in a different phase of their approval cycle. Some are generic players, some have excessive exposure to Revlimid as a drug. Probably they will see some amount of pressure in the coming year. Some are domestic kind of focused, and the other newer opportunity, semaglutide, is something which many of the companies are betting on as well. So you have to ideally look from bottom-up perspective, which are the companies which would be good at least for the next 2 to 4 years, as compared to those companies who has already ridden the wave of Revlimid, and now we'll see some amount of degrowth kind of coming about. So that is how we will look at the sector.
Okay, fair point. So bottom up on pharma, slightly positive on private banking. You are waiting for some cues to emerge. Flat to neutral on IT. Top down macro and bottom up strength.
Yeah, I think PSU banks, and let's put some things in perspective, is for the last 1.5 to 2 years, the whole segment has been a great beneficiary of the underlying recoveries which have kind of happened. Which is why if you see the valuations which used to be close to about 0.5 price to book or 0.6 price to book has kind of moved up to close to about 1 times price to book. At the same time, the private banks, which were close to about 2.5 to 3 times price to book, has now come back to close to about 1.5 to 1.75 times price to book. Now, in my view or in our view, I think we are towards the fag end of what we have seen in terms of the recoveries from the NPAs. So for the PSU banks to incrementally maintain those kind of profitability level may be little challenging in the wake that probably we are seeing an interest rate hike kind of coming about, and that treasury books might also get impacted a bit. We will have to wait and see closely how they navigate, at least for the next 2 quarters, in the turbulence of what's happening to 10-year GSEC and the finer details of how the kind of NPA profile is shaping up with this kind of pressure from an overall industry perspective. So again, a wait and watch policy, especially on the PSU banks.
Okay. What you've not said but implied is that you're not bullish on them.
At this point in time, no, we purely because we would wait for either a very attractive level to get in from a valuation standpoint,
Yes,
or some, I would say, some better cues, or we see some consistency or probably evidence of how they are navigating interest rate hikes and the NPAs.
fair point. Structurally, Vaibhavji, when you look at the India energy basket on the listed space, especially PSUs, are there any dramatic structural changes that have happened in the way you look at ONGC, you look at Coal India, NTPC, maybe the PSU lenders on the power sector space? Are there any changes that have happened for the positive?
So when we look at energy sector as an overall basis, I think let's kind of segregate into upstream, downstream, and the power. And when we look at each of these segments, in our view, power has natural tailwinds. And when we talk about natural tailwinds, it is more to do with how the kind of climate changes are kind of happening in terms of extremities, and to the whole data center theme, which is going to increase the overall demand for the power sector as well. So in our view, power is something, or power related ancillaries is something which we are pretty keen on. With respect to the oil and gas, if it's an upstream company, then we are deeply encouraged by the consistency of the policy from the government side on how the windfall tax is probably going to get treated as well. So I think upstream companies, while it is, they are at the vagaries of the underlying crude prices of what's happening globally. We do believe that that's a segment, at a good attractive levels can be looked at on a constructive basis. And lastly, from a downstream standpoint, we are indifferent at this point in time. And yes, you may see some amount of value, but there are too many moving parts at this point in time to take a very, strong view about that.
Okay, ठीक है. Vaibhav ji, when you look at Adani Group as a whole, structurally there has been a shift towards an upswing, whether it's related to lesser problems that they face in the US or better business prospects. More or less, the entire, minus cement, the entire Adani Group is in an uptrend. What are you noticing?
Yeah, unfortunately, I think that's not something, those are the companies we generally very actively track, purely because our larger part of the universe is into the derivative space, and there are many companies within that group which are outside the derivative space in some sense. So that's something which generally we don't have much coverage on, internally. So I wouldn't be able to, comment on that.
Okay. Where do you find pain?
Sorry,
Where do I find pain in the F&O basket?
So pain, I think it is more from macro level pain, which may probably percolate inside the corporates at this point in time. While we meet the corporates, I don't see any immediate evidence or signs of pain, honestly, because last quarter has been, to be very honest, as against the street expectations, have been pretty decent from an earnings standpoint. And as we do our channel checks, April and May also has been pretty decent across the corporate, universe. The only pain point which I may probably see is the cost of raw material prices, which have been actually going up. So those companies which have been able to take the price hikes within this kind of raw material price increases, I think they are very comfortable. But those companies we have not been able to pass on the price hikes, I think will come under some amount of pain, at least from the next few quarter perspective. Assuming that it is temporary, I would probably, also say that if you get that kind of weakness because of a 1 quarter or a 2 quarter temporary phenomenon, then those levels would be pretty attractive to kind of actually go and buy from a longer term perspective.
Okay. Metals has been a fabulous place to make money on the long side. Is the rally now cooked?
Yeah, and from a metals perspective, I think while the immediate visibility from quarter on quarter perspective earnings, I think is pretty decent. And as you see, the LME prices, which are pretty buoyant as well, the only thing which is kind of refraining us from being very excessively bullish on the whole space is the underlying valuations. Now, when you look at the longer term price to book multiples of the metal companies, they are trading kind of rich. And my experience do say that the peak of the valuation is in the best of the cycles generally. So here is a case where we are trading at pretty high valuations. Whether it is the peak or not, time will only say, but it's a highly cyclical sector. So one has to be careful to take a longer term view. I think this is a sector you should keep on from a shorter term trading perspective, rather than taking an excessively long call from a portfolio standpoint.
Vaibhav ji, let's shift to global macro and two sets of questions. A comment on how do you see the rally in Seoul, Tokyo and Taipei, as also Wall Street. Is it about to end, given that 3 major IPOs are in the offing in the next fortnight, and this is a bubble that's really, really expanded over the last 12 odd months?
No, I think this is a huge point of debate, and rightly so, because the amount of rally which we have seen in the whole underlying space, so-called AI space, I think is a fact, or it demonstrates the kind of optimism for the future of AI. Now, one thing is pretty sure that AI as a business in different forms is likely to kind of change a lot of the kind of underlying businesses. Um, if you ask me whether it is temporary or it has a very long legs to go, in my view, I think AI as a theme has very long legs, and it is for a pretty decent long-term perspective where we can see a lot of industries kind of changing because of AI. So I'm not in the camp that it is excessively into the bubble territory. Yes, in the initial part, as always the case with something which is coming about new, you will find people trying to attribute some valuations, and Macy's a little kind of expensive in the shorter term, but when we look about 10 years, 15 years, 20 years, I think this is a story where you will continue to find much more improvements coming about going forward.
Fair point. I think we are on a pivot as far as the world is concerned, whether it's economic, political, business, or industry, because of this AI. This was somewhat similar to the phase of 2003, 2005, when Google got listed, Facebook got listed, and the world actually moved to a 24-hour kind of a phase to be connected. Maybe AI is the next leap. Let's see how we figure it out over the next decade or so. A couple of points, Vaibhavji, given the changes that have happened in the Indian derivative space because of regulatory constraints, how has the return at ASK Hedge Solutions changed, whether it's improved or has it come down when you compare yourself with 2 years ago?
See, I think the returns are more of a fact of the underlying opportunity which is available from a market standpoint. Of course, transaction costs do matter a little bit, but in our view, the increase in STT, because the way our strategy is kind of structured, is extremely limited, probably to the tune of about, very guesstimate law is basically close to about 20 basis points in 1 year. So not much of an effect, but who would be largely affected is, I think, the so-called whole high frequency trading kind of basket or players, where this effect can be pretty substantial. So yes, there has been an impact to some quarters, but especially we've been able to kind of mitigate it well.
Are you noticing that the market in FNO, especially the derivative side of options on the index, have now more or less monopolized by HFTs and algos?
It's not about monopolized. I think one has to understand that the efficiencies of the market, the better pricing of the markets, is as a result of numerous participants kind of participating in the market, right? It makes the market more robust, in some sense. So it's not about one segment or the other segment or giving a preference to one or two. It's just that we need all the kind of participants in the market for the capital markets to grow and efficiencies to be created. And again, in line with the vision of the Honorable Prime Minister of being a developed economy by 2047, markets efficiencies is at the core. If you are able to have markets which are extremely efficient and people can easily come in and go without much of an impact, then overall longer term capital flows tend to kind of get encouraged. So not monopoly about one side of the whole segment. I think we need more and more broader participation across the participants.
Finally, is the best of rallies in gold and silver behind them?
The tough one, Sahil. I think, gold and silver, in our view, also kind of rallied because of the underlying geopolitical problems. In my view, if the geopolitical situation kind of calms down and we enter into a trade deal, or we have a visibility of trade deal between US India and US China, a bigger part of the demand, which has come from the central banks, may probably kind of get reduced, which means that if those events happen, then probably we may see an elongated period of sideways movement on these precious metals. So I would probably wait for gold and silver, or wait for these events to happen to take a constructive, to take a very sharp view.
Okay. Vaibhavji, my final question to you. You are a hedged player. It doesn't matter to you which side that market goes as long as it's volatile. You make money either way. But tell me, are you sleeping easier these days?
Oh, we have always been sleeping easier, Sahil. I think just because of the nature of the fund, what we are in, it doesn't matter for us which side of the market it very on it goes. Having said that, we all, are strong Indians who want to see our market flourish over a longer period of time. So we would really like, of course, we do have a bias of markets going up always. But to be very honest, from an objectivity standpoint, it doesn't matter.
I asked this question to a lot of our friends on the long side of passive portfolios. Their answers are pretty telling.
Indeed.
But I specifically thought of asking this to you because I knew you were fully hedged.
Yeah.
As always, Vaibhavji, what a pleasure. Thank you
Thank you very much.
Thank you for joining us and being providing such candid answers. Have a nice day.
Thank you. Thanks.
Okay. That, ladies and gentlemen, was Mr. Vaibhav Sanghvi, CEO of ASK Hedge Solutions. They are a HFT player in the market, and they make money on both sides of the equation. All they need is volatility. Thank you for watching. Please continue to be on Business Today Television. Have a nice day.
Hello and welcome. You are watching Business Today. I'm Neetu Chandra Sharma and this is Earnings Special. We will be looking at Glenmark Pharmaceuticals. Today, the company reported FY26 revenue of 16,983 crore rupees, up 27.5% year-on-year. During the year, the company also entered a licensing agreement with AbbVie for ISB 2001 and investigational therapy for cancer and autoimmune diseases. To discuss the company's performance and outlook, I have with me on the show Anurag Mantri, Executive Director, Global Chief Financial Officer, Glenmark Pharmaceuticals. Anurag, thank you so much for joining us and taking the time out. Pleasure to have you on the program. I would like to ask you, FY26 was an important year for Glenmark. When you look back, what would you describe as the company's most notable achievement during the year, and what were the growth drivers for this performance this time?
Thank you, Neetu. If you see FY26, as you mentioned, was actually a defining year for Glenmark. We had a lot of geopolitical turmoil in the year, and what we have seen across external factors. So despite that, business did reasonably well. But the defining moment for Glenmark was that AbbVie in-licensing deal with out-licensing deal with AbbVie on ISB 2001. That transaction validated our strength of our innovation platform, because that's a very critical, because that beat technology was then validated. So now what we are going forward is that we are moving on a validated innovation platform. We are one of the few pharma companies which has such a strong innovation led arm. So which will be continue to define the Glenmark as a differentiated thing, because beside the core business. So that was there. But other side, on the business side, if you see, we clocked a all around growth. So it's not that growth came from one geography. So India continued. So all our geographies continue to do well. India, and if you see at the H2 of the H2 of the financial year, which is more representative of our benchmark number, India continued to do well. India did almost 15% plus growth in H2. Our emerging market continued to show a strong traction in Q4. Europe showed a strong traction in Q4. US overall H2 it did well. It missed some of the target in Q4 because of the delayed approval of our fluticasone approvals and some of these supply chain related issues because of the last moment war thing. But I think overall US also continues to be a strong geography. So going forward, we are entering the 2027 with a strong balance sheet because we did a gross debt zero. We did a lot of working capital efficiencies program, which are now giving result and which will see more better results in FY27, our net working capital days. So we are entering with the FY27 with a strong all-round business presence across the geographies, a strong innovation portfolio, and a strong balance sheet. So that's a very critical for us. So it was clearly a defining year for Glenmark in FY26.
All right. So when you talk about entering into FY27, what are your expectations for FY27 for the next year? And which businesses and markets do you expect to be the key growth drivers for your company?
So FY27, as we entered the FY27, what we see, as I mentioned, that now all the businesses we have now entire infrastructure in place across all the markets. So we will see a growth coming from US because US we have got a good respiratory filing, the injectable filings, and which will continue to do well. Ryaltris in US we have launched our own as end-to-end commercialization. So and also the Monroe starting the production. So gradually it will all start adding up and then US will continue to do well. India is a strong franchisee for us which continues to beat the IPM growth and we expect the same to continue. We have launched Tevimbra, Brukinsa, GFB, Neb Smart. So we continue to launch the new products in the market and which continues to do well. So we will continue to strengthen our position in India. Europe, Winlevi, we launched in UK last year in FY26 and we are now got approval for EU launch. So that's going to be a strong thing and then we'll continue to see a broad-based growth in Europe. And emerging market is the one for focus for us where we have now built a strong feet on the ground. So across the market from MEA, LATAM, APEC, Russia, CIS, we'll see a growth coming across the market. We are in a very strong position in these market and we have a good branded lineup. We have done two in licensing deal, which is one for one Angry and Hanso, which is for Omlotinib will launch in this year. Then we will have a Tresta and Rezetec launched later on. So which will continue to do a strong branded presence. Ryaltris continues to be a strong brand for us across the markets. More than 50 countries we have launched and that will continue to be if you see $200 million we are targeting. Plus beside this, as once we get into the IGI pipeline because ISB 2001 is progressing and then once we launch these oncology products. So we'll continue to be a very strong branded oncology presence. So we are building with our brands. We have an innovation pipeline which will actually further fuel these brands in these markets.
So, all right, if I want to ask you about the US market, you said it has been an important market. Can you please walk us through that? How did the business perform in this particular market in FY26 and what are your expectations from the US business going forward and any product pipeline that you can share with us?
So as I mentioned, Neetu, FY26 was an important year for us in US as we strengthened the foundation for future growth. We received approval for key respiratory product, including generic Flovent 44, fluticasone nasal spray, which were commercialized toward end of the year. So practically we'll see FY27 contributing from these products because FY26 we could not have significant meaningful contribution from these products. And full year, as we also continue to expand our injectable portfolio through partnerships and manufacturing capabilities in Monroe. So looking ahead, we are expected to drive US growth to be driven by respiratory, injectable, planned FTF launches and progressive scaling of Ryaltris in the US market.
Okay, so Glenmark has been focusing, building its branded and specialty portfolio, as you have also mentioned. So, what role do you see the branded business playing in the company's next phase of growth? And do you have any medium-term targets for the segment going forward?
So, see, the branded business is a central to Glenmark 3.0 strategy. So, the strategy what we unveiled is the Glenmark 3.0, where we see the branded market by 2030, we will take it to 70%. We are well moving towards that journey. So, today, branded portfolio is 60% of our revenue, and we are well in place to take it next 4 years to by 2030 to 70%. We see this as being driven by continued growth in India, emerging market, Europe, along with increasing contribution from differentiated and specialty product across our three therapeutic area, which is respiratory, derma, and oncology. So I think branded, like as I mentioned, is that we see a Ryaltris we have made a Ryaltris as a very strong brand, and it will touch eventually the $200 million. Winlevi is another brand. India, we launched Tevimbra, Brukinsa. Omlotinib will launch in Indian emerging market. Then we will have a Tresta and Rezeteken launches. So we will continue to see across the broad-based brand. It's not dependent on one or two brands. And as once the ISB 2001 and other partnership goes, so we will see a good branded keep coming to our portfolio.
So when we want to speak about this AbbVie licensing agreement, as you said that it was one of the notable developments during FY26. So could you please also help us understand its impact on the year's performance and how investors should assess the progress of Glenmark's core business going forward in next 3 to 5 years?
So AbbVie transaction was undoubtedly a significant contributor for FY26 because in our reported performance, and moreover, it was an important validation for our innovation capabilities because it puts India on a global pharma innovation map, and it clearly shows that the cutting edge R&D innovation capabilities which Glenmark has. However, it's equally important to note that underlying business delivered a strong operational performance. So best thing is to look at the like-to-like comparison, to look at our H2 growth, where because every deal happened in H1 of FY26. So even in H2, we delivered a 15% revenue growth. We delivered a EBITDA margin of 21% plus. So that's how you should look at it, and that's what we are guiding, that from here we will get to a 17 to 18,000 crore of revenues in FY27, and the margin guidance is around 21 to 22%. So which is actually, if you see, put up a bridge from H2, it's very, and especially the kind of branded portfolio we have, the kind of broad-based presence we have across US, Europe, India and other emerging market, we see we'll continue to have a healthy momentum and meaningful progress on this. So that's how you should look at overall our performance.
All right, Anurag, thank you so much for joining us and speaking with Business Today and taking us through Glenmark's FY26 performance and outlook. We appreciate your time and look forward to speaking with you in the next quarter.
Thank you, Neetu.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is our special edition where we focus today on wrapping up the Q4 earnings season, giving you a sense of how this earnings season has panned out in terms of comparison to the earlier quarters. This has been the last quarter where a lot of sectoral action has been seen in terms of recovery on the top line, on the bottom line has been seen. We will also delve deeper to try and understand the key sectoral trends, the demand trajectory entries that we witnessed, the corporate profitability as to how it has moved in, and we will try and decode in terms of key sectors where the outperformance and underperformance has been seen. Let's welcome our special guest on board. We have Mr. Abhishek Basumalik joining in to decode the earnings wrapping season for Q4 is concerned. Thank you so much, Abhishek, for taking the time out for this conversation. First up, a quick overall outlook on how things have panned out in Q4, largely when we compare to the previous quarters for FY26, and has there been a shift in terms of overall performance of the earnings of India Inc.?
So I think the results actually have been quite good, much better than what probably most people expected, and that's what I've been saying for the last couple of weeks, that if you look at the median PAT growth across all companies, that's come in very strongly, above 1,000 crores market cap. Median PAT growth is about 20%, which is actually phenomenal given the circumstances and given the last few quarters that we've seen. So overall, I think a very, very good set of numbers from Corporate Inc. This time. Q1, we will probably expect some amount of, margin compression because of the bulk of the effect of the Iran-US war is going to come through in the first quarter. So, April, May is where we sort of saw the problems. So,
Absolutely.
Quarter one, I think we should have, we should moderate our expectations. But overall, pretty good numbers.
Good numbers is what we have seen in Q4 across the board. Of course, Q1 is something that will give us a greater picture of what has been the true impact of the West Asia war. But it will also show us a lot of, retaliatory measures that have been taken for a lot of companies, like, the FMCG companies, the paint companies at large, car companies at large. They have all started to announce price hikes as an impact of the cost inflation that they have witnessed because of the war. So both of those aspects will also come in Q1 and Q2 to understand what has been the true impact of the war and how much have they mitigated by looking at these retaliatory measures. That's something that we will focus on a little later. But let's try and decode what happened in Q4 in terms of where the outperformance and the underperformance was seen. Have you seen or have you noticed some of the sectors that have really led the charge this time around in Q4, which have given you a sense of surprise, better than estimate kind of numbers, and across the board? And which have those sectors been, Abhishek?
So I think metals have performed really well. Real estate has performed very well. Manufacturing has done very well. So these have performed very well on the positive side, much better probably than my expectations. Defense, contrary to expectations, has not done as well as expected. So there has been some moderation in defense numbers. But overall, again, like I said before, overall very good numbers across the board.
Absolutely. So those have been the key sectors that clear outperformance has been seen. We'll also talk about the underperformance. IT, does it step out as the clear underperformer this time? Have there been other sectors also?
Actually, if you see, IT has not performed that badly. Especially mid-cap IT companies' results were quite encouraging. It was, not as bad as people were thinking it to be.
Okay, so let's also talk about, in terms of where other than IT sector, the underperformance was seen. Where do you see continuing pain from here on as well?
I think FMCG and overall consumption, there is going to be a challenge because obviously a lot of money, household budget is getting spent on, food and fuel. And if we see an El Nino or a super El Nino that has been said, even if we don't see a super El Nino, summers have increasingly become more and more scorching. So overall productivity goes down. So people at the lower, households at the lower end of the spectrum, they tend to have moderated incomes during these months because physical labor becomes a challenge. So, next 3 months, FMCG consumption, etc., especially which is targeted at the mass market, that might, suffer to an extent. Obviously, any sector where there is over dependence on fuel, that would, come under a fair bit of pressure. Export-oriented sectors have done well, likely to continue to do well. Defensive sectors like pharma, healthcare, hospitals have done well, expected to continue to do well. Interestingly, I think manufacturing is where the biggest change that we are seeing gradually. So across board, if you look at, and when I say manufacturing, so manufacturing plus power, cement, steel, all of that put together, that's where the actual game is. And unfortunately, or fortunately, depending on how you look at it, Nifty is underweight all these sectors where the actual numbers are getting better and where where the actual growth is coming from. Nifty is still overweight IT banking. So increasingly seeing Nifty being range bound, whereas mid cap, small caps, sort of driving the growth. And I think that will be the theme for probably the rest of the year.
Okay, that's a very interesting take. What we've seen in Q4, viewers, is that mid caps have truly outperformed large caps. They've been the true drivers of this cycle, as Mr. Basmalik has also pointed out. We've seen at least 67% of the companies reporting positive earnings growth within the mid cap space, compared to about 55% of outperformance in the positive performance in small caps, and 49% of positive earnings report that we've seen in large caps this time around. So mid-sized firms have capitalized better on niche domestic volume growth, on operating leverage as well. That's been the clear trend, and that's where Mr. Basu Malik expects that there could be continued outperformance going forward from here as well. But let's talk about some of the sectors that you've alluded to. Let's talk about banking and BFSI. Of course, what we've seen this quarter was led by major updates from banks like SBI, ICICI Bank, double-digit credit growth, asset quality dramatically improving, NPAs hitting multi-year lows as well. But overall, going forward from here, are you going to be seeing a larger than ever pressure because of the external crisis on the banking and the financial space? Is that going to be overshadowing the domestic outperformance that we've been seeing from some of these banks?
So two things. One is, if I look at, again, the entire banking sector, and if I look at, say, for example, just the Nifty Bank, earnings growth has actually not been great. If you look at the overall, if I remember correctly, it's somewhere around 9% PAT growth, right? So which is not something great, because most of the larger banks have come around that 8, 10, 11% growth. Now, if you look at the overall situation with inflation, etc., the possibility that RBI will add liquidity measures or may be forced to hike rates is not going to be going in favor of especially the larger banks. What I'm slightly more positive on is the MFIs. Right now, the MFIs seem to be, sort of picking up. Last 1.5 years have not been very good for them, but at least last 2 quarters, we're starting to see some growth. We're seeing NPAs going down substantially. So that's one area that we should look at. But again, the challenge of higher interest rates, if they come through, is going to be there. So that's something that we have to sort of evaluate. So not something that you can say, that you can be blanketly bullish on right now.
And since you also did allude to IT sector, saying that the mid-cap sector definitely outperformed in the IT space, let's try and understand what's happening here. There was already, we went into Q4 earnings of IT sector with very low expectations, especially because of the large underperformance that was already being seen. Starting off with the large cap companies reporting bleak outlook and guidance, some of them missing their guidance for FY26. That disturbed the entire sentiment. But rightly pointed out by you that when the mid-cap sector started to perform and started to report their numbers, that's when the sentiment started to change. And what we are looking at in the markets over the last couple of weeks is that there is a growing sentiment of people purchasing the beaten down IT sector at this point in time. How are you looking at what's transpired in Q4 earnings? What could be in the outlook and how should investors be going forward?
So again, I think, like I said, if you look at the numbers, say from companies like a Coforge, a Persistent, and Oracle Financial, they have done far better than the top 4-5 companies like Infosys and TCS and Wipro, HCL Tech, right? Where Wipro, HCL Tech have struggled to show, TCS also, they've struggled to show, double-digit growth. If you look at these, Coforge, Persistent, etc., where they've done pretty good numbers, over 30% kind of growth at the PAT level. So mid-tier IT looks to be in a much better position today than the larger ones.
And what about PSU versus private banks? How would you look at those?
PSU banks, again, obviously, numbers for some of them have been quite good, right? But the bigger problem is within the PSU bank space also, there's a lot of divergence. Yeah. So banks like, Bank of Maharashtra, Indian Overseas Bank, these have done really well. Whereas the really large ones like State Bank of India, Canara Bank, Bank of Baroda, Union Bank, PNB, they have sort of done between 0 to 10-12% kind of growth. So that is where the dichotomy is. Again, there the smaller ones, the mid-cap banks in PSUs have done significantly better compared to the larger ones.
Okay, let's also focus on the pharma sector as a whole. How have you seen the pharma sector report its numbers in Q4? Large caps vis-a-vis mid caps there. Of course, we have CDMO plays. We also have the healthcare segment plays vis-a-vis the frontline OEMs. How would you look at what's really transpired in Q4? What impressed you? We're also seeing an increased amount of retail investors' interest in the pharma stocks over the last couple of months. The stocks have been gaining a lot of traction. What do you think lies ahead here for FY27 too?
I think pharma continues to do well. You have to take a, company specific view because it depends on the molecules that they're doing or the drugs that they're doing, which markets they are targeting, whether it's more of generics versus, what kind of therapy, whether it's, chronic versus acute, which kind of markets, US, non-US, so domestic. So a lot of these, make difference when you look at pharma. But again, if you look at the numbers, extremely good numbers coming in from a lot of companies. You look at, fairly large companies like Lupin, fantastic growth coming in. You look at, Glenmark, again, quite good numbers. Mankind Pharma, domestic focused, very good numbers. Zydus, Laurus, all of these have come out with fairly good numbers. So overall, I think pharma looks to be, in good shape. Again, you have, like I said, you have to take a stock specific call because there are companies like Dr. Reddy's, which has not done very well, and it's very, very large company, right? Alchem Lab, again, very good, very large company, lackluster results. So you have to sort of take your pick on what kind of company you're looking at.
Absolutely. Any key numbers that impressed you specifically, or companies that you are focusing on specifically? Is it healthcare? Is it OEMs? Or is it CDMO? What are you focusing on within this entire pack?
I think the entire pack I'm interested. I've been, pharma. We've been invested in pharma throughout. I mean, I keep some companies always in the portfolio because some pharma companies continue to sort of do well, at most of the times. I liked a lot of companies. Like I said, I mean, Lupin has done really well. Ipca has done well. Glenmark, even Apollo Hospitals, in the hospital space, Apollo, Fortis, Max, all of them have done, reasonably well. So overall, pretty positive on the sector.
Okay, got that. Let's also now focus on the auto space at large to see how they have reported the numbers. Of course, some of them stood out in terms of performance this time. We've seen even the largest car maker come out with strong numbers. Maruti Suzuki crossing 52,463 crores in revenue. We've seen M&M hit about 54,984 crore rupees of revenue as well. High passenger vehicle volume was seen, although that was offset by the rising material costs or the raw material costs that the companies have seen. Margins definitely came under some pressure. There was also an impact on the entry level names. We're also getting all of these numbers now on the monthly basis for May today. Bajaj Auto, M&M have reported their numbers. Exports are picking up for a lot of them as well. Let's try and decode what's happening in the auto space. Last couple of months, or let's talk about the last quarter and the quarter before that, the entire focus was on GST-led benefits, leading to a lot of volume growth for these companies, a surge in demand. And suddenly things have changed because of the West Asia crisis and the cost inflation that is forcing all these companies now to resort to multiple rounds of price hikes that they have taken already and they are about to continue to take as well. And that's what the trend is emerging. How would you look at the auto space?
I think auto space, we're seeing initial signs of the euphoria sort of slowing down. Even within the auto space, I think two-wheelers have continued to do well. Look at the numbers of Bajaj Auto, fantastic numbers. Hero MotoCorp has done well. TVS Motors has done well. Compared to that, the passenger vehicle companies, especially, Maruti, you mentioned, Maruti has shown very good top line growth, but struggled with the bottom line because, costs gone up. Compared to that, probably Mahindra has done well, but again, Mahindra it's not a pure auto company. But overall, I think if I look at how the passenger car segment is going, you have Mahindras which are picking up, Tata is doing well. Especially now with the focus for people buying EVs. I think, Tata Motors is and MG. So, these companies likely to do well. Two-wheelers continues to be a sweet spot because the migration from petrol-based motorcycles and scooters and bikes to EV ones is actually happening pretty fast. So, we can see that in the numbers for all the companies, whether listed, unlisted. You can see those getting reflected. So that's the space I would sort of be more keen on.
Okay, let's also talk about commodities. You were also talking about the fuel sector initially, so the oil and gas space, the energy sector at large. How would you look at what's happening here? Especially this has been in the thickest of action because of what's transpired on the global crude oil prices. How are you looking at this entire energy space and what is the outlook? How has it performed in Q4 and what's the outlook?
Obviously, performance has been quite good for most of the oil and gas companies. ONGC has done well, IOCL, HPCL, all of them have done well, Oil India. But overall, I think this is a space which is very, very dependent on global macros, on policy decisions. So not something that I am very comfortable always, investing because it's too dependent on, or I mean, very little control for the company or the management to do anything. It's they're too much at the mercy of externalities. So that's the problem that I have always with oil and gas. If I look at, say, the energy overall space, power, if I include that, then fantastic results from most companies in that entire power, value chain, whether they are transformers, whether they are cable companies, whether they are generation companies, entire T&D, companies like BHEL, G Vernova, Hitachi, very, very good numbers.
Absolutely. So in the end, Abhishek ji, if I have to ask you for what lies ahead, you already talked about how Q1, you will be a little cautious looking at what the major impact will come across the sectors. But despite that, where do you see the silver lining? If an investor has the earnings focus led investment strategies, what is it that they should focus on for Q1, Q2, and where should they completely avoid looking at this point?
See, I think, the safer areas to look at right now would be pharma, would be metals, power, manufacturing, capital goods. Pretty much these areas, are what I will be looking at. Even
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers your specific stock queries on the program. In case you're here for the first time, the WhatsApp number is on your screen. Send me your questions here along with your name, location and your contact details as well, and I'll be happy to get that addressed with our top guest who will be joining in on the program. In case you're here watching our show on our YouTube channel Business Today, then go to Daily Calls Live, use the comment section there to send me your questions. I'll be happy to pick up those questions as well for our guest. Meanwhile, let's look at the markets. 23,415, just flat on the Nifty absolutely at this point in time. IT, metals, oil and gas have the ones that have exerted some pressure, but we have real estate, PSU banks, financial services as the pockets that are showing you some strength, along with media stocks too at this point in time. But let's quickly welcome our guest on board. We have Pradeep Haldar joining in on the program, a favorite on Daily Calls edition. Welcome to you, Pradeep. Good to have you with us on this special show. It's Friday and good to have you on Fridays as always. But what is your suggestion on the markets right now? How are the markets looking? What is the current sentiment looking like? So many important statements have come in today, ranging from what is the government done on bringing foreign capital to India by reducing taxes. Now, what has the RBI has also done is widened the scope of investments in government securities for foreign investors. So, all of these measures are aimed at bringing back foreign capital, which has been so far evading our country. Looking at all of this, do you think the markets can now strengthen from here? What is your suggestion?
या गुड आफ्टरनून मैम आपको एंड बिजनेस टुडे के सारे ऑडियंस को। एक स्टैंडर्ड डिस्क्लेमर रहेगा, जितने भी स्टॉक्स एंड इंडेक्स
Sure.
को लेकर मैं बात करने वाला हूँ, कोई भी स्टॉक्स एंड इंडेक्स में हमारा कुछ भी पोजीशन नहीं रहता है। नो कॉन्फ्लिक्ट ऑफ इंटरेस्ट, रजिस्ट्रेशन ग्रांटेड बाय सेबी, मेंबरशिप ऑफ बेसिस सर्टिफिकेशन फ्रॉम एनआईएसएम, नो वे गारंटी परफॉर्मेंस ऑफ द इंटरमीडिएरी और प्रोवाइड एनी एश्योरेंस ऑफ रिटर्न टू द इन्वेस्टर्स। यस, थैंक यू फॉर हैविंग मी ऑन योर शो। एंड मुझे लगता है कि जिस तरीके का मार्केट का सिचुएशन अभी है, ऑलमोस्ट आप देखेंगे 23,400 पे स्ट्रगल कर रहा है। लास्ट 2 हफ्ते पे, लास्ट 2-3 हफ्ता ऐसा हुआ है कि 23,260 और एक बार 23,150 के लेवल के आसपास, मोटा मोटा बोला जाए तो 23,200 के आसपास एक सपोर्ट है। एंड 23,700, 23,650 मुझे लगता है कि निफ्टी का एक रेंज है, इस रेंज के अंदर ही रहने वाला है। और अभी जिस तरीके से आरबीआई का पॉलिसी भी सामने आया, ऑलमोस्ट न्यूट्रल व्यू है, लेकिन इन्फ्लेशन को लेके कंसर्न है गवर्नर, एंड गवर्नर ने ये भी बोला है कि गवर्नर भी अभी थोड़ा न्यूट्रल मोड पे है। कमिंग फ्यूचर का डेटा के ऊपर डिपेंड कर रहा है। एंड ग्रोथ, जीडीपी ग्रोथ भी थोड़ा 6.9 से लेके 6.6 आया है। सो कहीं ना कहीं यहाँ पे भी थोड़ा बहुत कंसर्न, सो न्यूट्रल व्यू रहेगा। एंड जिस तरीके से हम लोगों ने देखा है कि गवर्नमेंट बॉन्ड्स के ऊपर टैक्स फ्री, गवर्नमेंट सिक्योरिटीज, गवर्नमेंट बॉन्ड के ऊपर एफआईआई के लिए टैक्स फ्री होने वाला है। सो कहीं ना कहीं ये थोड़ा एक्साइटिंग है। एंड आप देखेंगे कुछ टाइम पहले, आज से 2 हफ्ता पहले ही सेबी का एक सर्कुलर आया था बॉन्ड को लेके स्पेसिफिक, क्योंकि इंडियन मार्केट में बॉन्ड को लेके उतना ज्यादा अवेयरनेस नहीं है। सो अभी कहीं ना कहीं गवर्नमेंट थोड़ा ज्यादा बॉन्ड को फोकस कर रहा है, एंड इसी वजह से जो सिक्योरिटीज है इनके ऊपर टैक्सेशंस में रिड्यूस देखने को मिल रहा है। ये थोड़ा मार्केट को बूस्ट करने वाला है कमिंग फ्यूचर। बट ये मार्केट को कहीं ना कहीं पता था, मार्केट ज्यादा मुझे लगता है कि एक्साइट करेगा अगर एलटीसीजी, एसटीसीजी टैक्स में इक्विटी मार्केट में कुछ होता है, तो फिर जाके कहीं ना कहीं ज्यादा एक्साइटिंग। अगर रिटेलर्स के लिए कुछ हो जाता है, एफआईआई के लिए कुछ हो जाता है, तो मुझे लगता है कि ज्यादा मार्केट यहाँ पे एक्साइटिंग होने वाला है। विक्स भी अगर हम देखेंगे कहीं ना कहीं हल्का हो चुका है, लेकिन जिस तरीके से सिचुएशंस यहाँ पे है, मुझे लगता है कि मार्केट अभी नेक्स्ट 2-4 दिन 5 दिन रेंज बाउंड ही रहने वाला है। अगर 23,200 इसके नीचे और 23,700 इसके ऊपर आता है तो न्यू व्यू बनेगा। अदरवाइज मुझे लगता है कि मार्केट इस रेंज के अंदर ही रहने वाला है। जी
ओके, रेंज बाउंड अभी फिलहाल के लिए तो बाजार में ट्रेड लगेगा। हालांकि जो सिचुएशंस है वो इम्प्रूव हो रही हैं, ग्लोबल इम्पैक्ट जो है वो कम हो रहा है, डेफिनेटली सेंटिमेंट्स इम्प्रूव होने के आसार हैं, लेकिन फिलहाल बाजार की ट्रैजेक्टरी रेंज में ही रह सकती है अगले हफ्ते के लिए भी। चलिए प्रदीप जी, इसी के साथ शुरुआत करते हैं सवालों के साथ। बहुत सारे दर्शक हमारे साथ जुड़ चुके हैं आपसे अपने सवाल पूछने के लिए। सबसे पहला हमारे पास सवाल आया है, ये सवाल है सुमेध लक्खर का, और ये लिखते हैं, थैंक यू फॉर दिस डेली कॉल्स एडिशन, दिस रियली हेल्पफुल शो फॉर मी, एंड एज आई एम एबल टू गेट द राइट गाइडेंस एंड ऑल्सो गुड स्टॉक, सो थैंक यू सो मच टू द एंटायर टीम ऑफ बिजनेस टुडे. प्लीज कंटिन्यू दिस शो, एंड आई हैव स्टार्टेड टू वॉच दिस लास्ट month and I am now a regular viewer. Thank you so much, Sumit, for writing in such wonderful words for daily calls. I'm happy that you're now watching it regularly and are getting all the right guidance that our top market experts give you on the show. Let's take your question. Today you're looking for a fresh investment suggestion on REC stock and on NBCC stock as well. Are both these stocks good to buy at the current levels, and what stop loss and target can you expect here? Fine. So from the power space, REC today it's up at 3%, and NBCC again from the PSU basket. Your suggestion here, Pradeep ji?
जी मुझे लगता है कि उनको बिल्कुल बाय करके जाना चाहिए। आरईसी का ऑल्सो टारगेट मुझे लगता है कि 365 से 370 शॉर्ट टाइम में आना चाहिए। एक स्टॉप लॉस मैं यहाँ पे 328 के लेवल पे मेंटेन करना पसंद करूंगा। एनबीसीसी 124 125 टारगेट यहाँ पे होना चाहिए। लास्ट टाइम हम लोगों ने देखा था एक ट्रिपल टॉप बना है वीकली चार्ट पे 128 130 के लेवल पे। सो 130 पे एक रेजिस्टेंस है, न्यू ब्रेकआउट पॉसिबल है 130 एंड अबव, लेकिन शॉर्ट टाइम में जिस तरीके से बेस बना है, एक बार 120 124 तक आने का हाई पॉसिबिलिटीज है। एक स्टॉप लॉस यहाँ पे 99.50 100x साइकोलॉजिकल लेवल है, यहाँ पे मेंटेन उनको रखना चाहिए। दोनों काउंटर ही बाय करने का सलाह रहेगा, कोई प्रॉब्लम नहीं है, फ्रेश इन्वेस्टमेंट हम यहाँ पे करके जा सकते हैं।
ओके, नेक्स्ट क्वेरी भी ले लेते हैं। ये सवाल हमारे पास आया है साई का हैदराबाद से। भारत इलेक्ट्रॉनिक्स पर पूछना चाहते हैं आपसे, एक मिड टर्म इन्वेस्टर होने के नाते क्या करना चाहिए? 440 की खरीद है इनकी।
यू शुड डेफिनेटली होल्ड योर पोजिशन, बिकॉज आप देखेंगे ऑलमोस्ट 2,97,000 करोड़ के आसपास का, अप्रॉक्स 3 लाख करोड़ के आसपास का मार्केट कैप है, एंड पैड भी आप देखेंगे 6,000 के ऊपर का प्रॉफिट है। स्टॉक का भी पी जो प्राइस टू अर्निंग रेशियो है 49 के आसपास है, इंडस्ट्री का पी अभी 63 चल रहा है। तो कंपेयर करके देखेंगे इंडस्ट्री का जो पी है उससे भी स्टॉक का पी अभी कम है, और इनके पास ऑर्डर बुक बहुत ही स्ट्रांग है, एंड डिफेंस में वन ऑफ द मोस्ट प्रोमिनेंट स्टॉक है। लास्ट इतना प्रॉब्लम हो गया मार्केट में, 385 के नीचे कभी नहीं आया, 390 से 395 इज अ वैल्यू जोन। आप थोड़ा वेट करके रखिए, अगर कभी भी 395 390 के लेवल पे आता है, दैट इज द अगेन अपॉर्चुनिटी आपके बाइंग, आप या तो एवरेजिंग आप फिर भी करके जा सकते हैं। टारगेट आएगा यहाँ पे 460, उसके बाद 525 शॉर्ट टाइम पे आपको आते हुए दिखाई देंगे।
ठीक है। नेक्स्ट क्वेश्चन है सत्यन का, ये लिखते हैं, थैंक यू प्रदीप सर फॉर योर कॉल ऑन शिल्पा मेडिकेयर। आई बॉट दिस स्टॉक एट 499 एज recommended by you. Now I want to know what is your fresh view on this stock and a fresh target if you can suggest me.
या आई थिंक लास्ट वीक ही हमने कॉल दिया था शिल्पा मेट का, एंड अभी 593 होल्ड रखना चाहिए। 650 700 ऑन द वे, बहुत जल्दी आपको आते हुए दिखाई देंगे। स्टॉप लॉस
क्या
आप
बात।
आपका कॉस्ट टू कॉस्ट के आसपास मेंटेन कीजिए।
तो चलिए सत्यन जी, आपको एक बहुत ही बढ़िया स्टॉक रिकमेंडेशन जो दी गई थी उसके रिटर्न्स बहुत ही जल्द आपको मिलते हुए नजर आ रहे हैं। पिछले ही हफ्ते आपको प्रदीप जी ने बताया आपने 500 के लेवल पर खरीदा और ऑलरेडी 40 रुपए प्रति शेयर के आसपास का आपको गेन हो रहा है शेयर में। 650 700 तक के भी टारगेट्स फोरसी करते हैं, तो बने रहिए इस पोजीशन पर और लगातार उनके साथ आप बने रहिए डेली कॉल्स पर भी। नेक्स्ट क्वेश्चन की तरफ बढ़ते हैं। विकास है, लिखते हैं, हेलो मैम, कैन यू प्लीज आस्क प्रदीप सर टू एडवाइस मी ऑन एनी अपॉर्चुनिटी इन मुंजाल ऑटो? डू यू सी ऑटो एंसिलरी स्टॉक्स नाउ परफॉर्मिंग, एंड मुंजाल ऑटो, व्हाट इज योर फ्रेश व्यू हियर?
या मुंजाल ऑटो में भी पॉसिबिलिटीज है, अभी 10% तो आज ऊपर है, सो यहाँ पे तो फ्रेश बाई करने का सलाह नहीं रहेगा अभी। थोड़ा मुझे अभी लगता है कि आपको अवॉइड करके जाना चाहिए, एंड मेक श्योर देखिए 960 से 7 ऑलमोस्ट 1,000 करोड़ का भी मार्केट कैप नहीं है। सो ये जो 10% का आप उछाल देख रहे हो, अभी 20% भी इमीडिएट लेवल पे नीचे आ सकता है अगर ज्यादा सेलिंग प्रेशर यहाँ पे आ गया। सो बेटर यू शुड फोकस ऑन बजाज ऑटो, आप फोकस कीजिए। अशोक लीलैंड जैसे स्टॉक्स मुझे लगता है कि ये वैल्यू जोन में है। मारुति का रिसेंटली एक स्टेटमेंट आया था, कहीं ना कहीं मारुति भी मुझे अट्रैक्टिव लग रहा है। थोड़ा मुंजाल ऑटो टाइप्स का स्टॉक, दिस इज द नॉट राइट टाइम। ये आपको पीक करना चाहिए 26,500 के ऊपर। जब मार्केट हो जाएगा, मतलब मार्केट अपने ऑल टाइम हाई पीक के तरफ होगा, दैट टाइम स्मॉल कैप वो चलेगा, लेकिन अभी दिस इज द नॉट राइट टाइम। आप 967 करोड़ के आसपास का मार्केट कैप है, तो बहुत ही छोटा कंपनी है, एक बार आप दूसरे स्टॉक्स को पिक कीजिए।
Okay. Dr. Shabir hai, likhte hain, hi Sakshi, good day to you also. He says, thank you for all the good advice your channel is giving to retail investors like us. Thank you so much for your warm words. He says, I want to know about Tanla platforms from Pradeep sir today. I have this stock in my portfolio at 731. What should I do now?
देखिए सिचुएशंस तो बहुत ही यहाँ पे खराब ही लग रहा है मुझे, एंड कहीं ना कहीं स्ट्रक्चर इज सो वीक, एंड लगातार देखेंगे 1200 से नीचे आ रहा है। सो मैं यहाँ पे रिकमेंड नहीं करूंगा आपको होल्ड करना। मैक्स टू मैक्स आपको 460 के आसपास का एक स्टॉप लॉस आप मेंटेन कीजिए। फ्रेश बाइंग एवरेजिंग बिल्कुल नहीं करना चाहिए, या तो कोई भी उछाल मिले उस उछाल में आपको सेल ऑन राइज व्यू होना चाहिए, एग्जिट करने का व्यू बनाइए, और अभी के लिए एक 460 का एक स्टॉप लॉस मेंटेन करके रखिए।
ठीक है। नेक्स्ट सवाल लेते हैं। ये सवाल हमारे पास आया जीडी राव का, आंध्रा से। ही सेज, हाय साक्षी, कुड यू प्लीज रिक्वेस्ट प्रदीप सर टू एडवाइज मी ऑन इंडियन होटल्स एंड लेमन ट्री होटल्स एंड इवन आईटीसी होटल्स, which one is better among all of them for future? I want to buy for 1 year. So within the hotel space, Pradeep, Indian hotels, lemon tree hotels, ITC hotels, or even Samhi hotels, among all of them, which one would you currently prefer for a 1 year time frame? What can you advise, Mr. Rao?
देखिए मैं तो थोड़ा लार्ज कैप के साथ ही जाना पसंद करूंगा। अगर आप देखेंगे इंडियन होटल एंड आईटीसी होटल्स का मार्केट कैप थोड़ा ज़्यादा है। इंडियन होटल ऑलमोस्ट सबसे बड़ा मार्केट कैप को लेके बैठा है, अभी 658 659 के आसपास है, लेकिन स्ट्रक्चर ऑलमोस्ट सेम है। अगर हम देखेंगे सामी होटल का प्राइस अभी ऑलमोस्ट 165 के लेवल पे चल रहा है, तो नो डाउट एक डबल बॉटम वीकली चार्ट में तो है, लेकिन यहाँ पे अवॉइड करने का सलाह रहेगा। नेक्स्ट अगर आईटीसी होटल में देखना चाहूंगा, आईटीसी होटल का प्राइस अभी 153 चल रहा है, वैल्यू जोन में है, लेकिन यहाँ पे बाइंग नहीं आ रहा है। सो न्यू अगर न्यू फ्रेश बायर्स नहीं आएंगे ना, तो स्टॉक यहाँ से फ्रेश रैली नहीं मिलेगा। तो आईटीसी होटल भी मैं एक बार अवॉइड करना पसंद करूंगा, लेमन ट्री ओपन करूंगा। लेमन ट्री 109 एंड 1110, 110 के आसपास का भी चल रहा है। कोविड के बाद ना एक तरफा रैली हो गया, क्योंकि कोविड के उस टाइम पे एक रीजन था, लोग घर में बंद थे। उसके बाद एक तरफा रैली सारे स्टॉक्स पे हुआ है, हम लोगों ने देखा है। मैं प्रेफर करूंगा वन एंड ओनली इंडियन होटल, एंड अभी 658 के लेवल पे चल रहा है। मैं बोलूंगा यहाँ पे अगर आप फ्रेश इन्वेस्टमेंट करने के बारे में सोच रहे हो तो अभी नहीं, थोड़ा वेट करके जाइए, पहले ब्रेकआउट आने दीजिए, मोमेंटम आने दीजिए एंड बेस कंफर्मेशन होने दीजिए, तब जाके आपको ज्यादा टाइम नहीं लगेगा। अदरवाइज आप इन्वेस्ट करेंगे, आप डेली पूछते रहेंगे, एनालिस्ट आके आंसर अपना आंसर देते रहेगा, क्योंकि यहाँ पे कहीं ना कहीं अभी भी लिक्विडिटी का थोड़ा बहुत मुझे लगता है कि सेक्टर में इशू है। अभी आप थोड़ा एनर्जी, पावर, थोड़ा फार्मा में फोकस कर लीजिए आप, तो मुझे लगता है कि थोड़ा डिफेंस भी अभी चल रहा है, यहाँ पे थोड़ा फोकस कर लीजिए। कमिंग फ्यूचर सेमीकंडक्टर, डेटा का एंड डेटा सेंटर का होने वाला है, यहाँ पे आप फोकस कीजिए। ईवी का होने वाला है, यहाँ पे फोकस कीजिए। होटल थोड़ा ओल्ड कंसेप्ट हो चुका है, इट्स लाइक सिमिलर लाइक रेलवे, तो मैं थोड़ा अभी अवॉइड करना पसंद करूंगा। लेकिन अगर रहना है किसी को, सो इंडियन होटल प्रेफर रहेगा।
Okay, got that. I hope that this has helped you out understand the key, advice that has been shared with you. Let's take the next question. This one is from Bhanumati from Vizag. He says, I'm a big fan of your show. Thank you so much, dear Bhanumati. She also says, I want to know about two potential stocks. Power storage and distribution sector is what I'm looking at. If you could share with me any key stock from this space for next 1 year time frame, and the buying price also, if you could advise. So she's looking at a power space, power storage, power distribution. Any suggestion from this space from your side, Pradeep, to her for 1 year?
ओवरऑल देखेंगे तो वारी एनर्जीज एक स्टॉक है,
Very
और
energy.
सेकेंड मुझे लगता है कि एक बार अगर हम टाटा पावर भी देखेंगे पावर में से, तो बढ़िया लगता है। और सेकेंड और एक स्टॉक है, वो है जेएसडब्ल्यू एनर्जी। जेएसडब्ल्यू एनर्जी का चार्ट बहुत ही अट्रैक्टिव है। सो जेएसडब्ल्यू एनर्जी अगर हम देखेंगे तो करेंट जोन से वैल्यूएबल पोजीशन में भी है। 680 से 700 का टारगेट मुझे लगता है कि आपको कमिंग सून आते हुए दिखाई देंगे। स्टॉप लॉस यहाँ पे 515, 515 के लेवल पे मेंटेन करके जाना चाहिए, एंड बिल्कुल आप बाई करके जा सकते हैं। और एक जो स्टॉक रहेगा वो है बेसिकली पावर ग्रिड। अभी अगर हम देखेंगे ऑलमोस्ट 285 के लेवल पे चल रहा है, एक स्टॉप लॉस 268 के लेवल पे मेंटेन करके जाना चाहिए।
Okay, got that. Let's take the next query. This one is from Aarti Jain, who says, I want to know, Pradeep sir, can I make any fresh investment in NMDC? What would you advise?
एनएमडीसी, एनएमडीसी 92 के आसपास चल रहा है, मेक और ब्रेक जोन के आसपास है, मतलब 94 95 एक एंट्री लेने का टाइम है। लेकिन 97 98 में ना ऑलमोस्ट मैं देख पा रहा हूँ 15 साल का एक रेसिस्टेंस है। अगर आप मंथली चार्ट पे जाके देखेंगे, 15 साल पहले भी एक बार सक्सेसफुली क्लोजिंग नहीं हो पाया था 97 98, तो 15 साल पहले जो हो नहीं पाया, तो अभी मैं एक बार वेट करना पसंद करूंगा। यहाँ पे 97 अगर क्रॉस हो जाता है ना, तो फिर एक बार यहाँ पे 135 से 140 का मूव यहाँ पे पॉसिबल है। अभी भी अगर बाई करके आप जाते हो तो 86 का रहेगा स्टॉप लॉस, होल्ड करने का सलाह रहेगा, लेकिन मेरा प्रेफरेंस रहेगा अबव 97 ही आप बाई कीजिए।
Okay, got that. I hope that this has helped you. We have Rishikesh asking the next query. This one is on HFCL, Pradeep. And Rishikesh has bought the stock at 185, has 1500 shares. But now he says that I'm feeling a little bit of panic. Should I hold or sell this stock? I entered for 1 year, but the price is decreasing fast. So what should I do? There was a time when this stock was constantly rising, and you bought it at 185. Currently, you are still holding on to profits. The stock is down by 5% today. Is there a thing for him to worry about?
साक्षी मैम, यहाँ पे क्या है ना, एक लाइफ का फिलोसफी है कि जो आज जितना कम टाइम में ऊपर जाता है ना, वो उसका ऊपर से गिरने का चांसेस बहुत हाई रहता है। अब द कंसर्न इज एचएफसीएल, आप देखेंगे हम लोगों ने 70 80 100 110, मैंने मैक्स टू मैक्स मैंने प्रॉफिट, मुझे जितना याद आ रहा है हमने प्रॉफिट बुक मैंने भी कॉल दिया था 145, उसके बाद मैं नहीं हूँ। अब 2-3 दिन पहले भी किसी ने मुझे पूछा कि क्या करना चाहिए, उस टाइम पे 200 के ऊपर था। मैंने बोला कि मैं तो इंटरेस्टेड अभी नहीं हूँ, क्योंकि इतना ज्यादा आप देखेंगे आरएसआई वीकली पे इतना हाई होके रखा है, और कहीं ना कहीं अभी लोअर सर्किट में है, आपको बेचने का भी मौका नहीं मिलेगा। और यहाँ से आई कैन अंडरस्टैंड कि पैनिक अभी आप सिचुएशन हो रहा है इन्वेस्टर्स के लिए, जो भी अभी होल्ड करके आप जा रहे हो, लेकिन वो एक बहुत बढ़िया डायलॉग है ना कि रणभूमि में युद्ध हो उससे पहले मनभूमि में खेला जाता है। तो बेसिकली पर्टिकुलर एक स्टॉक के लिए ना ये अप्लाइड है। ये पहले से लग रहा था ये नीचे आ जाएगा, क्योंकि इतना पॉसिबल ही नहीं है। अब देखिए 80 से स्टार्ट हुआ, अगर मैं 200 किलोमीटर स्पीड से पर आवर ड्राइव करूंगा तो मुझे तो एक्सीडेंट होना ही है। तो पर्टिकुलर स्टॉक के साथ भी ऐसा हुआ है। तो इसीलिए या तो आप ब्रेकआउट के आसपास लीजिए या आप एक वैल्यू जोन पे लीजिए, लेकिन इतना ऊपर आने के बाद मुझे लगता है कि कहीं ना कहीं अभी ओवर वैल्यूएशंस में है। एक बार 135 से 140 मुझे लगता है कि नीचे करेक्शंस, हेल्दी करेक्शंस पॉसिबल है। उसके बाद फिर से एक बार रिव्यू करके जाना चाहिए। अभी कभी भी अगर मौका मिलता है तो एज सुन एज पॉसिबल आप एक बार एग्जिट होने का ही व्यू बनाइए।
एग्जिट कर दीजिए, क्योंकि फिलहाल इस शेयर में थोड़ा प्रेशर नजर आ रहा है एक तरफा रैली के बाद। और एक बार फिर जब मौका लगेगा तो आप इसके ऊपर वापस से पूछ सकते हैं कब इसमें एक बार फिर से खरीदारी के मौके बनते हुए नजर आएंगे। लेकिन कई स्ट्रैटेजीज के हिसाब से आपको समझाया गया है यहाँ पर कि क्यों इस शेयर में फिलहाल एक प्रेशर बनता हुआ नजर आ सकता है। आगे बढ़ते हैं नेक्स्ट क्वेश्चन की तरफ, और ये सवाल हमारे पास आया अनुज सिंह का। लिखते हैं, गुड आफ्टरनून मैम। गुड आफ्टरनून टू यू आल्सो अनुज। सेज आई वांट टू आस्क अबाउट हिमाद्री स्पेशलिटी केमिकल। इसका शेयर 490 के रेट पर मैंने खरीदा है। 500 शेयर्स है मेरे पास, और एक साल का क्या टारगेट हो सकता है ये मैं प्रदीप जी से जानना चाहता हूँ। ठीक है, हिमाद्री स्पेशलिटी केमिकल्स खरीदा हुआ है 490 का।
बने रहने का सलाह होगा। बहुत बढ़िया वैल्यू जोन पे आपने बाय किया है। स्टॉप लॉस 650 615 के लेवल पे मेंटेन करने का सलाह रहेगा। एक साल पे मुझे लगता है कि अगर आप टाइम देके जाते हैं तो 950 से 1000 तक रैली
क्या बात।
पॉसिबल है। होल्ड करने का सलाह रहेगा।
ठीक है, तो हिमाद्री स्पेशलिटी में बने रहें। यहाँ पर 1000 तक के वैल्यू भी आपको देखने को मिल सकती है अगर आप एक साल का पूरा समय देंगे। तो बढ़िया स्टॉक को आपने बढ़िया प्राइस पर एंटर किया, और अब आपका टाइम आ चुका है कि आप इसमें देखें कि और तेजी इसमें आपको और बेहतर प्रॉफिट्स दिखने को मिलेंगे। नेक्स्ट क्वेश्चन विनीता गुप्ता का है। लिखते हैं, गुड आफ्टरनून टू यू ऑल्सो विनीता। शुड आई बुक शक्ति पंप एंड स्किपर प्रॉफिट्स राइट नाउ और नॉट? इन्होंने कुछ अपने प्राइस नहीं बताया है प्रदीप जी, लेकिन लिखते हैं कि शक्ति पंप्स और स्किपर में क्या अब प्रॉफिट बुकिंग की सलाह बन रही है?
देखिए इसकी पार तो मुझे लगता है कि आपको एक बार बुक करके जाना चाहिए, क्योंकि ट्रिपल टॉप के आसपास मंथली चार्ट है। तो अगर मंथली पे ब्रेकडाउन आ रहा है और कहीं ना कहीं ये एक बार रैली करेंट जोन से 125-30 तक नीचे आ सकता है। 130% नीचे आपको मिलेंगे। इसकी बार बुक योर प्रॉफिट। शक्ति पाप पे मुझे लगता है कि बहुत अच्छा खासा डाउन होने के बाद एक बेस बन रहा है। अगर ये बेस सक्सेसफुली बन जाता है और 600 के ऊपर क्लोजिंग हो जाता है तो फिर से आपको एक बार 880 890 तक मूव आते हुए दिखाई देंगे। सो एक बार होल्ड करके जाइए शक्ति पाम पे, लेकिन इसकी पार में एक बार आप एग्जिट होने का सलाह रहेगा इसमें।
ठीक है, नेक्स्ट क्वेश्चन लेते हैं। ये सवाल हमारे पास अरुण का हैदराबाद से आया है। लिखते हैं, हाय साक्षी, होप यू डूइंग वेल। आई एम वेरी वेल, थैंक यू सो मच फॉर आस्किंग। द क्वेश्चन दैट यू हैव आस्क्ड इज ऑन मेडी असिस्ट। 75 शेयर्स हैं 367 पर। प्लीज एडवाइज, शुड आई सेल एंड स्विच टू सम अदर स्टॉक गोइंग फॉरवर्ड और स्टे पुट विद माई करंट होल्डिंग ऑन मेडी असिस्ट? 367 की परचेज है, होल्ड करें या स्विच करें?
जी मुझे लगता है कि आपको एक बार बने रहना चाहिए। एक स्टॉप लॉस यहाँ पे आपको 328 पे मेंटेन करना चाहिए, लेकिन अभी भी स्ट्रक्चर कमजोर है। एक क्लोजिंग चाहिए अबव ऑलमोस्ट 395। सो इफ द स्टॉक क्लोज अबव 395 तो देन डेफिनेटली पॉसिबल नेक्स्ट टारगेट होगा इसमें 428 430 तक रैली दिखा सकता है। तो अभी तो होल्ड करने का सलाह रहेगा।
फिलहाल होल्ड करके चलें। जो टारगेट्स आपको बताए गए हैं अगर वहां पर आते हैं तो एक बार फिर से सवाल पूछिएगा जरूर। नेक्स्ट क्वेश्चन है लवकेश का। लिखते हैं, हाय साक्षी, होप यू डूइंग वेल। आई एम वेरी वेल, थैंक यू सो मच फॉर आस्किंग लवकेश, होप द सेम फॉर यू। लिखते हैं, प्लीज आस्क प्रदीप सर व्हाट इज हिज व्यू ऑन बीडीएल भारत डायनामिक्स? आई एम होल्डिंग द शेयर्स एट 1850। शुड आई स्विच टू सम अदर स्टॉक? व्हाट इज योर एडवाइस हियर ऑन बीडीएल?
नहीं, अभी तो उनको शिफ्ट नहीं करना चाहिए, क्योंकि शिफ्ट करेंगे तो लॉस हो जाएगा। एंड बेस फॉर्मेशंस बस अभी कुछ टाइम पे मुझे लगता है कि 1-2 महीने में हो जाएगा। अभी 1220-25 के आसपास का प्राइस चल रहा है। इजीली आपको 1225 से 1350 थोड़ा बहुत इस रेंज के अंदर और भी 15-20 ट्रेडिंग सेशन रह सकता है, मतलब मैक्स टू मैक्स 1 मंथ यहाँ पे सपोर्ट जोन है। अगेन आपको एक बार पुल बैक में स्टॉक 1650 1700 आपका जो बाइंग प्राइस है इसके ऊपर भी आते हुए दिखाई देंगे। सो होल्ड योर पोजीशन।
ठीक है, संदीप का नेक्स्ट क्वेश्चन है और ये लिखते हैं कि सर मुझे विप्रो में बताइए स्टॉप लॉस और टारगेट क्या रखूं इस महीने के एंड की एफएनओ एक्सपायरी को लेकर। आज विप्रो में जो प्रेशर आ रहा है वो क्लियरली अगर हम देखें तो बाय बैक की न्यूज़ की वजह से आ रहा है। आज 4% नीचे है ये शेयर और 15,000 करोड़ का जो बाय बैक है उसके चलते आज यहाँ पर ऑलमोस्ट 8% तक की भी वीकनेस देखने को मिली थी। एक्स डेट हो चुकी है 15,000 करोड़ के बायबैक की। फिलहाल इस महीने के लिए अगर कोई होल्ड करना चाहता है तो उसके लिए टारगेट स्टॉप लॉस यहाँ क्या रहेगा?
देखिए मुझे लगता है कि 185 एक प्रोमिनेंट स्टॉप लॉस मेंटेन करके जाना चाहिए। और अगर आप देखेंगे नॉट ओनली दैट विप्रो एंटायर आईटी पैक में जिस तरीके से सेलिंग प्रेशर आया है, एक तो पहले कुछ टाइम पहले हमने देखा अर्निंग रिजल्ट अच्छा नहीं था, उसके बाद उसके वजह से जो जितना ना पिटाई हुआ है एंथ्रोपिक एआई की वजह से जो पिटाई हुआ है लास्ट एक डेढ़ महीने में। एंड मुझे लगता है कि अभी मैं पढ़ रहा था सुबह एंथ्रोपिक की तरफ से एक स्टेटमेंट आया है एक ब्लॉगिंग में कि एआई इतना फास्ट हो रहा है कि ह्यूमन इसको मैच नहीं कर पाएंगे फ्यूचर में। तो कहीं ना कहीं जो एंथ्रोपिक है उनको भी ये ध्यान में रखना चाहिए कि एआई डेवलपमेंट थोड़ा हम स्टॉप करेंगे, ऐसा करके समथिंग लाइक दैट मैं एक आर्टिकल पढ़ रहा था। तो मुझे लगता है कि अगर ये कमिंग फ्यूचर में थोड़ा भी बहुत एआई डेवलपमेंट कम होता है तो कहीं ना कहीं हमारे आईटीज कंपनी के लिए थोड़ा बहुत पॉजिटिव हो सकता है शॉर्ट टाइम में, क्योंकि जो पैनिक स्टार्ट हुआ था वो बेसिकली एंथ्रोपिक वजह से इसके एआई टूल एंड अलग अलग चीजों की वजह से ही हुआ था। लेकिन जिस तरीके से ओवर द टाइम में हमने देखा है कि टीसीएस विप्रो एंड इन्फोसिस जैसे स्टॉक नीचे आया है। अभी बेस बनने में टाइम लगेगा, 2-3 महीना लगेगा। मुझे लगता है कि बेस फॉर्मेशन में 185 का एक स्टॉप लॉस मुझे लगता है कि मेंटेन करके जाना चाहिए।
Okay, let's take the next question. This one is again from one of our viewers on our YouTube. वरुण पारिक हैं, ये लिखते हैं साक्षी मेरा एक डाउट है कि मैंने ये देखा है कि जब भी मैं किसी स्टॉक में इन्वेस्टमेंट करता हूँ और कंपनी अगर लॉस में अपना लॉसेस दिखा रही है तो फिर वो कैसे उसका स्टॉक प्राइस चलता रहता है और इसके ऊपर आप क्या सजेस्ट कर सकते हैं? ओके, डेफिनेटली एक ओवरऑल व्यू लेते हैं। प्रदीप जी, आपकी इनसाइट्स हमेशा बहुत लोगों के काम आती है समझने के लिए कि कैसे वो कंपनी को चूज़ करें अपने पोर्टफोलियो के लिए। तो वरुण पारिक जी ये कहना चाहते हैं कि मैं कई बार ऐसा देखता हूँ कि कोई भी कंपनी जो कि लगातार लॉसेस पोस्ट कर रही है लेकिन फिर भी उसका स्टॉक प्राइस चलता रहता है, तो इसके पीछे का रीज़न क्या होता है अक्सर?
देखिए रियल एग्जांपल तो हम लोग देख ही रहे हैं कि ओला भी लॉस पोस्ट कर रहा था लेकिन फिर भी चल रहा है। एंड रिसेंटली कुछ दिन पहले फिजिक्स वाला भी लॉस कर रहा था तो फिर भी चल रहा है। तो क्या होता है टेक्निकली देखा जाए तो मार्केट मेकर रहता है, इन्वेस्टर रहता है, बाइंग सेलिंग तो चलता है। लेकिन आप एक स्टॉक पे इन्वेस्ट कर रहे हो फिर भी स्टॉक में इन्वेस्ट कर रहे हो और कंपनी लॉस में चल रहा है फिर भी चल रहा है। प्रॉफिट एंड लॉस इज अ पार्ट ऑफ द मार्केट, इज अ बिजनेस। तो यहाँ पे कभी प्रॉफिट होगा कभी लॉस होगा, ये तो पार्ट ऑफ द गेम है। आपको ध्यान रखना चाहिए कि जब भी आप एटलीस्ट अगर हम प्राइस एक्शंस भी देखते एवोव 200 डीएमए डेली एक्सपोनेंशियल मूविंग जो एवरेज प्राइस है इसके ऊपर ही आप कोई भी स्टॉक को परचेस करना चाहिए। अगर आप बिगेनर हो, ज्यादा आपको स्टडी करना नहीं आता है तो सिंपल सा आप एक चीज फॉलो कीजिए, अबव 200 डीए में एक इंडिकेटर है ये आप फॉलो कर लीजिए। कल जो हमने राजेश एक्सपोर्ट में जिस तरीके से देखा है एक इंसिडेंस, देखिए 200 डीए में कब था और कब ब्रेकडाउन आया था और इसका एक्चुअली इन्वेस्टिगेशन चल रहा था बहुत सालों से, लेकिन कल वो न्यूज आया है। सो कहीं ना कहीं मुझे लगता है कि यू शुड डेफिनेटली फॉलो सम बेसिक्स थिंग। आप देखिए लास्ट 4-5 साल का पैट प्रॉफिट आफ्टर टैक्स एटलीस्ट 13 to 15 परसेंट ग्रोथ के साथ डेवलपमेंट हो जा रहा है। रेवेन्यू जो सेल्स है बेसिकली ये एटलीस्ट 12 से 15% के आसपास का ग्रोथ चल रहा है यहाँ पे। एंड जो कंपनी का मार्केट कैप है इसके साथ साथ अगर ओवर द टाइम मार्केट कैप डेवलपमेंट हो जाता है तो मुझे लगता है कि कहीं ना कहीं आपको फंडामेंटल 2-3-4 पॉइंट और टेक्निकली आप थोड़ा 200 डीए में देख लीजिए। ज्यादा कुछ पढ़ाई करने का जरूरत ही नहीं है। और जैसे कि गवर्नमेंट का जहाँ पे फोकस है आप यहाँ पे फोकस कर लीजिए, क्योंकि हम लोग गलती ये कर देते हैं, हम अभी होटल को लेकर डिस्कशन कर रहे हैं, हम लोग अभी रेलवे के लेकर डिस्कशन कर रहे हैं, लेकिन गवर्नमेंट का फोकस है ईवी, गवर्नमेंट का फोकस बजट से है डेटा सेंटर। आप उठा के देख लीजिए आफ्टर द बजट डेटा सेंटर थीम E2E नेटवर्क अपना नेटवर्क टेक्नोलॉजी KRN हीट एक्सचेंज कितना चला है ये सारे स्टॉक। सो कहीं ना कहीं हमें लगता है कि गवर्नमेंट का भी फोकस जहां पे है आप यहाँ पे फोकस कीजिए एंड अबव 200 डीए में फॉलो कीजिए, थोड़ा बहुत फंडामेंटल देख लीजिए, पैसा अपने आप बनेगा मार्केट में।
क्या बात है। तो उम्मीद करते हैं वरुण आपको एक कॉम्प्रिहेंसिव जो व्यू दिया गया है कि टेक्निकल पैरामीटर्स को स्टॉक्स को कैसे सिलेक्ट करना है और फंडामेंटली आपको कैसे थीम्स को आइडेंटिफाई करना है जब आप अपने स्टॉक्स और अपने पोर्टफोलियो के लिए चुनाव करें। तो स्पेसिफिकली गाइडेंस के साथ अगर आप करेंगे तो और बेहतर रहेगा, लेकिन अपने इंटेलिजेंस को, अपनी रिसर्च को भी इसी पैरामीटर्स पर और इम्प्रूव करते चलिए। नेक्स्ट क्वेश्चन लेते हैं। ये हमारे पास सवाल आया है ब्रिजेश का। लिखते हैं, सर जीएमडीसी बाय किया है 692 पर, क्या करना चाहिए करंट लेवल पर? क्या और भी ऐड करने चाहिए या नहीं, या फिर इसमें स्टॉप लॉस और टारगेट बता दीजिए। जीएमडीसी
देखिए, रेयर अर्थ मिनरल को लेके जिस तरीके का थीम चल रहा था, ये अभी भी चलेगा। कमिंग फ्यूचर में बने रहना चाहिए। थीम बढ़िया है, स्टॉक का फंडामेंटल अच्छा है। टेक्निकली वीकली चार्ट में फ्लैग फॉर्मेशन है। अब जब भी कोई भी कंपनी में फ्लैग फॉर्मेशन होता है, इसका मतलब यही है कंपनी थोड़ा बहुत ब्रेकआउट, उसके बाद कुछ टाइम कंसोलिडेशन, फिर से ब्रेकआउट, फिर से कंसोलिडेशन। तो रिसेंटली ब्रेकआउट आने के बाद का जो कंसोलिडेशन पीरियड है वो अभी चल रहा है। टारगेट रहेगा मोटा मोटा 850 से 900। 2 क्वार्टर का टाइम आपको देना पड़ेगा। एक स्टॉप लॉस 580 के लेवल पे आपको मेंटेन करके जाना चाहिए।
ठीक है। रोहित जैन का सवाल आया है, हिंदुस्तान यूनिलीवर पर जानना चाहते हैं आपसे। 2095 की इनकी खरीद है, लॉन्ग टर्म का व्यू यहाँ पर पूछ रहे हैं।
देखिए, वो लॉन्ग टर्म का व्यू इसलिए पूछ रहे हैं क्योंकि हिंदुस्तान यूनिलीवर बहुत टाइम से नहीं चल रहा है। सो कहीं ना कहीं देखिए, लॉन्ग टर्म में तो यहाँ पे कोई प्रॉब्लम नहीं है, लेकिन वो भी आप देख लीजिए कितना लॉन्ग टर्म। तो जो मैं 2 हफ्ता पहले, 3 हफ्ता पहले आई थिंक आपके साथ जब शो कर रहा था, एक स्टेटमेंट दिया था कि वो आप देख लीजिए शाहरुख खान कौन बनने वाला है। जो शाहरुख खान बन चुका है वहां पे पैसा नहीं बनेगा। तो उसमें से एक पुराना शाहरुख खान हमारा है हिंदुस्तान यूनिलीवर। सो शॉर्ट टाइम में कोई प्रॉब्लम नहीं लगता। मुझे लगता है कि इजीली एक 2000 के आसपास बहुत बढ़िया सपोर्ट है। थोड़ा आप यहाँ पे स्लो मूव देखने को मिलता है, उतना हाई बीटा काउंटर नहीं है। अगर आप थोड़ा यहाँ पे 2-3 साल टाइम देंगे तो मुझे लगता है कि एक बार 2550 उसके बाद एंड अबव आपको आते हुए दिखाई देंगे। बट थोड़ा बोरिंग हो चुका है। अब देखिए, अगर आपके पोर्टफोलियो में है तो डेफिनेटली रखना चाहिए। थोड़ा डाइवर्सिफिकेशन ऑफ एफएमसीजी ऑल्सो। बट द थिंग इज कि एक बार एक स्टॉप लॉस 2000 आसपास का आपको मेंटेन करके चलना चाहिए।
ठीक है। नेक्स्ट क्वेरी लेते हैं और ये हमारे पास सवाल आया है रवि का, गॉडफ्री फिलिप्स पर 2400 की इनकी बाइंग है। शॉर्ट टर्म के लिए आपसे पूछना चाहते हैं इस शेयर पर क्या स्ट्रैटेजी बनाएं।
ओके, सो हाँ, 2230 के आसपास का प्राइस है। होल्ड करने का सलाह रहेगा। देखिए, जिनका लाइफस्टाइल हैबिट सिगरेट है वो छोड़ नहीं पाएंगे, कंपनी प्राइस हाइक करते रहेंगे। सो कहीं ना कहीं कोई प्रॉब्लम मुझे नहीं दिखता है शॉर्ट टाइम में। वो न्यूज आने के बाद से आईटीसी एंड गॉडफ्रे फिलिप दोनों काउंटर में हम लोगों ने एक अच्छा खासा गिरावट देख लिया, लेकिन अभी वैल्यू जोन में है। आप अगर 1.5-2 साल टाइम देते हो तो मुझे लगता है कि 3000 एंड अबव भी स्टॉक आपको आते हुए दिखाई देंगे। होल्ड कीजिए, बने रहिए।
होल्ड कीजिए, बने रहिए। और नेक्स्ट क्वेरी लेते हैं। ये हमारे पास अब सवाल आया है रमाकांत का, एनएलसी इंडिया पर 341 की इनकी बाइंग है। यहाँ पर आपकी क्या सलाह होगी, क्या करना चाहिए एनएलसी में?
एक बार मुझे लगता है कि स्टॉक में प्रॉफिट बुक करना चाहिए, क्योंकि स्टॉक का जो रिसेंट टॉप था 388, एक बार मुझे लगता है कि 288 से लेके 300 रिविजिट होने का पॉसिबिलिटीज है।
ठीक है। नेक्स्ट क्वेश्चन ले लेते हैं और ये सवाल हमारे पास आया है पीयूष का, और ये दीपक नाइट्रेट के ऊपर पूछना चाह रहे हैं कि क्या ये सही प्राइस पर और सही समय पर है जिसमें खरीदा जाए।
दीपक नाइट्राइटस, ओके, 1864 के आसपास का भी प्राइस चल रहा है। होल्ड करने का सलाह रहेगा। इनफैक्ट आप बाई भी करके जा सकते हैं फ्रेश। स्टॉप लॉस रहेगा यहाँ पे मोटा मोटा आपका 1565 के लेवल पे, और टारगेट आपको 1820 तक मिलने का पॉसिबिलिटीज है शॉर्ट टाइम में। और 1820-30 का ऊपर सस्टेन होने में आपको फिर से 2250 का टारगेट रहेगा। तो बिल्कुल बाई करके जा सकते हैं।
बाय करके बिल्कुल जा सकते हैं, ये आपके लिए सलाह दी जा रही है। नेक्स्ट क्वेश्चन लेते हैं और ये सवाल हमारे पास आया है राकेश का। ये लिखते हैं, आई साक्षी, इट्स अ ग्रेट शो विद द एक्सपर्ट गेस्ट दैट यू गेट ऑन द प्रोग्राम। थैंक यू सो मच राकेश फॉर राइटिंग इन। ही सेज, आई वांट टू आस्क प्रदीप सर, हाउ इज स्टेट बैंक ऑफ इंडिया फॉर फ्रेश एंट्री?
स्टेट बैंक ऑफ इंडिया मुझे अच्छा लगता है। इनफैक्ट रिसेंटली 1230 के आसपास का हाई लगाने के बाद अभी 983 में है। रिसेंटली 940 950 के आसपास था, बहुत ही अट्रैक्टिव वैल्यूएशंस में था। एंड देखिए, ये सब जो अभी मार्केट नहीं चल रहा है, अगर मार्केट को कुछ एक बड़ा ट्रिगर चाहिए, वो मिल जाता है ना, तो मार्केट यहाँ से आपको ऊपर आते हुए दिखाई देंगे। उसमें पीएसयू बैंक का बहुत बड़ा रोल हो सकता है। निफ्टी बैंक पे आप देखेंगे मूव आपको डेफिनेटली आते हुए दिखाई देंगे। तो यही स्टेट बैंक ऑफ इंडिया फिर से आपको ऑल टाइम हाई पे आते हुए दिखाई देंगे। तो 983 है, फ्रेश बाई करने का सलाह है। एवरेज भी आप होल्ड करके भी जाइए, कोई प्रॉब्लम नहीं है। इजीली ऑल टाइम हाई एक बार फिर से आपको मिलेंगे।
ठीक है, नेक्स्ट क्वेश्चन लेते हैं। सपना का क्वेश्चन आया है, ये सुवेन लाइफ साइंसेस पर आपसे पूछना चाह रही हैं, ये शेयर आपको कैसा लगता है और इस पर क्या व्यू है आपका?
सुवेन लाइफ साइंस अगर हम देखेंगे, कहीं ना कहीं मार्केट कैप है ऑलमोस्ट 6,497 करोड़ के आसपास। एंड अभी प्राइस चल रहा है 244। एक बार मुझे लगता है कि जिस तरीके से स्ट्रक्चर खराब हुआ है, स्टॉक आपको 212 एंड 210 के आसपास आते हुए दिखाई देंगे। तो बेटर रहेगा एक बार एग्जिट हो जाइए आप। अदरवाइज एक बार स्टॉक आपको 200 से 210 के आसपास रिविजिट होने का पॉसिबिलिटीज दिख रहा है।
ठीक है, उम्मीद करते हैं ये सवाल भी आपको पूरी तरीके से सेटिस्फैक्शन हुआ हो जैसे आपको एडवाइस दिया गया है। क्वेश्चन नेक्स्ट है हमारे पास भास्कर का हैदराबाद से। ऑयल मार्केटिंग कंपनी से बीपीसीएल पूछना चाहते हैं, कैन आई बाय दिस स्टॉक एट द करंट मार्केट प्राइस? व्हाट वुड योर एडवाइस बी प्रदीप हियर? बीपीसीएल
मुझे लगता है कि ओएमसी अभी अट्रैक्टिव वैल्यूएशन में है, और ऑलरेडी हमने एक अच्छा खासा सेलिंग प्रेशर देखा है। 295 के आसपास का भी वीपी से चल रहा है, कंसोलिडेशन पे ही चल रहा है। तो 1.5-2 मैक्सिमम 2 महीने तक कंसोलिडेशन रेंज में रह सकता है। लेकिन अगेन स्टॉक आपको 360 उसके बाद 380 तक मूव शॉर्ट टाइम में आते हुए दिखाई देंगे। मैक्स टू मैक्स आप 1.5-2 क्वार्टर वेट करके जाइए। एक स्टॉप लॉस मैं यहाँ पे 275 के लेवल पे मेंटेन करना चाहूंगा।
ओके, नेक्स्ट क्वेश्चन लेते हैं। ये सवाल है संदीप का। इनफैक्ट ये क्वेश्चन हम ले चुके हैं पहले। हम लेते हैं मिर्ज़ा यामीन का क्वेश्चन। ये रियाद से हमारा शो देख रहे हैं और लिखते हैं, आई हैव 60% लार्ज कैप, 35% मिड कैप एंड रेस्ट स्मॉल कैप स्टॉक्स इन माय पोर्टफोलियो. आई एम होल्डिंग सिंस अबाउट 40 months. The top A-class companies which I have since 18 to 20 months, they are always plus minus 5%. I was expecting my portfolio will, be up by 15% since the time I invested. But what is the strategy? Okay, Mirza, this is a an overall general question that you are asking right now, but we need to get greater clarity on what exactly you want to know. From our guests. It's understood that you have a diversified portfolio, you have large caps, you have mid caps, you have small caps in your portfolio. You have been holding on your investment since 40 months, so you are holding on to the long term as well. You're saying that the top A-class companies are plus minus 5%, that's also okay. But you were expecting the markets will give you a return of about 15 odd percent, and perhaps that has not happened. Maybe that, but look at the markets overall also. They have also declined and underperformed in the last 1.5 years. That's why probably the results are not as expected. But I'll just take an overview from Pradeep ji. For investors who are looking at diversified strategy, लार्ज कैप, मिड कैप, स्मॉल कैप्स तीनों में इन्वेस्ट करना चाहते हैं और लॉन्ग टर्म के लिए करना चाहते हैं, तो कैसे स्ट्रैटेजी बनाएं?
नहीं, सही है। द थिंग इज कि कैसे चलेगा भी, क्योंकि लास्ट 15-18 मंथ तो हो ही गया, मार्केट नहीं चल रहा है। हम डेली डेली बात कर रहे हैं मार्केट का। निफ्टी जहाँ पे था वहां पे ही है, पूरा ग्लोबल मार्केट चल रहा है, लेकिन इंडियन मार्केट नहीं चल रहा है, एफआईआई नहीं आ रहा है। सो वो भी हमें ध्यान में रखना पड़ेगा। द थिंग इज कि मुझे लगता है कि इस मार्केट में मैं इस टाइम पे हमारे जो क्लाइंट है, अब एक्चुअली ये थोड़ा ना पर्सनलाइज्ड कोर्स है ना, इट्स डिपेंड ऑन द स्पेसिफिक क्लाइंट्स, रिस्क प्रोफाइलिंग के ऊपर रहता है, क्योंकि एवरीबॉडी हैव डिफरेंट काइंड ऑफ रिस्क प्रोफाइलिंग। उनका अलग अलग रिस्क कैपेसिटी रहता है। सो मुझे लगता है कि इस टाइम पे एटलीस्ट आपको थोड़ा बहुत कैश में बैठना चाहिए। मैं 25 से 30% कैश में बैठना पसंद करूंगा। और इस मार्केट में मैं बाकी का 50% मैं लार्ज कैप में, 50% मैं मिड कैप में रखना पसंद करूंगा। ज्यादा मैं अभी थोड़ा अभी कैश में ही बैठना पसंद करूंगा, क्योंकि दिस इज द नॉट राइट टाइम फॉर एग्रेसिवनेस का, तो है ही नहीं टाइम। और थोड़ा डाइवर्सिफाइड पोर्टफोलियो में पेशेंस चाहिए, क्योंकि पेशेंस ही अभी दिखाना है मार्केट में। मार्केट नहीं चल रहा है। आपने जिस तरीके से एक्सप्लेन किया कि उनके पास लार्ज कैप, मिड कैप एंड स्मॉल कैप का ऑलरेडी वेटेज है, तो मुझे लगता है कि ऑलरेडी उन्होंने सही किया है। तो यहाँ पे और ज्यादा कुछ चेंजेस करने की जरूरत नहीं है। कंसर्न इस मार्केट नहीं चला। अगर मार्केट नहीं चला तो दुनिया का कोई फंड मैनेजर, एडवाइजर आपको रिटर्न करके नहीं दे पाएंगे। सो यू हैव टू अंडरस्टैंड दैट। एंड मुझे लगता है कि पेशेंस के साथ आप बने रहिए, देखिए मुझे लगता है कि ऑलरेडी हो गया है, मुझे लगता है कि हम एक लास्ट फेस में अभी है। ये वाला फेस अगर खत्म हो जाएगा तो फिर से मार्केट में फिर से न्यू तेजी आएगा। तो जैसे ही निफ्टी ऑल टाइम हाई पे आपको दिखेंगे, एक बार आपका भी पोर्टफोलियो में जो है चमक आते हुए दिखाई देंगे। लेकिन अभी 2-3 महीना अभी भी लग रहा है कि ऐसा चल सकता है।
ठीक है, उम्मीद करते हैं ये सवाल का भी जवाब आपको मिल गया है। अंकुर मोदी का नेक्स्ट क्वेश्चन है, ये लिखते हैं, प्रदीप सर प्लीज हाईलाइट about Exide and Ashok Leyland. They have fallen a lot from the highs. Can I buy them in a staggered manner? Exide Batteries और Ashok Leyland दोनों को खरीदना चाहते हैं staggered fashion में, क्या खरीदना चाहिए अभी?
अशोक लीलैंड अट्रैक्टिव वैल्यूएशन में है। मुझे लगता है कि एक बार एक्साइड को एक बार मैं अवॉइड करना पसंद करूंगा, और अशोक लीलैंड मैं बिल्कुल बाई करना चाहता हूं। यहाँ पे 130 का रहेगा स्टॉप लॉस, एंड 168, उसके बाद 198, 200 तक जाने का पोटेंशियल है। फिर से एक बार ऑल टाइम हाई आपको अशोक लीलैंड पे आते हुए दिखाई देंगे। टाइम फ्रेम रहेगा 7 to 10 मंथ। स्टॉप लॉस 130। स्टॉप लॉस रिस्क रिवॉर्ड रेशियो बहुत फेवरेबल है। यहाँ पे आपको रिस्क लेने में मैक्स टू मैक्स 15 रुपीज का रिस्क आप ले रहे हो यहाँ पे। 31-30 का स्टॉप लॉस, लेकिन मिलने पे आपको यहाँ पे फिर से ऑल टाइम हाई का मैं बात कर रहा हूँ, जो कि 215 है ना वो। सो बहुत बढ़िया रिस्क रिवॉर्ड रेशियो है। एंड 130 पे मैं स्टॉप लॉस क्यों दे रहा हूँ, क्योंकि लास्ट टाइम का जो ब्रेकआउट आया था 130 से आया था। एंड अगेन मुझे लगता है कि 140-145 इज अ वेरी वैल्यूएबल जोन।
ओके, लेट्स टेक द नेक्स्ट क्वेश्चन। ये है सुरेंद्र कौर घुमन, ये पूछते हैं कैरिसेल के ऊपर 175 शेयर्स है इनके पास 840 के भाव पर, एक शॉर्ट टर्म के लिए आपसे कैरिसेल पर टारगेट जानना चाह रहे हैं।
ओके, शॉर्ट टाइम का टारगेट अभी मुझे लगता है कि उनको एक बार बने रहना चाहिए। स्टॉक ब्रेकआउट हुआ है और उसके बाद अभी थोड़ा कंसल्ट कर रहा है। अगर हम थोड़ा एक बार मंथली चार्ट देख लेंगे तो मुझे लगता है कि कहीं ना कहीं मंथली चार्ट भी ठीक है। स्टॉक एक बार मुझे लगता है कि 1850, 2000 यहाँ से पॉसिबल है। डीआर एक ब्रेकआउट जोन में है। आपको शॉर्ट टर्म व्यू नहीं रखना चाहिए। एटलीस्ट 4-5 महीना मिनिमम आपको होल्ड करके जाना चाहिए। तो मिनिमम आपको 1600-1700 तक यह स्टॉक आपको आते हुए दिखाई देंगे जी।
Okay, let's take the next one as well. We also have more questions coming in from our viewers. This one is on the IT stocks that we got from one of our viewers कि सर अभी आपको IT stocks कैसे लग रहे हैं?
आईटी को लेके व्यू यही है कि देखिए, इतना ज्यादा गिरावट यहाँ पे आया है, इतना पिटाई हुआ है, ओवरसोल्ड हो गया है। अब ओवरसोल्ड सिचुएशन में क्या होता है, जैसे ही थोड़ा बहुत पुल बैक आता है हम सोचते हैं कि ब्रेकआउट आ गया है। इफ कोई ब्रेकआउट नहीं, दैट्स कॉल्ड डेड कैट बाउंस। सो देयर इज अ डिफरेंस बिटवीन ब्रेकआउट एंड डेड कैट बाउंस। अब ये लोग ना यहाँ पे थोड़ा मुझे लगता है कि सोच रहे हैं कि कुछ भी मूव आता है, चलो ब्रेकआउट आ गया अब चलेंगे। तो अब नहीं चलेगा, बेस बनने में टाइम देगा। क्योंकि अगर आपको एक्सीडेंट हुआ है, प्रॉब्लम हुआ है, तो आप आईसीयू में हो, आप हॉस्पिटल में हो, आपको रिकवरी करने में 2-3 महीना टाइम लगेगा। तो अभी ना मैडम मुझे लगता है कि आईसीयू में है इंटायर द आईटी सेक्टर। आईसीयू से पहले थोड़ा हॉस्पिटल बेड में आना है, उसके बाद थोड़ा घर में आना है, उसके बाद ऑफिस के लिए हम रेडी हो पाएंगे। अभी आईटी सिचुएशन इज लाइक दैट। सो 2-3 महीना टाइम दीजिए। मुझे लगता है कि उससे पहले अभी फ्रेश बाई करना मतलब यहाँ पे अननेसेसरी रिस्क है। मतलब या तो जिंदा या मुर्दा, ऐसा सिचुएशन है। तो मुझे लगता है कि अभी जिस तरीके का सिचुएशन हो रहा है, कहीं ना कहीं अगर रुपया भी ऑल टाइम लो के आसपास है, थोड़ा ऐसे रिकवरी होता है तो आईटी पे डेफिनेटली मूव पॉसिबल है।
ठीक है, नेक्स्ट क्वेश्चन है गुंजन का जयपुर से, ये लिखते हैं आई एम अ बिग फैन ऑफ बिजनेस टुडे चैनल, थैंक यू सो मच डियर गुंजन। सेज अंबुजा सीमेंट पर प्रदीप सर प्लीज बताइए क्या करना चाहिए, 480 की मेरी परचेज है।
अंबुजा सीमेंट अभी 2% नीचे है and 416 के आसपास। स्ट्रक्चर यहाँ पे डाउन है। वीकली चार्ट लगा था 4-5 हफ्ते से डाउन है। मंथली चार्ट भी यहाँ पे स्ट्रक्चर खराब है। 316-17 पे सपोर्ट है, तो सपोर्ट से अभी बहुत ऊपर ही चल रहा है। तो मैं बोलूंगा यहाँ पे फ्रेश बाई करने का नहीं है, एंड कुछ भी उछाल मिले एक बार बेचने का व्यू बनाइए यहाँ पे।
ओके, उम्मीद करते हैं यहाँ पर भी आपको सेटिस्फैक्शन हुआ और जैसे आपको राय यहाँ पर दी जा रही है इसे आप डेफिनेटली फॉलो करेंगे अपने पोर्टफोलियोज़ के लिए भी। अगले सवाल की तरफ आगे बढ़ते हैं। अभिमन्यु हैं धानु का एग्रीटेक पर आपसे पूछना चाह रहे हैं, ये शेयर आपको कैसा लगता है?
कौन सा स्टॉक?
धानु का एग्रीटेक।
धानु का एग्रीटेक, ओके। 1100 के आसपास का प्राइस चल रहा है। हम तो ट्रैक नहीं करते फंडामेंटली इसको, लेकिन टेक्निकली एक बार मुझे लगता है कि स्टॉक आपको एक स्टॉप लॉस 1065 के आसपास मेंटेन करके जाना चाहिए, एंड फ्रेश बाई करने का सलाह नहीं रहेगा। 1230 में एक रेसिस्टेंस दिख रहा है, ये क्रॉस होने के बाद आपको ऊपर आते हुए दिखाई देंगे। यहाँ पे थोड़ा लिक्विडिटी का भी इशू है वॉल्यूम को लेके, तो इसको भी ध्यान में रखना चाहिए।
ठीक है। राज सनवाल पूछते हैं, गुड आफ्टरनून सर, प्लीज बताइए शुड आई टेक फ्रेश पोजीशन इन कोपरान?
कोपरान 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 नहीं, कोपरान में भी अभी बाई करना नहीं चाहिए। और कोपरान का मार्केट कैप मैं एक बार फटाफट देख लेता हूँ, क्योंकि ऐसे छोटे छोटे स्टॉक 924 करोड़ के आसपास का मार्केट कैप है, तो ऐसे 900,000 करोड़ का स्टॉक इस बाजार में एग्रेसिव हो जाएगा। एक बार अवॉइड करके जाइए, किसी को लेना भी नहीं है, सीख लीजिए। अभी मार्केट ऐसा एक सिचुएशन में है, इस सिचुएशन में क्लैरिटी नहीं आ रहा है। आरबीआई का गवर्नर आज आके बोल रहा है हम थोड़ा वेट करेंगे, पेशेंस रखेंगे नेक्स्ट फ्यूचर प्लान के लिए। तो अगर आप खुद का पैसा इस मार्केट में और वो भी 1,000 करोड़ 900 करोड़ वाले कंपनी में इन्वेस्ट करेंगे, आप खुद ही फंस जाएंगे। अवॉइड कीजिए,
अवॉइड करने की सलाह। नेक्स्ट क्वेश्चन है हमारे पास, एक और हमारे दर्शक हैं राजेश कपूर, लिखते हैं आई हैव बॉट दौलत एल्गो एट 80 रुपीज फॉर 5 months, व्हाट इज द व्यू ऑन दिस वन? फिलहाल आई थिंक ये 73 पर आ चुका है और पिछले एक साल में तो 30% डिक्लाइन भी हो चुका है ये शेयर। पिछले ईयर टू डेट में 17% इसका इन्वेस्टमेंट लॉस्ट हुआ है। जनवरी में शायद ये शुरू हुआ था 91 के लेवल पर और आपने कुछ एनीवेयर इन बिटवीन खरीदा 80 के लेवल पर और उससे भी ये नीचे आ गया है। दौलत एल्कोटेक, क्या करें प्रदीप जी यहाँ?
देखिए ये भी पेनी स्टॉक होने जा रहा है ऑलमोस्ट, एंड 73 के आसपास का प्राइस है। देखिए जिस तरीके से ऊपर से हल्का हुआ है, 1200-1300 करोड़ के आसपास का मार्केट कैप है, अवॉइड करके जाना है, इग्नोर।
अवॉइड करके रखना है फिलहाल इस शेयर को भी। एक लास्ट क्वेश्चन लेते हैं, ये है जी वेंकटेश राव का, ये अवंती फीड्स कर ऊपर आपसे पूछना चाहते हैं ये शेयर आपको कैसा लगता है और इसमें क्या राय होगी आपकी?
अवंती फीड्स बढ़िया कंपनी है, अच्छा चला भी है और प्रॉफिट बुकिंग चल रहा है। प्रॉफिट बुकिंग मुझे लगता है कि एक बार 981 से 1020-25 तक पॉसिबल है। ये कंप्लीट होने के बाद फिर से आपको भागता हुआ नजर आएंगे। तो फिलहाल अभी तो यहाँ से भी 100 पॉइंट नीचे मैं देख पा रहा हूँ, लेकिन पोर्टफोलियो में है तो आप बने रह सकते हैं। लॉन्ग टर्म में कोई प्रॉब्लम नहीं, शॉर्ट टर्म में 100 पॉइंट करेक्शन के बाद फिर से भागेगा स्टॉक।
Okay, one more question we'll squeeze in. This is Anshu Sodhi, says, good afternoon Sakshi and Pradeep sir. Please review Minda Corp sir. Should I buy at this level?
मिंडा कप तो इस टाइप पे मेक और ब्रेक जोन के आसपास है, कंसोलिडेशन रेंज से बाहर हुआ है। अब पहली बार बाहर हो रहा है, ब्रेकआउट आया है और उसके बाद अभी अभी ऑलमोस्ट 0.5% अभी आज नीचे है। 625-630 के आसपास एवरेज करना या तो फ्रेश बाई करने का सलाह रहेगा, एंड अभी नहीं। एंड हम लोग देखे थे कि 2024 का जो जुलाई मंथ था उस टाइम पे टॉप बना था, और अभी 2026 का अभी जून मंथ चल रहा है। सो वो वाला ब्रेकआउट अभी इसमें पॉसिबल है। 650 के ऊपर क्लोजिंग के बाद सक्सेसफुली ब्रेकआउट पॉसिबल है। ब्रेकआउट के बाद 850 तक भागता हुआ नजर आएंगे। होल्ड कीजिए, बने रहिए, फ्रेश बाई 625-630 के लेवल पे करके जाना है।
Alright, और प्रदीप जी टुवर्ड्स दी एंड आपकी अपनी तरफ से कोई पसंदीदा शेयर जो आपके रडार पर आया हो जो आप शेयर करना चाहते हैं हमारे दर्शकों के साथ?
जी, दो कंपनी है। ये है बेसिकली नंबर 1 स्टॉक शिपिंग कॉर्पोरेशन ऑफ इंडिया, एससीआई। अभी 317-18 के आसपास का प्राइस चल रहा है। रिसेंटली हम लोगों ने एक ऑल टाइम हाई देखा था, उसके बाद एक करेक्शन आ गया था, लेकिन आज जिस तरीके से फिर से बेस बनने के बाद चलने के लिए रेडी हो रहा है, अगर हम 1-2 हफ्ता वेट करके जाते, एक बार फिर से ऑल टाइम हाई जैसे कि 360 एंड अबव आपको देखने को मिलेगा। एक स्टॉप लॉस मैं यहाँ पे 304 के आसपास मेंटेन करना पसंद करूंगा। तो 304 रहेगा मेरा स्टॉप लॉस, 360 का रहेगा टारगेट। तो दोनों पार्ट में यहाँ पे आप कर सकते हो। 338 का पहला टारगेट, 360 का सेकंड टारगेट, बाय करके जाइए। सेकंड स्टॉक रहेगा एसीएमई सोलर। एसीएमई सोलर भी देखिए आईपीओ ब्रेस ब्रेकआउट आया है और डबल टॉप बनने के बाद का वीकली चार्ट में ब्रेकआउट है। 355 का अभी प्राइस चल रहा है। पहला टारगेट 389, उसके बाद 425 तक जाने के लिए रेडी हो रहा है। स्टॉप लॉस मुझे लगता है कि एक बार यहाँ पे 331 के लेवल पे मेंटेन करके चलना चाहिए।
ऑलराइट, ओके, तो चलिए 2 शेयर्स आपके साथ शेयर किए गए हैं जहां पर आप प्रदीप जी की पसंद से निवेश कर सकते हैं और वहां पर ये बढ़िया रिटर्न्स आपको देखने को मिल सकते हैं। बहुत बहुत शुक्रिया प्रदीप जी, गुड टू हैव यू एज ऑलवेज। होप यू हैव अ फैंटास्टिक वीकेंड अहेड एंड वील कैच यू सून नेक्स्ट वीक ऑन द सेम एडिशन ऑफ डेली कॉल्स। थैंक यू सो मच फॉर बीइंग विद अस। Viewers, we are at 23,380, about 40 points lower in this session, and we are going to be winding up Daily Calls edition right here, but do stay tuned. Much more is coming on the markets right up next for you.
silent guardian and one of the world's most feared air defense systems. India's air defense shield has just become stronger and deadlier. India has received the 4th squadron of the Russian-made S-400 Sudarshan Chakra. Defense sources tell India today that the system reached India after final inspections in Russia and is expected to be deployed in Rajasthan, strengthening India's missile defense network facing Pakistan. The arrival marks another milestone in the landmark 2018 defense deal signed in Moscow. 3 squadrons are already operational across strategically sensitive sectors. The 5th and final unit is expected to arrive by November 2026. But the S-400's reputation was forged not in exercises but in combat. During Operation Sindoor, the Sudarshan Chakra emerged as a critical force multiplier. The system thwarted multiple Pakistani aerial threats and was instrumental in securing one of the longest recorded surface-to-air kills, bringing down a high-value Pakistani surveillance aircraft from a distance of over 300 kilometers. Capable of detecting and engaging multiple targets simultaneously up to 400 kilometers away. The S-400 works alongside indigenous systems like Akash and MRSAM to create a layered air defense umbrella over India. From the skies, over the border, to the heart of India's strategic deterrence architecture. The Sudarshan Chakra is no longer just an imported weapon system. It is rapidly becoming the backbone of India's air defense shield. With Manjeet Negi, Bureau Report, India Today.
A very warm welcome back on Business Today, ladies and gentlemen. In our Market Guru series, we are looking at individuals and professionals who have navigated the bull and the bear market with equal ease. We are speaking to individuals who are at the moment managing money, public money, and have navigated many bull and bear markets over the last 20-25 years. Joining us on the show today is Ms. Aparna Shankar, Chief Investment Officer for Equity at the wealth company AMC. Ms. Shankar is a very well-known face in the world of fund management. She spent considerable time, over 15-17 years, with the SBI Mutual Fund and has worked in the past with other asset management companies as well, and has a very strong grasp on the market. Namaste, Ms. Shankar, a very warm welcome.
Namaste.
We are in a volatile phase of the market where one really does not know the general direction of where equities are headed domestically. And at the same time, markets such as Korea, Japan, Taiwan are surging by leaps and bounds. It creates a feeling of missing out on a rally which may have been on Dalal Street. How are you navigating sentiment at the wealth company? What do you think about the state of play of equity markets as of now?
Okay. First of all, thank you so much, Shalendra, for inviting us and for this wonderful opportunity to directly communicate with the investors and then the investors fraternity. You very well pointed out that it's we really are not finding a particular trend. But let me put a disclaimer first: is that market has to be dynamic. If it kind of trends either ways, up or down, that's not a characteristic of what market is. So market is always like a heartbeat. It's it's going up and coming down. But I think last 2-3 years, or maybe I can refer to the previous year, maybe the post-COVID times. Those 2-3 years have really spoiled the way the investors got their money back or the kind of returns they have, generated over those 2-3 years. And now the last 2-3 years have not seen that kind of returns. So everybody is confused. Even the fund manager fraternity is confused. What is it? How the markets are? Where are they trending? But as a fund manager, I believe that our, kind of responsibility is much more in these kind of turbulent times, because this is where the opportunity for, a bottom-up stock selection or having a higher conviction, understanding the business is much more, and then deciding to take a stake in any company has a much more relevance, जब भी मार्केट एक तरफा जाता है या ऊपर ही जाता रहता है, I mean there is lot of inefficiency which creeps in. And these are the times where that, inefficiency is, it doesn't get rewarded, and you have to really do a lot of fundamental and, of course, the technical, base should be stronger for us to build those portfolios which are beating the benchmark and even competing well against the peers.
Okay.
So I totally agree. I mean, it's a confused times, and that's where the ground for the bottom of stock selection is very sound for us.
Absolutely. Ma'am, you've started work as an equity analyst in SBI Mutual Fund, and then obviously graduated to manage many portfolio schemes, and you are also the fund manager for the retail business. Tell us at the wealth company, what exactly are you looking forward to? What are you telling your investors, your initial customers as to how to navigate the next 6 months to a year, given the pain that we are in? Last 2 days there was some relief on IT. Today it's been thrashed black and blue. And similarly, you have, various sectors going up, but overall the market is down.
So that actually, is showing that there is lack of patience for all the participants, be fund manager, be investors, that is the major trend I can see. There is a lack of patience. So wherever we are seeing some profit, we are trying to book that profit so that, in few days it should not fizzle out. So that has been the overpowering thought for, I think, every one of us. As you rightly pointed out, I have worked with SBI Mutual Fund, the largest mutual fund of the country, and the learnings what I had at that organization are really helping me a lot. I mean, the kind of our focus at the SBI Mutual Fund on the processes and systems was very. I mean, a lot of focus was there. That is the culture or the philosophy what I am trying to inculcate and set here at the Young AMC, the Wealth Company Mutual Fund. And we have team members who also believe in that philosophy, and we have started focusing on that philosophy and building our processes and systems which are more helpful in the long term, because that is where a Young AMC has to focus. I mean, it's not about a star fund manager or something. If your process and system are your star, that is where an investor will get, they will repose confidence in the capability of a Young AMC, and that's the very solid foundation for any Young AMC's growth is what we believe.
Okay. Aparna ji, what are the products that you have in mind for the wealth company? Of course, I'm sure it will focus on equity initially.
Yeah. So, we got our mutual fund license in the month of July, and we had our first set of NFOs in the month of October. So since October to now, we have launched, actually our 12th product is open for subscription, which is a large and mid-cap fund. And we have, multiple equity schemes like flexi-cap, small cap. Now we have large and mid-cap. We also have hybrid funds like multi-asset allocation, balance advantage fund. We also have liquid and arbitrage. We have gold ETF, gold fund of fund. And we also have two products in SIF, so which is a new baby on the on the block, becoming more favorite now, with a lot of investors having a higher risk appetite and want to try this product also. So the vision, Madhu Lunawat, who's our promoter, her vision is to have full bouquet of products, offer equity and fixed income products, and then we graduate over towards other momentum or kind of alternate products also.
Okay. At SBI, of course, your grounding was towards creating long-term generational wealth via equity funds. What is the broad thrust at the wealth company? What are the 2 or 3 research themes that you follow? What is the game plan for, say, 5-7 years? Why should investors come to the wealth company?
Perfect. I mean, very timely and very relevant questions. Thanks for that, Shalindra. So when I joined the Wealth Company Mutual Fund, the initial days, I spent on a lot of, brainstorming about what investment philosophy should be. And should it be person specific, or should it have, should we have a organization level investment philosophy? And we found that there are a lot of benefits, added advantages of having an organization level investment philosophy rather than being restricted or focused on one single person, because this is if it is an investment philosophy which is at our organization level, whosoever comes here in this company, whosoever joins as a fund manager and analyst, they understand, they speak, and they communicate the same language. This is our philosophy, and how we are going to manage funds in the similar philosophy. That is across the fund management team. So what is that philosophy? I mean, when I started managing funds in 2012, I talk about this at many fora, that most of my peers or maybe the senior fund managers used to have a pride in saying that I have a buy and hold strategy. But if you remember that time, 2010, 11, 12, that was the time when everything in India was also changing a lot. There were many changes which were happening. Businesses were having a different form and shape. Many businesses were getting disrupted. And in that environment, buy and hold strategy would not have, given a results. So I adopted my investment philosophy to look at what is changing internal to the company, what is the internal environment which is changing, and what is changing in the external environment of a company. And when I joined here, we said that change as our investment philosophy, because we feel, I mean, it's a cliche, I mean, change is the only constant, but we have an important important factor attached to every alphabet of this word change. And to take care of the technical factors, we have an overlay of age. So change plus age is our investment philosophy, and change takes care of many factors, very important factors, I can tell you. Like see for the capable management, historical performance, even governance. And what is a major part of this philosophy is also we talk about exit strategy, when we should exit a stock or rebalance a stock. I mean, we have those factors defined, and we will not shy away from taking decisions. We will not get confused. What should we do at this point of time? That is why it is important to have that also to be part of the investment philosophy. I think that is one way, and our executive team is all senior people. I mean, everybody has a domain knowledge of more than 20 years. I have been in the industry for almost 35 years. My colleagues, other from fixed income, are also has more than 20 years of it. I think considering the times becoming so volatile, experience.
You're barely 30 years of age. How can you be 35 years in the market? Mathematically doesn't fit.
Yes, of course. Why not? अरे इंडिया में ही होगा ना, ऐसे थोड़ी कि यूएस में ही होगा.
जी. Okay. Aparna ji,
so I was working with UTI for 15 years and SBIMF for 18 years and 2 years at Sahara. So you add that and see.
You missed out Birla Global.
Yeah. But Birla Global was not exactly markets. So
Yeah, that was on the credit side. Fair point. So we understand now the philosophy and the psychology behind the wealth company. Where is fresh money going in? Where do you think there is value in the market to be had despite volatility, despite potential pain? कहाँ बाजार टूटे भी तो भी अपर्णा जी पैसा शायद बन जाए?
सो पहले तो मुझे आप ये बताने दीजिए कि ये फ्रेश मनी और एग्जिस्टिंग मनी में मैं कोई डिफरेंशिएट नहीं करती हूँ, क्योंकि जो मेरे एग्जिस्टिंग इन्वेस्टर्स हैं और जो नए इन्वेस्टर्स हैं वो उनको सबके लिए पैसा बनाना है, सबके लिए रिटर्न्स बनाने हैं. एंड अनदर थिंग इज दैट ऐसे तो हो नहीं सकता है कि मार्केट काफी टूटे और हम लोग टूटे नहीं. But if it is relatively come today, so I think that is an
relative. You have to outperform. Market falls 3%, you fall 2.1. Market rises 5%, you rise 7.1. खेल वो है.
बढ़िया. So see, we are if the markets were kind of a steady state, not so volatile, my tactical calls would have been in the range of 10 to 12%. But now, since the market is, are becoming so volatile, and volatile is a friend of fund management category. I mean, if you think about, मेरे radar पे कुछ stocks ऐसे होंगे जो price के लिए मैं खरीद नहीं पा रही हूँ, and in these volatile markets only those opportunities emerge where I am liking some stock and that price is also very good to enter. So I don't see volatility as a कोई दुश्मन नहीं है, हमारे दोस्ती है. So that is another advantage what I look at into volatility. And if you ask me where is that, the sector rotation is happening very quickly. Defense was one of the favorite sector which gave a good returns in the last few months, or maybe till last few months. Metals have continued the rally. And then there is, engineering and capital goods sector. There is a power generation, power distribution. These are the sectors which have been, held strongly. But the valuation are not so great, or maybe I have to think twice. Should I continue to invest in the stocks? But then the universe is so big, and we as a young AMC do not have a constraint for like liquidity constraint, which many bigger AMCs, our competitors, have. So we can actually be more tactical, more agile, enter a stock, book profit and exit without impacting the cost for the investor too much. So that's exactly what we are doing. I'm not saying that we have totally, portfolio churn is happening, but wherever there is, opportunities, like take an example of IT. In the first leg of IT correction, we also got hurt. I mean, we were not overweight, but we had a good weight in large cap companies, not so much weight in mid cap IT companies. That's where we got hurt. But then we changed our stance. We said, okay, we'll be underweight. And when that failed, I mean, it looks very, kind of hard to believe, but that's what we did. When it were, now we can see it was a close to bottom kind of valuations or prices, there we entered. But still we are not so hugely overweight. We are just maybe little less than the benchmark weights. But here also now we changed our stance. We said IT large caps, we are not so, big overweights. But what we have in our portfolios is more of IT mid caps. So that is, I'm just giving you an example how we are trying to do this, in a more tactical way is what we are looking.
Okay.
Banks,
I don't have much access to your portfolios immediately. Aparna ji, what's the bias at the moment overall at the AMC level? Is it more towards large or mid?
We have large, and I can tell you after large we have little more bias towards small cap and little less representation in mid cap, because mid cap has not hugely corrected. The valuations are still not so great or mouth watering kind of valuations to enter at left, right and center. What has to happen now is that earnings growth has to come. There has to be some earnings revival, which in fact we were seeing in last 5 quarters incrementally. If you look at 5 quarters back, that was the quarter where revenue growth had started reflecting. There was not much growth at a profit level, but after the September 25 quarter, where we saw profitability growth was also happening, which continued in the quarter of December. But what happened in the March quarter is that 1.5 month we got suffered because 1 month basically got suffered because of the West Asia war, and as everyone expects, June quarter will not be so great.
Yes.
So, but then from September quarter, we have to come back. And the majority cost for us is, what is the majority worries about for us as in India is the crude price. That is going to impact a lot of things from the government to the private consumption. Everyone in the value chain will get affected. We anticipate that maybe at some point of time, RBI also has to increase the interest rates. In that, the immediate beneficiaries would be the private banks, which have been suffering for last many quarters, many months now because of the FII outflows. But I think these are the valuations which are very attractive valuations and will have some additional weight invested into private banks. And then the capital markets is at a tricky position because we hope and the inflows are continuing in the equity market. So the capital market plays are also doing well. Right. Distribution is also doing well. Wealth management is doing well. But with some correction, I think they will also start looking better valued. And it's a long runway where these companies have, we are just talking about few quarters, and this is going to be multi-year, multi-magger kind of sectors.
Aparna ji, your view on the rupee, is the worst behind us?
Looks like. यहाँ से अगर थोड़ा सा बिगड़ सकता है, but maybe the intensity of that will be low.
Fair point. That's the most precise and the best answer I've received in many days as far as the future of the rupee is concerned. There is this another, how should I say, issue in the market that Dalal Street is no longer attractive. We must invest overseas. And the problem is that there is the RBI cap of $8 billion on the mutual fund industry, so you can't buy anything new. And LRS is $250,000. That's not very convenient to retail investors, just as local buying or selling is. Which side of the equation are you on? Despite the rally in Asian markets, despite the record highs on Wall Street, are they still presenting an attractive picture to you? Every day we get, one corporate honcho saying, total Indian corporate profit is so many $1 billion, and one company has in America put in so much of $1 billion of quarterly profit. हम लोग क्या कर रहे हैं? भाई उनसे भी तो पूछो वो खुद क्या कर रहे हैं. हमें ज्ञान दे रहे हैं, लेकिन how do you see this equation?
This is, in recent times, the retail investor has behaved little differently. But if you go back, maybe pre-COVID times, this was exactly the psyche of a retail investor. So they were chasing those asset classes which have done very well in the past few years or something like that. That is where it starts coming up in their radar. Okay, this geography has done well. This asset class has done well, and we would have seen that in gold and silver also, the kind of ETFs or the commodity plays were happening. So that is one thing. Another thing is that rupee at this level, if they try and invest overseas, and maybe in 3-4 years times when they try and bring back that money to India, there will be there will be impact on their savings of at least 3-4% because of the conversion, rupee conversion, or any other currency to rupee conversion. That is another thought or another area which I think the investors have to be mindful about. Third thing is that, again, some of these geographies have done extremely well in last few years. So, we have seen that in India. We were doing so well, but that it is always about the cycles,
You know,
it's always
Aparna
about
ji, correct.
mean reversion.
I'll share a very interesting line with you. This is a common peer. You've met him many times. I was speaking to this gentleman in previous week, and he made a wonderful statement. He said 3 years ago, 4 years ago, India was the toast of the world. Now we are toast.
We can't even say glass is half empty. It's all empty. Okay. So I think even, in fact, fourth thing what is important or interesting is that, in fact, for FIIs, this kind of rupee level is very enticing, should be very enticing, isn't it? And I think there will be some few more, kind of underperformance by India, and then it will start really looking very attractive for the. Finally, they are also asset allocators, no? उनको कुछ ऐसे प्यार मोहब्बत तो है नहीं ना, मतलब जहाँ पे अच्छा पैसा बनेगा वहाँ invest करेंगे. So they will also be looking very keenly at how India. But then whatever you said and done, the underlying truth is that earnings have to revive. That's where almost all the things will fall in place. Then maybe you will not worry about whether these, valuations are reached or heightened or whatever.
Aparna ji, it's such a pleasure speaking to you, and we hope to interact a lot more over the 10 funds that the Wealth Company has launched. They are the Flexi Cap Fund, the Large and the Mid Cap Fund. There's a Gold Fund as well. Your biggest product is the Liquid Fund. And here's wishing you all the best. I'm sure it'll be a great investment journey for all those who have invested in the Wealth Company. Have a nice day.
Thank you so much, Helena. Thank you for this time. Take care.
That, ladies and gentlemen, was Miss Aparna Shankar, CIO at the most recently launched AMC in the market, the Wealth Company. Please continue with Business Today Television. Lots of exciting things ahead.
Hello and welcome to Business Today. I'm Siddharth Zarabi and you're watching Easynomics. Joining me on the show today is Harsh Gupta Madhusudan. He's an author, a fund manager and the chief India strategist at Ionic Wealth. Harsh, welcome to the show. We have had these conversations in the past, and as we speak today, there are several things which are right up in the air. And let's make it easy for our viewers, as always, to pick up some of the key and critical questions as far as India's economy is concerned. And I want to begin this conversation today with the Indian rupee. The worst performing currency among many in its peer group, and this is causing a lot of discomfort. It's also an emotional response as well as impact that we are seeing as far as the fundamentals are concerned. Begin by telling us and explaining to our viewers what, in your view, is leading or has led to this decline in the rupee.
Siddharth, it's excellent to be on your show and to talk to you after so many years. First and foremost, there are two parts of any balance of payments of any country. There is the current account, which for simplification we can call the trade account. And then there is the capital account or the finance account, again to simplify. India's trade account, Siddharth, is broadly balanced. It is in the deficit. Goods, merchandise deficit is $300 billion, but then we run a services surplus of around $200 billion, and then remittances comes under current account, etc., etc. So that's Last year, for example, current account deficit was only 0.8% of GDP, or around $30 billion. The problem is, historically, the current account deficit, however small or big it was plugged in by capital inflows, which was basically net FDI and net FPI. What we are seeing for the last couple of years is that the net FDI and net FPI part, on the FDI part, has gone to zero on a net basis, not a gross basis, and on the FPI part to a negative. So because even a very moderate current account deficit, although it includes $72 billion of gold, is not being plugged by the capital side of things, the way we define this conventionally. That is why the RBI has been forced to sell reserves, both in the spot book and the forward book.
Yeah.
Because of this 2-3 years of balance of payments crisis. So, and why has that happened? Just to quickly, again, in easy terms for your viewers, because there has been such a rush of domestic money, and there's nothing wrong with that because it's a structural story, SIP. At the same time, Indians have also continued buying gold, for example, as I mentioned, 2% of GDP last year, even though we hardly produce any gold. So when foreigners were diversifying into our markets, we were diversifying into gold, let us say, to simplify a bit, it balanced out. When they have not been able to diversify into our markets because of various reasons, AI and tariffs and gold and energy prices and Indian domestic flows, whatever be the reasons, if they are not on a net basis, although gross basis, FDI was the highest ever in FY26 at almost $95 billion. But if they're not being able to diversify into India on a net basis, therefore the government of India is forced to take some measures on the external account on the gold side and given the war on the oil and gas side.
Harsh, let's take those last 2 points. And the first one, therefore, is that was it, in hindsight, a correct decision to keep pump prices frozen for 4 years? In fact, many people forget that there was actually one cut sometime in December 2024. But was it good pricing when it comes to the fact that petrol and diesel did not change for 4 years and now you've kind of had to bunch the impact?
Siddharth, ideally speaking, the answer is very simple, but we don't live in a simple economy, we live in a political economy. Ideally, the pump prices should change every day the way they happen in the US or Europe, etc., where there are taxes and private players decide the prices. Having said that, given India is a per capita poor country and we have a history of control, the next best thing was to keep them broadly in line, tweak the taxes, make sure you don't issue too many oil bonds, OMC bonds. So because last 3-4 years, except the Ukraine, kind of uptick during 2022, oil prices were rather benign. This was basically a way for the government to raise revenue, to also incentivize a movement towards hybrids and EVs, etc., etc. So kind of a Pigovian environmental tax, if you will, which also was revenue generative. Now that because the Brent again went above $100, although right now it is in the 90s, it was no longer feasible to keep it there, given that the rupee had also depreciated, as we discussed. So with the rupee and the crude or Brent both in the 90s, as soon as the election results were announced, it was inevitable that the government had to move because the next elections are in February and you could not subsidize petrol and diesel prices at the pump for almost another 1 year. So I think the government is doing the best decision in this second best world by increasing prices on a daily or a weekly basis. So there is no headline kind of shocker, but cumulatively the price increase filters through because it's very important to pass the price signal. The government obviously cut taxes by 10 rupees even before the election results to absorb some of the shock from OMCs, but it cannot do it on a permanent basis. So yeah, maybe not the first best solution, but given the reality of politics, I think it's a reasonable strategy that they're following.
Have you studied the manner in which our oil marketing companies benchmark their pricing and they benchmark it against international levels? Although they obviously, acquire dollars to purchase that crude and then all the value addition happens in Indian rupees. It's been years that we've been struggling with that fundamental concept of how do we price that. There are different committees who have given different reports. is it also time to consider a fair and justifiable formula that then filters across the ecosystem?
Well, I agree. See, I think anyway, the right thing is to do is the government has its own taxes. And then after that, different companies can have a few paisa here or there. But you're right. In reality, we end up having a standardized pricing, and a committee to look into it in more deeper would help. But I just want to take a step backward and say, because again, the viewers' big picture is important, that as a percentage of GDP, Siddharth, India's oil imports or crude imports have been secularly or structurally going down. So every now and then when the prices go up like it has right now, there is a bit of a wiggle up. But on the whole, the oil intensity of Indian GDP in real terms, in inflation adjusted terms, is constantly going down, which is one of the reasons, even though the rupee is at lows in nominal terms against the dollar, in real effective exchange rates, it is extremely undervalued. Even compared to a year ago, it is down by 10%. And if you do REER of the Indian rupee compared to the US dollar, so that bilateral, it is at lower levels than even the global financial crisis. So part of it is the dollar cycle, which has been going up for the last 15 years and is just turning down as we speak in the early days. So just to kind of again mention the rupee to the viewers, I do feel that once this current geopolitical crisis resolves itself, we will find that the rupee is a bit oversold and undervalued, and crude is a bit overpriced. Because remember, structurally, the global crude market has been oversupplied by 2-3 million barrels per day. Now remember, Venezuela has come online, US shale to some extent has come online, and the Strait of Hormuz, which has knocked out 7-8 million barrels per day, let us say, even after some redirection, is something that can be taken care of. Right now, of course, America and China are using reserves strongly. India has also dipped into the reserves a bit. So this cannot continue for long, infinitely. But fundamentally, the oil market is oversupplied once the geopolitical crisis ends. And fundamentally, the rupee is undervalued once this geopolitical crisis ends.
What, according to you, is the fair value of the rupee?
So it depends where you are in the cycle. So for example, just 1 year ago, the rupee was around 85, 86. And right now it is at 95, 96. And as I told you, last year, your current account deficit was only 0.8%. That is minus $30 billion. And that is after spending $70 billion on gold. So ex-gold, it was plus $40 billion or plus 1% of GDP. Remember, India as in Indian families, have more than $4 trillion of gold. So more than 100% of GDP. So economists have a term in the markets called NIIP, Net International Investment Position. The Net International Investment Position is a country's net foreign assets minus foreign liabilities. So India is seen as minus 10%, but that is because according to IMF convention, gold is not calculated unless it is owned by the central bank. If it is owned by families, we call it consumption, etc. If you take that, India has one of the most positive balances in the world. So effectively what has happened, Siddharth, in the last 15 years, all the current account deficits of the last 15 years cumulatively were basically gold imports. And that is why people may have been a bit shocked given the tradition and culture surrounding gold in Indian idiom and civilization, that the Prime Minister requested people not to buy new gold for a year. They're trying to come up with policies to incentivize more domestic recycling of gold. They've increased the import tariffs from 6% to 15%, what it was 2 years ago. So according to me, the fair value of the rupee, even at this turning of the dollar cycle, is more in the 80s right now, not in the 90s. But the fair value on a day-to-day basis is obviously determined by the market. In that sense, it is tautological. The price is what is fair. But fair, I am using it in a fundamental sense. And as we all know, in markets, sometimes prices divorce or diverge from fundamentals. In that sense, the fair value is definitely significantly higher than what 95, 96 implies.
Viewers, not strictly comparable, but if we were to try and stretch what Harsh said, and I try and explain it through an analogy, what he's really saying is that while you as a buyer might feel that real estate, a 2-bedroom apartment should be priced at X, it may usually not be priced at that level. It may be much higher, and you might feel puzzled as to why this is the case. But there are multiple other elements due to which that happens. But staying on the subject of gold. You mentioned the Prime Minister's appeal, and that appeal had a mixed reception.
Yes.
One side was, of course, that the Prime Minister is pointing out something. It's a complex emotion, Indians' relationship with gold.
Yeah.
You pointed out a very, very important point that if you were to sort of take individual household holdings of gold and put it together in a basket, the numbers and the situation looks very, very different. But the other side said that what the Prime Minister's appeal may have done is to create a situation where consumption could get affected. Do you agree with that view?
Yes, I think, of course, see, in any democracy, people have different views. And for good reason, Indians have historically had skepticism about state power, about the state's inflationary capacity. And this is why gold was a perennial refuge for very simple families who don't have to be very financially literate. And it has done broadly okay. Although I must add that some of the allure of gold at the retail level is anachronistic. Most transactions used to happen in silver. The word rupee comes from silver. Gold was always more for the elites, but nonetheless, it was always an important part of a culture. And given now that financialization is happening, see, please try to understand, if you're spending $72 billion of your GDP in gold, around 2% last year, that is 2% that is either not letting the rupee appreciate to a fair value, or intermediate goods that you're not importing from some country, or machinery or capital goods that you're not importing from Germany, Japan, or even China, etc., or money that you're not spending or investing somewhere in hard infrastructure. Unlike China, which I think produces 30 to 40% of its gold, India does not produce basically any gold anymore. I mean, the KGF mines are now more stuff of legend and movies than reality.
Absolutely.
So unfortunately, while we think we are being traditional, what we are actually doing is we are taking the money and passing it out. And I want to say, if economists do something called a Balassa-Samuelson effect, in fact, even Jagdish Bhagwati has written about it. The idea is, as a country gets richer, as India grows at 7%, America grows at 2%, and India gradually grows to America's level, the price levels of the two economies start converging. So without going into too much technical jargon, in that broad understanding of economics, where the rupee should be and where it is a difference. And one of the key differences is the gold import obsession of India, which has to be very fair, has been a great investment. The last 25 years, gold has beaten almost every single index on the planet, and most of the times, even including dividend reinvestment. So who are we to say it's not a great investment? But just as the government tries to control beyond a point, you and me buying Apple stock or Nvidia stock because of liberalized remittance scheme, because of gift city limits, because of what have you, mutual fund limits, because of the way gold kind of falls between the cracks, it's an investment, but it is classified in the current account, not in the capital account. It has no ceiling limit to it. And therefore, the government occasionally has to adopt macro-prudential measures or tariff measures when it gets a bit too overheated. So it is one of those things where, as Indians realize that low inflation, at least 4% inflation, is broadly here to stay, and as the rupee stabilizes, this import requirement may reduce. Remember, even $70 billion is less than 2% of all Indian gold. So if only 2% of Indian gold is sold by people, because most people don't sell, they just keep it or maybe take loans against it now. If only 2% of Indian gold is sold within India, you don't have to import from outside. And the key point here is not that gold consumption should go down, but gold imports should go down and recycling should go up. In fact, Nilesh Shah of Kotak had an excellent idea a few months ago in one of the newspapers that the RBI could buy some gold from the people, because when the gold goes into the central bank hands, as I was saying, it gets classified as forex reserve and as financial asset. So you could actually augment your foreign exchange reserves without actually sending money abroad. So there is a bit of a classification arbitrage there, but without, I think there's no reason to panic or anything. The Prime Minister's appeal, as far as I understood, was just to moderate the imports. I don't think anybody realistically expects $72 billion to go to zero in 1 year. But even if it is $30-40 billion lower, in the next 2 or 3 years, that's a substantial percentage of GDP.
That's an important point there, and we should also recall for the benefit of our viewers that a sizable chunk of that gold that is imported is then worked upon, value is added, and it gets exported out of the country in form of gems and jewelry, and also decent forex earner and employment provider. On the issue of gold, you recall what happened with the sovereign gold bond scheme. So much so that perhaps, and we don't know, we don't have access to the internal deliberations in terms of the design of that scheme, but it's clear that the government had to pull the plug on it because there was basically no hedge that was put in place. Was that a failure of design in terms of policy intervention, and the fact that that might have not been so great, but there is no alternative that is also being put on the table except telling people to take an emotional call on not purchasing what is one of the safest assets that we have ever known, that humanity has ever known?
You are absolutely right. See, beyond a point, emotional calls or calls of patriotism do not work in mass commercial settings, beyond a point. And so in that sense, I fully agree with you. I also agree with you. There were significant design limitations in the earlier gold bond schemes and monetization schemes. It was an open-ended, non-hedged. I don't think anybody anticipated that kind of gold price move. And that was obviously one of the flaws of the scheme. So as I was mentioning, besides increasing tariffs a bit, one of the things that the government can do is at least temporarily reduce or remove the capital gains tax on gold, so that people who want to sell it don't have to pay that tax, and the domestic recycling, the velocity of recycling within India of gold increases. And then, of course, there are broader issues which at a political and judicial level have to be solved, if how much, some kind of amnesty scheme involving gold. So that is beyond our discussion levels, but that can also be considered at one way of getting a lot of gold out, get it declared, pay some fine, and then you are in a kind of more in the financial economy, so to speak. You don't have a headache, the government does not have a headache, some kind of win-win is possible, but it has to go through the right channels of the legislature and the judiciary. But broadly speaking, coming back to Indian macro, since you discussed a lot on the gold and rupee, I feel there is a misunderstanding, Siddharth, if you allow me to say this, that either the rupee can be defended or the markets can be defended. And I think that's not true, in the sense that there are many kind of balance of payment schemes. Some people have talked about the FCNR scheme, like the RBI did in 2013. I've spoken about gold OMO schemes based on, for example, Mr. Nilesha's idea. So you can augment reserves relatively quickly, one way or the other. The main point, the markets have consolidated for 2 years in India, especially the large caps, is because earning growth slowed down. So Nifty 50 earnings per share has grown by at most 12% over the last 2 years, not compounded, over 2 years cumulatively. And I think now earnings are coming back in double digits, because what had happened was we had fiscal consolidation and monetary consolidation simultaneously during the 2024 elections and a few quarters after that. One of them is perfectly fine by itself, but the two of them together at full blast caused our nominal GDP growth to go to single digits. And by some estimates, March quarter was the first quarter in 3 years to have double-digit top-line growth, even though earnings have been doing better. So imagine if your large caps, your blue chips, are not giving top-line revenue growth in double digits for 2-3 years. Ultimately, markets and prices are a slave to earnings. And that is, I believe, what happened. I think we are now on the mend. Bank credit growth is growing at 16% year on year, which was 9% as soon as May or June of last year. A nominal GDP growth rate is likely to be good this year, in part, ironically, because of the war, but even otherwise. So I think we are doing okay if this situation gets de-escalated in the next few weeks, although we've been discussing about that for the last few weeks. If that gets de-escalated, I think we are still in very reasonable hands. But I think because earnings were slow, all kind of other reasons got attributed. Whatever is your petty cause, my petty cause, we all put our causes on social media, on the markets. But the real reason was just earnings.
Absolutely. And like you said, we've been counting the days, the past 94, 95 days as to when this conflict will end. Let's try and pack in two, three other topics in the time that we have left on the show, and I'll try and keep this quick. Do you think a reversal in terms of foreign fund inflows is possible? And if so, what needs to be done, both in Delhi and perhaps in Mumbai, to trigger that?
No, see, absolutely. There are always things you can do to make life easy for foreign portfolio investors. People have spoken about paperwork, registration requirements. A lot of people are speaking about long-term capital gains. I've spoken about the dividend taxation. But let us remember a basic identity, accounting identity on a daily basis. Your DII or mutual funds, broadly speaking, plus FII, plus high net worth individuals buying or demand thereof, has to mechanically equal your IPO supply, your QIP supply, and your promoter supply. So when your supply is not too high for whatever reason, because markets like last year was great for IPOs, this year is relatively cooler than last year. If supply is not too high and DII is getting money from SIP, 30,000 crore rupees per month, then FIIs have to be mechanical sellers unless promoters start selling as well. If promoters start selling, then FII and DI can both be buyers. Because on every single trading day, the supply of paper and the demand of paper have to match. And in South Korea, the best way to understand this is, which has an AI story where the market has doubled in a few months and quarters. This year, year to date, 2026 calendar year, FPIs or FIIs have sold $80 billion in South Korea and only $25 billion in India. Even the Korean won is under pressure, like the Indonesian rupiah, which is a commodities, and of course the Indian rupee itself. So why? Because the Korean domestic segment is going all in into their markets. It may end well, it may not end well, it's a separate story. But whenever domestic is buying a lot, foreigners get basically frozen out, so to speak. So I think foreigners coming back, being a price signal that Indian markets are attractive again, the logic is slightly antediluvian. The more important thing I'm again insisting is actually earnings. Earnings is one important part. The balance of payments is one important part. And if Indians want to double down on Indian markets, the FII percentage is already down from 25 to 15%, may stabilize at 10%. Once promoters start selling, because the concept of promoters is not there in the US market, for example. Indian promoters own half of Indian stocks, the listed market cap. Therefore, the free float by definition is already beginning at half. If that goes down to 40% over the next 5 to 10 years, then you have 10 more percentage points of the Indian market cap, which is up for grabs. In that situation, FII and DI both can buy. But I don't foresee a situation short of a crash where DIs are not buyers. And if DIs are buyers, then FIIs cannot be buyers unless there is supply. So this is important to understand. It's a bit of an accounting identity, but it has again got lost in narratives, Siddharth, is my humble submission.
Absolutely. The Monetary Policy Committee's reading of inflation and consequently its decision on interest rates will be known this Friday. How are you reading inflation, and should we be ready for a rate hike?
See, there are two things, what should happen and what is likely to happen. What is likely to happen is difficult for me to say. I think maybe the markets are expecting it's close. Maybe they don't expect a hike if you are forced to pick one thing. What should happen is, I will say this, just a few months ago, we had CPI prints below the 2% limit. Our RBI target is 4% with a band of 2 to 6%, Siddharth, right? So there were months when we were below 2% on 2-3 months consecutively. Similarly, right now, the latest headline CPI number we have is around 3.5%, although the WPI number has come at 8%. So if you put a deflator together, if you do core CPI, we are getting higher, but not quite there. Because remember, you have to do a core inflation, which takes away food and fuel. And you also have to do what the RBI governor does, core inflation, CPI, which also takes out gold and silver. Because gold and silver in the last 1 year, silver is still up double or so in the last 1 year. Gold is up 60-50% in the last 1 year. So even though their weights are small, since the percentage increase is so high, so core inflation, even with the new series pre the war, was running at 2-2.5%. Even if it is 3-3.5% right now, I think the idea that RBI must hike to defend the currency, etc., while choking growth, it may be too premature right now. If things get worse and there is no de-escalation geopolitically, I think in the next MPC meeting, what you are hinting at may be seen.
Absolutely, that's a fair assessment. We move to growth, and that brings me to the last part of my conversation, and this is your own expectations of growth. We never knew on the 28th of February that we would be staring at a March and a April and a May of the kind that we have seen, and we still need to see an end point there. What do you expect to happen to growth this year as far as India is concerned?
I think, Siddharth, once again, while without giving you false precision, I think it is important to contextualize for the audience that the last couple of years have constantly seen growth surprises on the upside. And there are a couple of reasons for that. One, we are coming out of COVID, so there was some slack compared to not the GDP level, but the GDP trend. And the only major economy which had caught up to the trend was the United States on the back of massive monetary and fiscal stimulus. So anyway, I think some economists were being a bit too conservative, and therefore the last 2 years have seen growth surprises, number one. Number two, I feel while there will be an impact of the war, the broader issue of Indian growth, or what is Indian trend growth, or what economists call potential growth, remains higher than most people think. One way to see that again is core inflation. If your core inflation is between 2 to 3% for 2 to 3 years, at least 2 years, that shows what economists call slack in the economy. So not all factors of production are being used to the full extent. You can look at RBI's capacity utilization numbers. They're in the mid 70s, now finally going towards the high 70s. When some brownfield capex begins, around 80 greenfield capex begins in mass. So I think right now, Indian growth is still being underappreciated if you take out this particular episode of the war. I would say, given the demographic transition, the 25 to 65 age group, which kind of bottomed out in the 1970s, and will peak out in the early 2040s, I remain more constructive than consensus or than the street on growth. So I don't think exact numbers are useful, but let's say the war gets de-escalated. I would not be surprised if we get a 7% plus growth number even in FY27.
Okay. And if there were to be some radical measures, including some of the ones that have been publicly espoused by you and so many other economists and analysts, and you mentioned some of those in our conversation just a little while ago, what do you think? Would it be a sentiment uptick that would also feed into headline numbers eventually?
Yeah, so I think some of the measures more are about balance of payment. Some of the measures are more about taxes, which will help, capital market confidence. In an indirect sense, in a gradual sense, they will feed into growth numbers also. I don't think there is a one-to-one impact on real GDP growth rate in the same fiscal year. The impact is generally broader. So unless there is a big movement on the fiscal expansion, I would not expect some of these measures to impact your real rupee GDP growth rate in FY27 itself.
Absolutely. And viewers, that last answer is also very, very critical to understand the situation that the Indian economy is navigating. There are multiple factors, many of which are beyond our control, including our import dependencies for energy or for gold or even several other sectors, and systemic issues which we have spoken about. And therefore, do not expect a quick kind of reversal happening. It will be perhaps gradual. The timing is, of course, debatable. But as Harsh Gupta Madhusudan has just pointed out, it is clear that all is not too bad as far as the Indian economy is concerned. Harsh, thank you very much for your time with us today on this episode of Easynomics. We hope to connect with you soon again. Until then, goodbye.
Thank you, Siddharth. Thank you.
A warm welcome to you on Business Today Television, ladies and gentlemen. The markets are in fine shape as of now. The Nifty has recovered smartly from an intraday low of 23,250 all the way up to 23,425. It's now in the green. There are strong rallies that are emerging in the Nifty small cap index, up 113 points to 18,146. The mid cap index is also vibrant, 462 points higher, 61,150, and the Nifty Bank, of course, 200 points higher at the moment at 54,381. Remember, the early morning start was on a back foot, but slowly and certainly 23,200, 23,250 on the Nifty is becoming a zone where the bulls increasingly come in strength to defend it. Market advanced decline ratios are very, very strong. At the moment, 2,000 shares are on the green versus almost 900 that are in the red. The pharma and the energy index are the main gainers. The Nifty Media Index is doing pretty well as well. When you look at the broader gainers list as far as markets are concerned, look no further than Tejas Networks, 47 rupees higher, 615. You have strength which is coming into counters such as MMTC, 7% higher, 70 rupees. Sempro, this is the earlier ITD cementation, now owned by the Adani Group, about 63 rupees higher at 1,087. And Force Motors coming back into strength after a major corrective fall, 1134 rupees higher on Force Motors, 18,625. Apart from that, you have JBM Auto doing pretty well, State Bank of India in the green, and of course a very, very smart rally that is happening into stocks such as Himachal Futuristic, Ola Electric and the BSE. We'll be shortly joined by Mr. Siddharth Khemka, Head of Research and Wealth Management at Motilal Oswal Securities. We'll be joining him on the show fairly strongly, but a very, very nice rally, ladies and gentlemen, that's coming into the auto ancillary, especially the EV space, as also frontline auto companies such as Tata Motors and Ashok Leyland, Electra Green and JBM Auto. The Indian cabinet has cleared a proposal to do away with a large majority of old buses and trucks in the national capital, including the NCR region, and that has enthused a rally across the board. We'll be shortly looking at that space, but this is as good a time as any to welcome Mr. Siddharth Khemka. Namaste Siddharth ji, long time, a very warm welcome to you. It's been quite a while since we spoke to each other, and markets in that duration have been extremely volatile. What is the research team of Motilal Oswal Securities at this point of time looking to in terms of potential outperformers in the large cap and the mid cap space?
नमस्ते शैल जी, गुड आफ्टरनून. देखिए बहुत दिनों के बाद मैं ज्वाइन कर रहा हूं, बट आई थिंक आपके दूसरे कलीग्स के साथ मैं था इन बिटवीन, बट नाउ अब मैं रेगुलरली आ रहा हूं आपके चैनल पे, तो दैट्स अ गुड थिंग. Markets, if you look at what has happened is that we have just ended FY26, Q4 earnings have just ended, and mostly there are two distinct characteristics that has come out from the earnings. The larger indices, which is your benchmark indices, Nifty, earnings has remained largely flattish, and for the second consecutive financial year, FY26, Nifty earnings has grown at just 5%. But in sharp contrast to that, the mid-cap universe earnings has grown at a much higher pace at 16 to 18%. And if you look at that, on back of that, the mid-cap index touched the record high sometime back and is now, you can see, near the highs. So what we believe is that in the near term, the macro headwinds in the form of the high crude oil prices, which is impacting the currency as well. So both of which are a big factors likely to impact inflation. We will see, and here the RBI governor on Friday with the analysis, their analysis of the macros as well as the economic situation. But what we believe is that over the next 1 to 2 quarters, there could be a gradual recovery for the economy, and markets are likely to remain sideways, waiting for that recovery. In the interim, there are several themes, there are several sectors in the broader markets where earnings growth are pretty strong, management commentaries are pretty confident, and many of them are undertaking capacity expansion over the next few years to capture that incremental demand. And this is where we believe that this will not be a broad-based market rally, and you have to be very selective in this market.
Of course, being selective is one of the key constituents of turning out returns which are in excess of what market indices provide us. Siddharthji, what has been the general consensus of Motilal Oswal Securities in terms of Q4? As a research house and institutional brokerage, MOSL has always been at the forefront of cutting edge research. So what have been the two broader outcomes post Q4?
So definitely, I think if you look at, as I said, Q4 and especially the entire financial year, what we have seen is that from our coverage universe of almost 370 companies, there was a broad-based beat across sectors. So for our universe companies, the Q4 net profit grew at 16%. This was significantly ahead of our expectation of 8%. Sectors that led this growth, BFSI saw an 18% growth. Commodities led by metals saw almost a 50% growth. Oil marketing companies, because of the inventory gains, reported a 60% growth. While auto technology, I think they were stable at about 10 to 12% growth. Nifty at the same time, as I said, reported a 4% growth for Q4. It's eighth consecutive quarter of single digit earnings. So what is the outlook? What we believe is that Q4 FY27 earnings likely to remain soft. We are expecting a 10% earnings growth with a cautious outlook, and FY28 could see some recovery to about 14-15% earnings growth, supported by improving leverage, domestic demand recovery, and the key theme that is working in India is the manufacturing. So that is something that we are very positive on, and that could manufacturing could lead to growth in the second half of FY27, later part of 27, and bulk of FY28 could see the growth driven by manufacturing.
Let's look at the most relevant part of the market at this point of time. Siddharthji, the government is taking all steps to ensure the stability of the rupee after a very volatile and depreciative phase. Just yesterday, the government seems to have announced an ordinance where there will be leeways given on long-term capital gains, as also withholding tax for foreign institutional investors buying into G-Secs. What do you think of this step? Is this something that will help the rupee? And to what extent do you think it will change sentiment on Dalal Street?
So yes, Selji, if you look at, there has been a lot of chatter in the streets to expectations from the government to come out with any measures that can support the FIIs. The relentless selling is another factor which is kind of impacting the rupee. I think the first and the biggest factor is the sharp rise in crude oil prices and our import bills going through the roof, which will not only impact inflation but also impact the current account deficit. On top of it, the FI selling is only led to incremental dollar demand and weakness of Indian rupee. I think any of such incremental positive steps that can lead to some comfort for FIs into India, be it in the bond markets, be it in the equity markets, I think that will only help to calm the nerves for the currency market, and should be taken as a positive step going forward.
Okay, fair point. So that's out of the way. Now let's come to the mid-cap space where the mid-cap select index, the mid-cap 100 index have already hit a record high. Siddharthji, at this point of time, because you also run an AMC and the brokerage of course does fantastic work, what is the general tone and tenor of the thought process within MOSL about mid-caps? Where are you putting your focus on?
Yes, definitely, Seji. I think that's where the market focus has been clearly indicated by the mid cap index outperforming in this market. And I think selective themes within that is likely to do well. So if you look at some of these themes, as I said, the broader theme is manufacturing, the domestic market themes, which are less likely to get impacted by the crude, by the currency. And I think another factor which is looming on India is the monsoon. With the El Nino impact, I think the IMD forecast of a below average or a below normal monsoon this year, there are several sectors which will get impacted, and we should, at least for the next 2 quarters, should look at sectors which continues to do well. So within manufacturing, what we believe is that capital goods, power, infra, some of the AI as well as data center beneficiaries, metals is a pack which we believe would continue to do well. Wires and cables also within the consumer discretionary, that is likely to do well. So consumer discretionary itself now, after a slower start to the summer season, now looks to benefit from the extended summer. So companies like Voltas, Blue Star, wires and cables companies like Polycat, KEI. Within the power sector, we believe that power, cap goods, transmission, distribution, that entire value chain within the power segment, that continues to do well, and that is where our focus is within the mid caps.
Okay, fair point. Siddharthji, where did you find disappointment in Q4? What you had thought did not turn out in some sectors and is posing to be a major negative for that particular industry or the broader economy? What did not work well?
So yes, I think definitely if you look at oil and gas, that segment which posted a profit drop of about 10%, we were expecting a flattish number, so that was kind of a bit disappointment. Real estate is another pack where the disappointment kind of continues while the headline numbers sees some kind of growth. I think the disappointment in terms of delivery, as well as specifically if you look at the demand, that has been pretty weak. So that is another space. Specialty chemicals has been consistently seeing weaker delivery, both in terms of earnings growth. So, for example, March quarter, we saw chemicals net profit declining by about 12% on a Y-on-Y basis. So those are some of the sectors. Retail is another space where the demand continues to remain very weak. While at the margin we are seeing some recovery, but again Q4 numbers for the retail segment was quite dismal.
Okay, fair point. Siddharthji, when you look at the way FII net sales have panned out, especially during April and May, what is the general consensus within the peer group at your end? Because of the institutional brokerage, you interact with almost all top clients who are of a foreign parentage. What are they telling you? What is the gist of the conversation these days?
So yeah, I think the conversation largely revolves around the growth expectation, and India has been underperforming in terms of earnings growth for the last 1.5 to 2 years now. And if you look at globally, there are the while the headline discussion is definitely, you will see that the AI related stocks are seeing significant growth, but some of the other economies, emerging markets, there we are seeing relatively stable economy, earnings growth definitely being driven by some of these AI, you can say the chip manufacturing companies, the AI companies which are delivering supernormal profits growth, and that is driving the allocation from India towards some of these markets. And if you look at some of the other large developed markets, for example, Japan, which has now woken up after a long slumber, and now the economy is also showing some growth. The markets there have touched records high. So again, the yen can.
A warm welcome to everyone who's watching us on Business Today Television. This is Shail Bhatnagar, your host. We'll be focusing on the primary market for a change. The IPO market is abuzz with an issue from Hexagon Nutrition Limited. This is a company which is in the business of premix nutrients and also therapeutic and clinical products. Let me just give you a very brief input into what the issue is all about. It's a 139 crore rupee issue priced between 42 to 45 rupees per share. This means an implied market capitalization of 553 crore rupees. The issue is open for subscription today and closes on 9th and should be listed in the middle of next week. We have both promoters with us. Mr. Vikram Arun Kelkar, MD for Hexagon Nutrition, joins us, as does Dr. Nikhil Kelkar. He's the joint MD. A warm welcome to both gentlemen. Let's start with you, Dr. Nikhil. What are the issue proceeds going to be used for? You are raising about 133 crore rupees.
So thank you, first of all, thank you Shailendra for inviting us on this show. This issue proceeds are primarily the OFS. It's a purely OFS issue.
Okay, so the money goes back to the promoters.
That's right, that's right.
Okay, fair point. Let's get Vikram into the conversation. Mr. Kelkar, how do you see the business from now on? You are in the process of pure play nutrition company and you are into premix branded nutrition plays. How is the business doing so far and what are the growth prospects that you see?
Yes, certainly. Thank you very much for the invite, and it's a pleasure to be here, on this channel. Well, if you see, the growth trajectory, what we have demonstrated in the last 3 years has been that we are on a growth path, and our business verticals, especially our premixes, our branded nutrition products under the brand name of Pentasure, as well as our ESG segments, have got good prospects in terms of our growth. And currently we are focusing on improving our efficiencies, focusing more on the sales and marketing, and having the operating leverage, which will give us a good growth. Thank you.
Okay. Dr. Nikhil, this question comes to you. At the moment, the capacity utilization at Hexagon is very, very low. You have 4 plants. The capacity utilization is sub 35%. What is the reason for this kind of low capacity utilization? When do you think capex will rise?
Yes, that's a very good question, Shailendra. So in the last 4 years, we have actually invested 30 odd crores in the capex. So and this capacity we have built it with a very futuristic point of view. And if you ask me that, when will be the next capex cycle, which will be majorly, it will come. So we don't need actually the capex for the next 2 to 3 years. And as far as your question on the capacity utilization is concerned, so we are very pragmatic about the next business cycles, and we have built this capacity with the futuristic business in mind. At the same time, we have our orders. Sometimes they come in large sizes, so we have to be prepared from that point of view as well. And as you see, as Vikram said, also in the last 3 years, how the business has gained the momentum. So we expect that this capacity added is going to help us in this time to come.
No, Dr. Nikhil, at the moment you are operating at 35% capacity.
Yes.
You are raising funds, the money will go back as OFS to your family.
That's right.
So what does a new investor get? A company operating at 35% capacity?
No, as I said that right now, I agree with you that it is operating at a 35% capacity, but we have a lot of headroom, to grow, for our growth story, to support our growth story with this capacity. Because I will tell you a few growth drivers what we are riding on, which is the rising lifestyle burden, around India. Diabetes, for example, I will give you, there are 100 million diabetics in India and 200 million pre-diabetics in India. Then the government food fortification markets is also expanding.
Dr. Nikhil, if this were true, then your capacity would have been full up, no?
No, but we have actually, built it up. I mean, from the futuristic point of view. And
what was the peak capacity?
Yeah,
Vikram.
Let me try and add to this is that we look at our, capacity available with us as our strength, because we are looking, to expand the geographical reach for our products, as well as we see a lot of new developments with our existing customers for newer product forms. So we need this capacity for our growth. Let me put it that way.
Mr. Vikram, what was the peak capacity utilization that you had? You are a 33-year-old company. What was the peak capacity utilization in the past?
Yeah,
what I want to find out,
yeah.
I want to find out if at 29% capacity, you are putting in a top line of 325 crore rupees. What if capacity rises, utilization rises? Mr. Vikram.
Yeah, if utilization rises, then obviously we can see, better profitability for the company. And I think, and that will be very clear, because over the years also we have seen the steady growth in our profitability.
No, you're not getting my point, or you don't want to answer my point. What was your peak capacity utilization? At the moment you are 35%.
Yeah. So the thing is, there have been times when we have been working at as high as 75% of the capacity as well. But over the period of time, we have, added more capacity so that we are fully prepared, for the future outlook.
Okay, fair point. At the moment, when you see your cash flows for 9 months in the current financial year, it's a negative 4 crores. Whereas in FY25, this was positive 35 crores. So is this tied up in inventory?
Yes. So this is primarily due to our ESG business, which has got a slightly longer cash cycle as compared to our other businesses. So if you ask me, that is around 90 days cycle, 90 to 120 days for that, because we deal with the UN organizations in that, and the orders are very, very large. So and after the order is made, it takes around a month's time for it to get tested in India as well as abroad, and then the shipment is released. So this is the reason you have seen that particular negative cash flow in December ending.
Is this the maximum negativity, or is this likely to get worse?
No, not at all. In fact, it has improved in the next 3 months. I mean, year ended, because as the receivables come in that, so there is no issue with those receivables, because with the organizations what we are dealing with.
Okay. Dr. Nikhil, when you look at your operating margin, this is really good. FY23, it was 6.2%, and now for the 9 months ended FY26, you are at about 14%. Is this peak OPM or is it likely to improve further?
Definitely, it is likely to improve, and I'll also tell you how it has improved over the from FY23 to December 2020, say FY26, is that because there are two reasons for that. A is our branded nutrition products have better margins and which has increased in the product mix. As
Okay.
so that has improved the margins and that has contributed. Secondly, as the operating leverage kicks in, we have also got better purchasing power, so the raw material costs have come down for us. So these are primarily the reasons, and in the future it will improve definitely more.
Okay. Would you want to put in a number where OPM is likely to head to?
I think significantly higher than this.
Okay, fair point. So at the moment you have 4 facilities, one in Nasik, another in Chennai, and another one also in Tamil Nadu, plus one in Tashkent in Uzbekistan. What about the distribution channel? How do you distribute your products? There is B2B, B2C, and online, plus institutional sales.
Sure. So I'll take this question. I'll throw some light on the B2C online and then I'll pass it on to Vikram. So in the B2C, we have around 450 odd distributors with us, all throughout India, and we follow this pharma distribution model. So those are all the and which supply to majority of the pharmacy chains, standalone pharmacies, as well as hospital chains across India, and even standalone government and public hospitals as well. And as far as the e-commerce is concerned, we are available on the all e-commerce marketplaces, the majority of them. And what we have been doing over a period of time, Shailendra ji, is that to increase the fulfillment centers availability in these particular e-commerce markets. So we are getting closer and closer to the customers by increasing the number of fulfillment centers in these marketplaces, and also we are present on the e-pharmacy channels as well, the major e-pharmacy channels. I'll pass it on to Vikram now.
Yes. In our B2B2C business, which we are talking about the premix business, we work through a network of distributors in Southeast Asia as well as the Middle Eastern countries. And in other cases, we have direct contracts with our end customers. In case of institutional sales, it's mainly a tender-driven business where we work with the UN organizations as well as the Ministry of Health of various countries.
Okay. What is the percentage, Dr. Nikhil, this is for you. What is the percentage of e-commerce to total sales? How has it moved in the last, say, maybe 2-3 years?
E-commerce approximately in the December ended, you might take it as 20 odd percent.
Of total sales?
No, of the branded product sales.
So 20% of branded products is sold online.
Online.
And how much is branded products as a percentage of total sales?
It is around 30%.
Okay. So basically 20 of 30. 6% is e-commerce.
Absolutely.
Okay, fair point. Now let's look at, the global business, which you say is tender driven and dependent on ministries of health for various governments. I think exports is about more than half your revenue, 55%.
Yes,
and,
that's right.
And how, what about the raw material position? It's always good to have an export number because rupee is depreciating, but if you are also sourcing raw materials from overseas, that cancels it out.
Yeah, so imports account for about 30% of our total consumption, whereas 70% of the raw materials come within India. So we still have that advantage of the depreciating rupee.
Okay. Where all do you source your imported raw material from?
Yes. So we have a global sourcing strategy and the countries include that of China, Singapore, Korea, Europe, all over.
Okay, fine. Okay. Now these two products, Pentasure and Obsigo. Pentasure is, I think, for diabetes, right? To prevent or escalation of diabetes, right?
Yeah, so I'll throw some light on the Pentasure itself. Pentasure is our flagship brand and it's also an umbrella brand under which you have 12 different brand extensions. So one is the Pentasure as a Pentasure plain itself. Then the DM, what you rightly said, it is for diabetics. Then we have Pentasure renal, which goes for kidney diseases. Pentasure DLS goes for dialysis patients. Pentasure hepatic is for liver patients, so on and so forth. So we have built up the whole portfolio.
Okay.
And Obesigo is a weight management brand. It's a meal replacement formula.
We'll come to that a little later. Now, when you look at Pentasure, what is the sales for Pentasure as a percentage of total sales? You say it's your flagship brand.
Yeah. So I think majority is the Pentasure sales only.
Okay, fair point, which is 325 crores.
No, that is the top line.
Yes, of course.
Yeah.
So majority you say is from Pentasure.
No, of the branded sales, of the branded nutrition sales. So 325 was last year's FI25 number, what you said, of the total top line, out of which 92.2 crores was the branded nutrition sales.
Fair point. 30% of 325 is branded nutrition, which is 100% or close to that for Pentasure.
Almost, yeah.
Okay. Now, apart from branded and premix and ESG, what are the other businesses that you have within nutrition?
I think these three account for the complete portfolio of our company.
Okay, and you want to continue existence in only these three?
Absolutely. We would like to strengthen our position. If we have to say by priority, it has to be our branded business where we are having the maximum value addition. And at the same time, we have, good prospects for our premix business as well.
Okay. What are the local or international brands that you compete with in this branded formulation market?
Yeah. So primarily we compete with they are all MNC brands itself. They are Abbott, Nestle and Fresenius Kabi. These are the three companies, MNCs with whom we compete.
Okay. And how about pricing? Are you more expensive than them or are they more expensive than you?
Very interesting question. So yes, more or less we are at par in a lot of the products, but few of them our prices are slightly high because of our premium formulation. So we focus on premiumization as well a lot.
Okay. And market share wise, who has higher strength?
Market share wise, Abbott is the leader currently in this segment.
Okay. Fine. How much do they own? How much do you have?
Abbott might be approximately 1600 to 1800 crores, and we are about just we crossed the 100 crore mark in this particular financial year.
Okay. What's the overall size of this market?
So there are two aspects to this. One is the clinical nutrition market, which is about around 6,300 crores. And there is a wellness nutrition market, which is about 55,000 crores. So all put together, 60 to 65,000 crores is a total market size.
Okay, 65,000 crore rupees, of which you are 100 crores.
Yes.
I'm just trying to find out the size of the market which you are addressing.
Absolutely.
Okay, fair point. Because this is nutrition and more related to more related to medical health, you also have an R&D division.
Exactly. Yes.
Okay. So what's the percentage of sales that you spend on R&D?
So we are roughly 2% we spend on the R&D on an annualized basis.
Okay. And there was also an adulteration issue some time ago. That's sorted?
Yes, absolutely. I mean, failures are a part of the, business cycle. And but what is important is that we have taken the corrective actions and we have been able to implement, further strengthening of the quality systems as well as the processes to ensure, that the same doesn't repeat again.
Okay, fair point. And my final question to you, Dr. Nikhil, is the fact that top 10, I think Mr. Vikram would be better placed to answer this. top 10 clients are about 40% of your turnover, which is, the ministries of health, UN, so on and so forth. Is this a concentration risk? Are they likely to, grow further?
The thing is, when we talk about our customer base, most of the customers we are working for almost more than 15 years. So
Okay.
there is a very high, degree of stickiness in this business. So we expect that the business with our existing customers will continue to grow, as well as we intend to add more customers into our portfolio in the time to come.
Well, on that note, Dr. Kelkar and Mr. Kelkar, we'll call it time. Thank you for joining us, and here's wishing you all the best for Hexagon Nutrition. You'll be listed maybe the same time next week, and we wish you all the best.
Thank you, Shailendra, for inviting us on your show.
It was our pleasure. This, ladies and gentlemen, was the top management of Hexagon Nutrition Limited. The IPO is worth about 138 crore rupees, priced between 42 to 45 rupees. The entire issue size is OFS, and it should be listed somewhere mid next week. Thank you for joining us.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now. In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
Hello and welcome. You are watching Business Today. We are today being joined by the Managing Director of Hindalco, Mr. Satish Pai. So many thanks for speaking to Business Today. You've launched Eternia, an experience store, which is your value-added service, and in a way showing an expansion towards the B2C side of this whole value chain of the metals business of Hindalco. Talk to us a little bit about Eternia. What plans do you have, investments, and what kind of store expansion are we going to see in terms of Eternia stores?
So we launched Eternia in 2020, addressing what we call the fenestration market, which is doors, windows, facades. And I think that we have been riding that India growth story, that as urbanization has increased, as the real estate B&C sector has taken off, the demand for system windows that is going to give you water, wind, will not come inside the house, is what is the market we are addressing. That's a market today which is about 50,000 crores in size. Our ambition is to go from the current 400 to 1,000 crores in 2 years. And I think that this size of this market is growing at about 15 to 18% CAGR every year. Large part driven by the India growth story.
That was going to be my next question as to how big the opportunity is. You've mentioned the market share as well. But if you could also speak of value-added business in particular, Fresh Wraps was your first value-added B2C. Going forward, you do intend to enter the modular kitchens market also after Eternia. Speak a little bit about what the plan there is.
So I think as we have been communicating over the last 5 years now, Hindalco is a large upstream aluminium and copper player. And we have also consistently focused on value-added products, focusing on electrification, electric vehicles, consumer electronics, air conditioners, packaging, as you said, fresh wrap. And today we are now at a 600,000 tons of downstream capacity. So nearly 50% of the aluminium we produce, we are now converting into value-added products for Hindalco. So I think that is a strategy that we will continue to consistently grow. So we will continue to increase our upstream capacity and our downstream capacity.
We're being told maybe we will see more of your business investments and your supply into electronics manufacturing, EVs, etc. going forward. If you could break down for us what the picture will look like as far as your Hindalco's supply to allied businesses are concerned, what will that look like, a breakup of that into these other segments?
No, so I think that if you take 600,000 tons of value-added products for us, I would say that electrification remains the largest for us. Nearly 40% of it goes to whether it's conductor, cables, transformers, electric vehicles body parts. So electrification, which is a combination of electricity as well as automobiles moving to EVs, is probably our largest market. The second largest market for us is electronics. So you take the smartphones, you take laptops, you take white goods, that is going to be about 20 to 30%. And then packaging. So aluminium cans, fresh wrap, semi-rigid containers, packaging for juices, all that is also another 20-30%.
So you also spoke about some critical minerals and plans to also ramp up in terms of recycling copper, a Gujarat plant that you spoke of. Talk to us a little bit about what plans do you have to expand in terms of your capexes.
So we have always said that recycling both aluminium and copper is a big part of our strategy going forward. So we are going to commission India's first of its kind copper recycling plant in Pakhajan in probably September, October of this year. And this is going to recycle copper scrap as well as electronic waste. And what we will get from recycling is not just copper, but it will give us precious metals, it will give us the PGM group of metals, which are sort of critical minerals which is on the list for India to indigenize. So I think that one way to produce critical minerals is through the mining and processing. Another big route is through recycling. So recycling of electronics gives you large amount of critical minerals.
So at the current juncture, we have been seeing the second order effect of the West Asia crisis into multiple sectors. In terms of Hindalco, 25 to 29% I believe is your exports business. In terms of aluminium exports, what kind of impact have you seen? And also there are freight costs, there's also natural gas, electricity, coal, etc. So all of these are interlinked in a way. What is the order of impact that you have been seeing in these various segments?
So for us, as you said, it's a question of pluses and minuses from the West Asia war. On the plus side, because 2.5 million tons of capacity in the Middle East is taken out, price of aluminium has gone up. So my top line is benefiting. So that's a plus. On the cons, as you said, input costs have dramatically started to go up. The cost of furnace oil, the cost of CP coke, the cost of natural gas. So the whole cost curve is also going up. So I think that it's fair to say that the top line growth has been more than the costs going up. So our EBITDA margins have improved. But I think we remain very cautious because we are waiting to see how the impact on the market will be of the overall West Asia crisis that's still ongoing.
So just one final question. Going forward in the short to medium term, what is your outlook as far as the impact of West Asia crisis is concerned? I mean, revenue may have been bigger, but the net profit on a year-on-year basis was half in the last quarter as well. So do you expect that? Is there a silver lining going forward? Do you look at that? And also in terms of business mix, since you're growing, increasingly going towards the value added service and sort of completing the whole value chain from ore to fenestration sort of businesses, what is that business mix going to look like in terms of commercial and retail?
So first of all, last year, which was FY26, was a record year for Hindalco. So we made the highest ever EBITDA, highest ever net income. Novelis had a tough year because of the fire in Oswego, but the India business had its best ever year. Now, if I look at this year, the Indian economy is showing remarkable resilience. We are seeing our order book full. So it's fair to say that, as I said at the end of my first quarter, that we expect this year to be probably better than next year. So we can see the Indian economy firing still on all cylinders. Demand is strong, order book is strong. And I think that, your mix of what is going to be raw aluminium sale versus value added, I think that, today we are roughly 40 to 50% value added. And I think that is what is going to continue.
Thank you very much for speaking to us here on Business Today. Thank you. Thank you.
Life appears normal in Tehran. Yet the country's central bank says inflation has reached a level unseen since the Second World War. The shaky ceasefire with the United States and Israel is tipping Iran over slowly. Iran's central bank said the consumer price index, which measures a basket of goods and services, reached 77.2% in May compared with the year before. The rate is 8.5% higher than in April. Miles and oceans away, Wall Street stocks pulled back from record highs on 3rd June as flaring tensions in the Middle East and rising crude prices stoked inflation jitters and convinced investors to take some profits. All three major US stock indexes closed in negative territory.
Coming into this year, energy prices mid-60s per barrel for West Texas crude. Energy companies could make profits there, but not huge profits. It probably wasn't a significant part of anyone's portfolio. Now we see days like today where energy is the strongest, and it keeps moving as all of us try to predict what the resolution is in the Mideast and how long it goes on. What we know is the longer prices stay here, there will be increasing pressure on our economy. Higher energy prices take time to work through the economy, but little by little they raise the prices of everything else.
The escalating military conflict involving Iran, Israel, and the United States has plunged the Middle East into unprecedented turmoil, triggering severe economic shockwaves worldwide following Iran's total blockade of the Strait of Hormuz. The closure of the world's most critical maritime choke point has halted roughly 20% of global seaborne oil trade and a fifth of global liquefied natural gas shipments. In response to the cutoff, Brent crude prices rapidly surged past $120 per barrel, initiating what the International Energy Agency calls the largest energy supply disruption in history. Regionally, Gulf Cooperation Council nations face structural economic crisis. Stranded energy exports have collapsed local fiscal revenue, while a concurrent grocery supply emergency has upended local markets reliant on the strait for 80% of food imports. Globally, the blockade has ignited intense inflationary pressures, raising fears of systemic stagflation reminiscent of the 1970s. Industrial outputs across Asia and Europe are stalling due to severe shortages of Middle East fertilizers, aluminium, and chemical feedstocks. as airlines reroute flights across the combat zone and maritime insurance premiums spike. Experts warn that a prolonged impasse will inevitably drag the global economy into recession. This makes peace the priority, yet it stands on a shaky ground. For weeks now, war and peace in the region has been dancing a one step forward and three steps backward tango, flipping the world economic rhythm completely along with it.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
A day after the deadly blaze that took more than 20 lives, Delhi, a city in grief, is left wondering why it happened and was it avoidable. Sources in Delhi police say the fire was caused by an electric short circuit. The investigators have ruled out LPG cylinder explosion. These initial findings shift the focus firmly onto safety compliance and preventive measures. The police are interrogating the hotel owner, Lavkesh Bajaj, who was arrested late Wednesday. He has been remanded in 4 days police custody. India Today has accessed details of his statement to the police. Sources say Bajaj admitted he was passing by the hotel when the fire broke out but did not stop. He allegedly told investigators that he fled out of fear, avoided going home, and spent the night wandering the streets. The accused also allegedly confessed that the building was in a highly dilapidated condition. Even more damning, he admitted the hotel was operating 25 rooms despite permission for only 6. The police have booked him under various charges including culpable homicide and negligence. The hotel allegedly had interiors made with combustible material. As the probe gathers pace, a larger question is being asked. Could this tragedy have been prevented? In January this year, a public interest litigation on safety norms in hotels and clubs came up before the Delhi High Court. During the hearing, the court sought an urgent fire safety action plan from the Delhi government and asked authorities to take preventive steps against hotel fires. But no comprehensive action plan appears to have been implemented.
इस दुखद घटना पर पूरा प्रशासन चिंतित है, व्यथित है। हमने आज निर्णय किया है कि जांच करके ऐसी सब बिल्डिंग्स को जिनके पास उपयुक्त एनओसीज नहीं है उसको सील किया जाएगा, उनकी अनुमति जो वायलेशन कर रहे हैं उनकी अनुमति को रद्द किया जाएगा।
The spotlight is also on a major licensing change introduced in June 2025. The Lieutenant Governor's administration removed the requirement of obtaining police licenses for 7 categories of businesses, including hotels, restaurants and guest houses. While the move was aimed at improving ease of doing business, critics are now questioning whether regulatory relaxation came at the cost of public safety. Meanwhile, Delhi government has swung into action after the tragedy. A committee headed by the district magistrate will begin sealing operations in Malviya Nagar. Authorities say buildings found violating regulations and safety norms will face action. Delhi Chief Minister Rekha Gupta visited the injured in hospital and announced an ex gratia of 10 lakh rupees for families of those killed. For grieving families, these revelations offer little consolation. But as the probe unfolds, focus is now on accountability. Did ignored warnings, regulatory gaps, and alleged violations lead to a tragedy that claimed several precious lives? Bureau Report, India Today.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
on India Today.
In a move that sends strong signals to global investors at a time of heightened geopolitical uncertainty and persistent foreign fund outflows, the Union Cabinet has reportedly approved a proposal to significantly ease the tax burden on foreign portfolio investors investing in Indian government securities. There was no mention of any such decision during the cabinet briefing on Wednesday, but according to multiple government sources, the cabinet has approved an ordinance to amend the Income Tax Act to abolish the long-term capital gains tax on foreign investments in government securities, commonly known as GSECs. FIIs currently pay an LTCG tax of 12.5% for bonds held for more than 1 year. Reports also suggest that the government may consider removing this additional 20% withholding tax levied on interest income earned from these securities.
Any of such incremental positive steps that can lead to some comfort for FIIs into India, be it in the bond markets, be it in the equity markets, I think that will only help to calm the nerves for the currency market, and should be taken as a positive step going forward.
The timing is hardly accidental. Policymakers have been grappling with the sharp fall in the rupee even as the rising oil prices, blockade of energy supply routes, and sustained foreign selling in equities pose big challenges. While foreign investors have consistently been net sellers in the market, the cumulative sell-off by FIIs and FPIs has already crossed 3 lakh crore rupees in 2026, despite the year only being halfway through. The trend has intensified concerns over capital flows and market sentiment. Domestic investors, meanwhile, remain big buyers.
The total number that I have got to know starting January 2026 till date, what the FIs have sold is somewhere close to about 2,60,000 crores, which is way beyond than what they did in the last entire year, that is 2025. And despite of that, Sakshi, I think we have been able to stay afloat, and that's only because of the relentless buying from the domestic institutions.
Meanwhile, FPIs remain marginal players in the GSEC market, with RBI data showing that the total participation has shrunk from 3.12% in the first quarter of 2025 to 2.96% in the October to December quarter. While market players believe that while the move by the Modi government may not immediately impact markets, it will improve the sentiment, making Indian government securities more attractive to overseas investors while supporting broader economic stability. But why has the government focused specifically on GSECs? Because every dollar invested in government bonds helps strengthen India's borrowing program and bring stable foreign capital into the economy. Unlike equity flows, bond investments are typically less volatile and provide direct support to the rupee. The LTCG swap also means foreign investors will have to remain invested for at least a year. The move also comes as India looks to attract larger global debt flows following its inclusion in major international bond indices. Market experts believe that while tax changes may not immediately reverse foreign outflows, they improve India's attractiveness at the margin and reinforce the government's commitment to maintaining a stable investment climate. Bureau Report, Business Today Television.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
Shri Ravi Shankar is with us, with the Indian diaspora, also in Russia. Huge opportunities, sir. Message of peace going around with the world and the war going on, sir. What's your ultimate motive to come here?
Message of peace, and then Russia and India are very close from centuries. Actually, we should have more tourism. India and Russia should come together more culturally, tourism, language-wise, all that. There is a lot of scope. And technology also, see here so much development in technology. And Indians are very good in the technology, field of technology. So I see a lot of scope and cooperation between the two countries.
Any message to the Indian diaspora here, to your followers who are trying to settle in Russia or make business in Russia? What's your message to Russia from the Indian diaspora side?
Yeah, nurture your roots and spread your wings.
All right, just last one more question. I'll then let you. I know you're a busy schedule today, sir. With a whole lot of developments going around, sir, what are you planning to set up your workshops here and eventually expand your network?
We do have here all over Russia, in all the 11 time zones. We have centers. We have more than 500 centers all across Russia.
All right, thank you, Shri Ravi Shankar. Well, that was Shri Ravi Shankar speaking to India Today on what all developments have been happening in the Russian space, and he has more centers that he's planning to set up as well.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Well, Business Today continues its coverage at the St. Petersburg International Economic Forum, and I'm today joined by E.V. Pankevich, the chairman of the Committee for Tourism Development of St. Petersburg. Thank you, Mr. Pankevich, for speaking to us. First of all, Indians are one of the biggest tourists that's coming to Russia. How many tourist influx are you seeing this year, and probably
we see
in the next 2-3 years? How many tourists are you planning to attract?
We see a lot of tourists every year from India. We like India tourists. We have all the facilities, we have all the products, so it's not only MICE tourism, but it's also medical tourism, it's cultural tourism. You can bring your events. We know that India is a wedding destination, so you can plan your wedding here in St. Petersburg, you can, and we can promote. And we work a lot with Indian DMC tour operators, and we promote St. Petersburg as also a wedding MICE destination, for example. And of course, we have a lot of cultural roots. We have a lot of Indian cuisine, and by the way, people of St. Petersburg and of Russia, they like the Indian cuisine.
Absolutely, and Are there any Indian-specific measures planned to attract more tourists from the government of Russia?
Yes, of course,
what all are you doing so that more Indian tourists are?
We participate in all the exhibitions abroad in India also. We plan next year to bring a roadshow to your country and to show St. Petersburg. And of course, we do the info tours when bloggers like you and journalists from India come, and we promote St. Petersburg and all the way.
All right. Direct connectivity remains a problem. You'll have to eventually do a little stopover. So, are there any discussion with the airlines to have direct connectivity from India?
Yes, we make these discussions, and we hope that we will have a direct flight because it will ease everything. But talking to that, we have a good transportation system with Moscow, so it's no problem. You come to Moscow and you have two cities. You watch the capital of Russia, and then you come by train or by airplane to St. Petersburg. So it's very easy.
How many infrastructure?
We believe in enjoying tours. Moscow, St. Petersburg, or Moscow, Kazan, or Kazan, St. Petersburg. So we have all the packages and we have all the options, and all the cities of Russia, not only St. Petersburg, all beautiful.
All right. What about the infrastructure? How many hotels?
But you need to come to St. Petersburg first and then travel the whole country.
Sure. What is the infrastructure plan? How many hotels are you planning to open up, and what are the numbers involved? How much investments are you putting in to ramp up the infrastructure?
Every year we open 6 to 10 hotels. We build systematically the infrastructure because it's the future of hospitality. We have all the hotels chains from 3 to 5 and extra stars, and we have all these products from minimal product to the maximum.
All right. Where are you seeing more scope?
You can choose from the variety of products, and you can choose what you like.
Sure.
St. Petersburg can offer you a large variety of tours and hospitality products.
Sure. Business tourism, medical tourism, cultural tourism. Which all segments do you feel are getting more importance, and what are you trying to promote?
I guess because we are the cultural capital, the cultural city of Russia. So the cultural. The cultural issue is important. We have a lot of tours around the city, a lot of museums, theater programs, events, and of course we see the potential in MICE tourism, as here we participate in the International Economic Forum, and in medical tourism. Medical tours, this one which we can and we will promote to the Indians.
Lastly, any impact on the sanctions? Do you see the way India travels abroad or arrivals into Russia? Do you see any impact on the sanctions?
We see that there's a huge opportunity to promote our tourism, to promote our new routes, and to build infrastructure around the country, and to show you all the cities of Russia.
What role can St. Petersburg play to improve the tourism arrival into the whole of Russia, and what all opportunities are you seeing for employment and business development as well?
You can see in St. Petersburg the dynamic growth of infrastructure, and infrastructure is our goal and priority in building tourism. You can see in St. Petersburg all the cultural heritage and how it transforms, for example, to MICE locations. And you can see in St. Petersburg, and it's the high priority, the good and comfortable service.
And do you see BRICS as the next future to the West?
Yes, we see and we participate. And also we have every year in BRICS and the BRICS Summit, we have a strong discussion about the tourism issues, and we participate in every conference or in every MICE event because we see it as an option and as an opportunity to promote St. Petersburg as a tourism destination.
And what's your message to an Indian traveler looking at this interview? What would you like to highlight?
Come to St. Petersburg, you will feel yourself like at home.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Hello and welcome. You are watching Business Today. We are today being joined by the Managing Director of Hindalco, Mr. Satish Pai. So many thanks for speaking to Business Today. You've launched Eternia, an experience store, which is your value-added service, and in a way showing an expansion towards the B2C side of this whole value chain of the metals business of Hindalco. Talk to us a little bit about Eternia. What plans do you have, investments, and what kind of store expansion are we going to see in terms of Eternia stores?
So we launched Eternia in 2020, addressing what we call the fenestration market, which is doors, windows, facades. And I think that we have been riding that India growth story, that as urbanization has increased, as the real estate B&C sector has taken off, the demand for system windows that is going to give you water, wind, will not come inside the house, is what is the market we are addressing. That's a market today which is about 50,000 crores in size. Our ambition is to go from the current 400 to 1,000 crores in 2 years. And I think that this size of this market is growing at about 15 to 18% CAGR every year. Large part driven by the India growth story.
That was going to be my next question as to how big the opportunity is. You've mentioned the market share as well. But if you could also speak of value-added business in particular, Fresh Wraps was your first value-added B2C. Going forward, you do intend to enter the modular kitchens market also after Eternia. Speak a little bit about what the plan there is.
So I think as we have been communicating over the last 5 years now, Hindalco is a large upstream aluminium and copper player. And we have also consistently focused on value-added products, focusing on electrification, electric vehicles, consumer electronics, air conditioners, packaging, as you said, Fresh Wrap. And today we are now at a 600,000 tons of downstream capacity. So nearly 50% of the aluminium we produce, we are now converting into value-added products for Hindalco. So I think that is a strategy that we will continue to consistently grow. So we will continue to increase our upstream capacity and our downstream capacity.
We're being told maybe we will see more of your business investments and your supply into electronics manufacturing, EVs, etc. going forward. If you could break down for us what the picture will look like as far as your Hindalco's supply to allied businesses are concerned, what will that look like, a breakup of that into these other segments?
No, so I think that if you take 600,000 tons of value-added products for us, I would say that electrification remains the largest for us. Nearly 40% of it goes to whether it's conductor, cables, transformers, electric vehicles body parts. So electrification, which is a combination of electricity as well as automobiles moving to EVs, is probably our largest market. The second largest market for us is electronics. So you take the smartphones, you take laptops, you take white goods, that is going to be about 20 to 30%. And then packaging. So aluminium cans, Fresh Wrap, semi-rigid containers, packaging for juices, all that is also another 20-30%.
So you also spoke about some critical minerals and plans to also ramp up in terms of recycling copper, a Gujarat plant that you spoke of. Talk to us a little bit about what plans do you have to expand in terms of your capexes.
So we have always said that recycling both aluminium and copper is a big part of our strategy going forward. So we are going to commission India's first of its kind copper recycling plant in Pakhajan in probably September, October of this year. And this is going to recycle copper scrap as well as electronic waste. And what we will get from recycling is not just copper, but it will give us precious metals, it will give us the PGM group of metals, which are sort of critical minerals which is on the list for India to indigenize. So I think that one way to produce critical minerals is through the mining and processing. Another big route is through recycling. So recycling of electronics gives you large amount of critical minerals.
So at the current juncture, we have been seeing the second order effect of the West Asia crisis into multiple sectors. In terms of Hindalco, 25 to 29% I believe is your exports business. In terms of aluminium exports, what kind of impact have you seen? And also there are freight costs, there's also natural gas, electricity, coal, etc. So all of these are interlinked in a way. What is the order of impact that you have been seeing in these various segments?
So for us, as you said, it's a question of pluses and minuses from the West Asia war. On the plus side, because 2.5 million tons of capacity in the Middle East is taken out, price of aluminium has gone up. So my top line is benefiting. So that's a plus. On the cons, as you said, input costs have dramatically started to go up. The cost of furnace oil, the cost of CP coke, the cost of natural gas. So the whole cost curve is also going up. So I think that it's fair to say that the top line growth has been more than the costs going up. So our EBITDA margins have improved. But I think we remain very cautious because we are waiting to see how the impact on the market will be of the overall West Asia crisis that's still ongoing.
So just one final question. Going forward in the short to medium term, what is your outlook as far as the impact of West Asia crisis is concerned? I mean, revenue may have been bigger, but the net profit on a year-on-year basis was half in the last quarter as well. So do you expect that? Is there a silver lining going forward? Do you look at that? And also, in terms of business mix, since you're growing, increasingly going towards the value-added service and sort of completing the whole value chain from ore to, fenestration sort of businesses, what is that business mix going to look like in terms of commercial and retail?
So first of all, last year, which was FY26, was a record year for Hindalco. So we made the highest ever EBITDA, highest ever net income. Novelis had a tough year because of the fire in Oswego, but the India business had its best ever year. Now, if I look at this year, the Indian economy is showing remarkable resilience. We are seeing our order book full. So it's fair to say that, as I said at the end of my first quarter, that we expect this year to be probably better than next year. So we can see the Indian economy firing still on all cylinders. Demand is strong, order book is strong. And I think that, your mix of what is going to be raw aluminium sale versus value added, I think that, today we are roughly 40 to 50% value added. And I think that is what is going to continue.
Thank you very much for speaking to us here on Business Today. Thank you. Thank you.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
on India Today.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
In today's India, sustainability is no longer just a climate conversation. It is economic resilience, national strength, and the future of a self-reliant India.
देश के प्रति अपने कर्तव्यों को निभाना वो भी देशभक्ति होती है.
As the nation moves towards Atmanirbhar Bharat, India's leading visionaries are transforming sustainability into a powerful national mission, honoring leadership, inspiring innovation, powering India's sustainable future. Business Today presents India's Most Sustainable Companies 2026 Awards. Book your seat now.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good afternoon, dear viewers. You're watching the Business Today show with me, Sakshi Batra. This is where I get you all the stock market closing action on Dalal Street over the last 20 minutes in trade. Let's look at what's hot in the corporate and the financial world first. Government takes a big step to attract foreign inflows. Capital gains on government bonds for FIIs exempt from tax. RBI also announces measures. NRI equity limits have been raised. Rupee has jumped 70 paisa in trade as well. The RBI governor has said rupee may not be overvalued, so no proposal for gold monetization scheme. The RBI keeps the repo rate unchanged at 5.25% and retains its neutral stance. The central bank has cut its FY27 GDP growth forecast to 6.6% from 6.9% earlier, while raising the inflation forecast to 5.1% from 4.6% earlier, citing global uncertainties and energy risks. Big update on currency notes. The RBI is considering a proposal to introduce polymer currency notes currently at preliminary stage. No final decision has been taken yet, says the Governor, Sanjay Malhotra, at a post-policy presser. Post RBI's decision, the markets have turned volatile. The Sensex slips about 100 points in trade to trade near 74,300 mark. The Nifty is also down by about 60 points to now hover around 23,350. Metals and IT stocks drag, while media stocks see buying. After launching India's first flex fuel wagon-R, Maruti Suzuki now expands clean energy plans. The company is going to be setting up 10 tons per day biogas plant at Kharkhoda Commission in FY27 and also expand Manesar capacity to 0.7 tons per day. A 150 crore rupees investment has been planned. Let's quickly look at how the markets are trading in the session right now, 23,362. We are also joined by Gaurang Shah, Senior Vice President, Geojit Investments, to trade a fresh take on the markets. Gaurang, we've seen actually all the statements come through positive today from the RBI, from the government as well, with regards to attracting foreign capital. The rupee has appreciated, but the markets are still volatile. What do you think the markets are missing here?
Thank you so much, Sakshi, for having me on your show. Good afternoon to all your viewers, and to you, a small disclosure. All recommendations that I'll be sharing with you this afternoon on your show, Sakshi, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might hold their investment tips. Not surprising, Sakshi, what came out from the credit policy. I think by and large, the opinion on the street was a status quo with a neutral stance, accommodative stance. But the commentary is something that was indeed listened to very carefully and understood. Range-bound market, despite the fact that the policy did not have any negatives, but that's purely because of the fact that the situation in the Middle East, rising crude oil prices, and thankfully rupee is holding strength against the dollar today. So I guess being Friday, last day of the week, and of course, as stated by the President of the United States, by this weekend probably he's expecting a deal to go through with Iran. Let's hope so that happens, and by the time we get back to trade on Monday morning, we have positivities to look forward to. So this is a very tricky market, Sakshi. Throughout the day, this week, last week, even before, we've seen moves on both the sides. We start up with a gap up, we lose the ground, we recover, or we start up with gap down, we recover, and then we again lose ground. So short to medium term, this choppiness, volatility will continue. But I think it's a fantastic market for long-term investors to nibble into some stock-specific ideas. And thankfully, India VIX is also behaving itself today.
Absolutely. Well, the RBI has definitely hit the pause button on interest rates, but the warning bells are still loud. The Governor, Sanjay Malhotra, has also flagged record FPI outflows, a weakening rupee, slower growth ahead. Here's what the central bank is truly worried about, despite taking the steps that they've taken today.
May 29-26, India's forex reserves stood at a very healthy $682.3 billion US. These are adequate in terms of the standard metrics of reserve adequacy. We do not target any specific level or band. Instead, we allow the exchange rate to be determined by market forces. Our experience, however, suggests that it may sometimes witness movements, often caused by speculative pressures, especially in the wake of heightened uncertainty, some of which we witnessed recently, which are not in sync with the fundamentals and are disruptive of economic activity. While our objective is not to resist market-driven adjustments, we shall curb excessive volatility and prevent disorderly market movements. Real GDP growth for this year is now projected at 6.6%. We had earlier projected 6.9%, of course, with huge uncertainty and downside risks. With Q1 now projected at 6.6%, Q2 at 6.3%, Q3 at 6.5%, and Q4 at 6.8%. Prolonged global supply chain disruptions, volatility in global financial markets, and weather-related shocks continue to pose downside risks to the domestic growth outlook.
पॉलीमर नोट की जहां तक बात है वो प्रस्ताव विचाराधीन है अभी जैसे ही कोई इसके ऊपर में निर्णय लिया जाएगा हम आपको बताएंगे
Let's actually now look deeper into finding out the kind of tax release that the government as well as the RBI has extended to foreign investors. What will that really lead to? What kind of inflows do we expect after the kind of steps that have been taken today? Let's also welcome another guest joining on our panel today. We have Ved Jain, tax expert, joining in. Warm welcome to you. Mr. Jain, thank you so much for taking the time out. Your first reaction on the kind of understanding you make of the entire measures that we've seen with the taxes gone on foreign investments into India in terms of GSECs and bonds, and the steps that the RBI has also taken?
I believe that this was the most important aspect and the more important requirement of the day. Looking to the way the Indian economy is performing, which is good, as the RBI governor was also saying, and looking to the fact that there has been challenges regarding the inflow of the FII investments in India, FPI investment in India, and India's bond security being now part of the JP Morgan emerging market bond. So we have to be competitive, and the government of India, considering the urgency, has come out with an ordinance to immediately declare that capital gain and the interest arising on this GSEC bond, etc., will not be liable for tax in India. Now, I believe this is a very, very important aspect. And as you may be aware that in the last 2 or 3-4 months, there have been a huge outflow of the investment made by FPI and FII in India. And there have been challenges in the rupee dollar rate also. And now, at the same time, the Indian bonds have now become part of the market and the JP Morgan bond. So we need to be at par with other countries because many countries do not charge any tax on these securities and bonds. So Indian government to come out with the ordinance. This is a very, very, I think, important and good step which the government of India has taken. Right. And I'm quite hopeful. Now, this will set off the challenge the Indian economy has been facing because of this Iran-US war, which has been going on, and the crude oil prices skyrocketing. Absolutely. So that challenge will now get addressed by and large.
Mr. Jain, can you help us understand the kind of volume of investment now you expect to increase after these steps within bonds in the Indian markets because of these steps?
I will not say investment. I say that there will be interest in GSEC, a G bond, a government bond, which is there. Now, see, it all depends upon the return you are making. See, people are confident about the Indian economy. So there is first challenge about the security of the money which you are putting in. So I believe there is no challenge to that aspect. By and large, institutions do have confidence in Indians' economy and Indian market for that purpose. The only issue was how much return I get it. Now, Indian securities offer 7% interest and 20% tax is charged, so it comes down to 5.6%. In order to address, and if any other country is giving 6% tax-free, obviously that 6% will be preferred. Now, India having removed this interest rate of 20%, the return will be 7%, which will make it more attractive. Similarly, when you transfer these securities, you are liable for 12.5% capital gain. Now, that will not be liable because there can be certain bond where you value get appreciated. Frankly speaking, by this announcement itself, the value of the Indian investment which people have made, FI have made in the government bond would have gone up because earlier the return was 5.6%, now is 7%. If I am holding, say, $1 billion of bond, obviously the value will go by at least 15% over and above. So that will also be now exempt. Now, Indian bond will become far more competitive as compared to other parts of the world and I'm reasonably confident this will bring a very good lot of money. I may not be able to give the exact numbers because then you have to look into the statistics, what is the rate of return coming in other country with whom India is competing. But I'm reasonably sure this will at least set off the negative balance of payment which was being created because of the high prices which India is paying for the crude oil import. That I think that will set up.
Okay, I'll ask the next question to you as well as to Gaurang as well. Mr. Jain, why does it make sense from a policy perspective to encourage more stable foreign investment coming into debt versus maybe equities at this point in time? That is a question most people, investors, are asking.
See, equity is always based on certain other parameters. When you make an investment in Indian equity, you are by and large looking to the capital gain and appreciation in the value. And then when you are making investment in debt, you are looking to the return which you are likely to get and which is consistent. And a large number of pension funds and other funds, they want an assured return because in equity there is no assured return. You may buy at 100 rupees, you may end up at 90 rupees, you may end up at 110 rupees. And all those managers who manages these funds, they are having a underlying assurance from the investor because these funds have got the funds of the investor. They give an assurance that this will be the return which they will be getting it off. Now, in case you have made an investment in equity, probably then uncertainty prevails. So there is a large part of the fund which are available for debt market only with the assured return. And this will definitely, that's why I say, even if you would have removed the tax on equity, this would also have brought some fund, but not certain how much. But now this will be a flow of water where the level has gone down. Now automatically the water has to flow because the rate of return has all of a sudden gone up in India. So that is what I think the government has done. And you must notice it is an ordinance issued in the month of June. Reason being the government is serious about this. They want more foreign exchange. They want to assure balance of payment remain and the US dollar versus rupee rate gets stabilized. All these factors have been taken into consideration.
Right. Gaurang, what's your view after bonds? Do you think equity should be next on the radar?
Sakshi, I hope so. But I would like to add one more thing over here. Of course, we may argue, Sakshi, that these steps should have been taken last year because the outflows have started from October 1st, 2024, right? And it lasted till December 31st, 2024. Last entire year, 2025, we saw record outflows. And this year has actually, we are just in the month of June, and FIIs equity side, sell side figure has already surpassed last year's sell side number, Sakshi. I think it is somewhere close to about 2,60,000 plus, close to about 3 lakh crores. Correct me if I'm wrong. So these steps should, I mean, we can argue this, why didn't it happen last year or maybe before that? But the fact is that at least the government has realized it, though a little bit late, but better late than never. I would put it that way. In the debt side of the world, things looks to be stabilizing with this ordinance that has gone through. For equity, then the question will be, Sakshi, you and me will ask the government, why FIs are treated separately and why are we not in the same line, right? So that will again raise to a little bit of more complexity. There is rumors in the market that for equity also, the government is planning to do something, but these are all source-based information. I think unless and until we hear it from the government, we need to wait and watch.
Mr. Jain, last word from you before I let you go, sir. Beyond these steps, do you think there is anything still left to be asked, or is this sufficient to, one, stabilize the rupee, which has been a major concern, and two, to bring back the foreign capital?
This question to me, Sakshi?
Yes, Mr. Jain, this is to you.
You see, let me first clarify what Mr. Shah has said. See, capital market or equity market move more on the expectation from the economy. The outflow of the FII, FPI, the numbers were being shown on the screen, was mainly because the people expected more returns in other part of the world, probably South Korea, where the funds have moved. Because then you look at how the year equity is going to perform. But for debt, it is the rate of return which is important part for you. And to answer your last question part, yes, they will stabilize the India rupee rate definitely.
Thanks a lot, Mr. Jain, for being with us on the show. We will continue this conversation later, but we have a breaking news coming in, and this is with regards to the rupee. The rupee has been the first one to react on all these steps that we've seen, and after a long haul, we've seen the rupee also slip below the 95 per dollar mark. It has risen more than 88 paisa in a single session today, now trading at 94.91 per dollar. That's right after the steps that have been taken by both the government as well as the RBI as well. Gaurang, how would you view this rupee? Probably 96.96 was the line where we drew, and after that the steps have finally started to take effect, because before that every time the government or the RBI was intervening, the question was, why is the rupee not stabilizing? Finally a major step that is really showing us on the screen that the rupee is finally strengthening.
So there are two things, actually. One is the superficial support, which the RBI tried to do. That to strengthen the rupee, it did strengthen the rupee, but for momentarily, Sakshi. And in some cases, that same day, the rupee again crashed against the dollar. And the other part is you do something fundamental, which the government is doing right now. So the sense is that, yeah, I mean, compared to where it closed yesterday and where it is trading today, and more importantly, Sakshi, there were a lot of opinions that were built up that rupee is going towards 100 against the dollar.
Yes.
So I hope all those minds have now a lot of thinking to do about. And let me say this, I think the government will be more proactive, Sakshi, in taking or changing policies or taking new policy decisions to support in each and every way, not only the economy, but the Indian corporates, and as well as maintain a lower inflation level, and along with that, maintain a decent higher level of GDP growth rate. We are in difficult times, and I think in these kind of difficult times, like earlier, government has always stepped up to the expectation.
All right, there's another breaking news coming in, viewers, and this is with regards to the statement that Nilkant Mishra has now made. He's talked about how currency market was in a complete state of panic before the RBI has intervened with $75 billion versus $24 billion of deficit payments and heavy dollar hedging, which has added on to the pressure onto the rupee as well. He's also talked about how the bond index entry could now attract about $45 to $50 billion of flows with these steps that have been taken in. So let's quickly listen into what Nilkant Mishra had to say on this.
I think more than the investment itself, see, what we have to understand is that the currency market was in a state of panic. And I don't lightly use the word. We have seen that the demand for dollars was way higher than what our balance of payment deficit was. So between October 25 to March 26, the balance of payment deficit on an accrual basis was only about $24 billion. But the RBI intervention was $75 billion. This was happening because the currency, the importers were starting to hedge a lot. In the near term, there was expectation that the rupee would weaken, and that was allowing more people to push money outside India. The only way to stem this panic is to show visibility that there are a lot of dollars coming. And frankly, this will allow or accelerate the process of India getting included in the bond indices, global bond indices. In 2019, the two Bloomberg Ag and the FTSE index, the assets benchmarked to them were $4.5 trillion. So at even a 1% inclusion rate, this means $45–50 billion that can come in. It will not happen immediately, but so long as that visibility builds up, I think it's a very big positive.
And to update all our viewers, economist Nilkant Mishra has also been appointed as India's next executive director at the World Bank as well, where he will be representing a South Asian constituency comprising of India, Bangladesh, Bhutan, as well as Sri Lanka there. Let's look at the markets closing now, viewers. This is a 46-point dip that you're seeing towards the end of the session today at 23,370 onto the Nifty. So after a lot of choppiness, we have although pulled up from the day's low point, but still ended lower by about 45, 46 points. The Nifty Bank, however, managed to close in the green, about 0.4% up into the session today. Let's also look at the other sectors that have managed to pull higher. You had the media stocks, you had the PSU banks, the real estate space that all moved up. But metals and IT both dragged in the session, over 1% loss for IT, about 1.5% cool off for the Nifty metals index there. But let's look at the top movers on the Nifty towards the end of the session. You had Adani Enterprises as the top mover. HUL also moved up. Adani Ports, Bajaj Finance, Axis Bank, a slew of Adani Group stocks, banking names that moved up in the session, the Nifty Bank or the financial services stocks also that moved up. On the declining side, again, the metal counters, Hindalco, Tata Steel, Coal India, they declined. Wipro declined from the IT space. TCS was also down. And Trent also, at least 3 of the Tata Group companies were among the top 5 laggards as far as the big losers on the Nifty is concerned. But let's also talk about the, what is the outlook? Gaurang is with us. Gaurang, how do you see the markets panning out from here? Do you think the kind of triggers that we've been watching out for are slowly and gradually now getting penciled in? We're also awaiting that probably sooner or later we're going to be seeing that final day when US-India trade deal will be signed. There are so many signs that are coming in there. So all those overhangs are finally settling in. So how do you expect the markets to pan out in the second half of the calendar year now?
So actually, when it comes to US, let me say this very honestly. It is not done unless it is done and unless we see the documents. So yes, there has been a lot of work that has been put in by both the governments, that is Government of India and the representation done by the Trump administration to work out a deal. And I'm glad that we took our own time to go ahead or not to go ahead with this deal. And that should be on terms and conditions which are beneficial for both India as well as US. So let's wait and see how it pans out. As far as the geopolitical situation, once again, I think we'll be eagerly awaiting the news flow for this evening, tomorrow and day after, when we get back to trade with respect to the peace deal, according to the President of the United States. Broad range for the market, Sakshi, 23,200, 23,250 on the lower side, 23,400 to 23,600 on the higher side. Stock-specific moves would be seen depending upon the news flows.
Absolutely. So that's where we've ended the session today, viewers, at. But let's also get you Hindalco's big news as well. Hindalco is betting big beyond the metals, from a 50,000 crore rupee fenestration opportunity to modular kitchens. In an exclusive chat with Aishwarya Patil, MD Satish Pai has also explained how higher aluminium prices, a strong fiscal year 2027 order book and critical minerals are actually shaping up the next phase of growth for the company.
I think that we have been riding that India growth story, that as urbanization has increased, as the real estate B&C sector has taken off, the demand for system windows that is going to give you water, wind, will not come inside the house, is what is the market we are addressing. That's a market today which is about 50,000 crores in size. Our ambition is to go from the current 400 to 1,000 crores in 2 years. And I think that this size of this market is growing at about 15 to 18% CAGR every year. Large part driven by the India growth story.
You also spoke about some critical minerals and plans to also ramp up in terms of recycling copper, a Gujarat plant that you spoke of. Talk to us a little bit about what plans do you have to expand in terms of your capexes.
So we have always said that recycling both aluminium and copper is a big part of our strategy going forward. So we are going to commission India's first of its kind copper recycling plant in Pakhajan in probably September, October of this year. And this is going to recycle copper scrap as well as electronic waste. And what we will get from recycling is not just copper, but it will give us precious metals, it will give us the PGM group of metals, which are sort of critical minerals which is on the list for India to indigenize. So I think that one way to produce critical minerals is through the mining and processing. Another big route is through recycling. So recycling of electronics gives you large amount of critical minerals.
Going forward in the short to medium term, what is your outlook as far as the impact of West Asia crisis is concerned? I mean, revenue may have been bigger, but the net profit on a year-on-year basis was half in the last quarter as well. So do you expect that? Is there a silver lining going forward? Do you look at that? And also, in terms of business mix, since you're growing, increasingly going towards the value-added service and sort of completing the whole value chain from ore to, fenestration sort of businesses, what is that business mix going to look like in terms of commercial and retail?
So first of all, last year, which was FY26, was a record year for Hindalco. So we made the highest ever EBITDA, highest ever net income. Novelis had a tough year because of the fire in Oswego, but the India business had its best ever year. Now, if I look at...
All right, we also have a query coming in from one of our viewers. This is Roshan from Pune asking you, Gaurang, is it the right time to invest in cement or metal stocks? What would you advise him at this point? Okay, I think we've lost out on Gaurang right now, but viewers, 23,366, that's where we are at as far as the Nifty is concerned. We'll end the show right here. Thank you so much for joining in on the Business Today show. Hope you have a fantastic weekend ahead. Remember, Business Today is going to be showing you all through the session tomorrow our sustainability flagship event of the calendar year. So join us on our social media platforms and our YouTube channel for that. But stay tuned on to India Today. The coverage continues after this break.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition where we are going to be talking everything about retirement planning. In case you are also thinking about your sunset years and what is the best